So the first topic in this subject is fundamentals of audit. So first we must be good at certain fundamental terminology. So this topic is fundamentals. You don't find anywhere in the institute book. Now tell me, what is the definition of audit? What is the definition of audit? We have seen here, like there is a definition given here. An audit is an independent examination of financial information of any entity, whether or not profit oriented, irrespective of its size or legal form, when such an examination is conducted with a view to express an opinion thereon. So this is a simple definition given. Now, so an audit is an independent examination, whether or not profit oriented, independent examination of financial information. Now, see, there is a very big company, Reliance or Tata, any company you take. Today, are we only investing in Indian entities? Today, are we investing only in the Indian companies? No. There are many platforms which were opened where you can buy the shares of a Google company. You can buy shares of Apple. You can buy shares of Microsoft. You can buy shares of Tesla. Correct? Same way, many foreigners are buying shares in Indian companies. Many foreigners are buying shares of Reliance, shares of Tata, shares of Adani. So many are buying Indian company shares. We are buying US company stocks. We are buying German company stocks. We are buying London company stocks. We are buying China company stocks. Wherever trade barriers were eliminated, wherever the stock exchange barriers were eliminated, we are buying other companies which are operating in other countries' shares. But look, when we are buying, suppose you want to buy Tesla share, do you go there and inquire about Tesla company? No. How do you trust Tesla is having these many profits? How are you establishing the trust that Tesla is having this much of net worth? Tesla is having these many factories. Tesla is having these many cars. They are selling this much. They are having this much turnover. Elon Musk is so and so billionaire. Who are valuing all this? Who are giving the data? The exchange, the stock exchange across various countries, they are operating as regulatories. How they are operating as regulatories. Like in India, we have ICI. Outside India, in every other country, they have some institute of accountants. In every country, there is some accounting body. ICI is called as what? Accounting body, actually. Getting it? Which regulates audit profession in India. Same way, in America, US, we have CPA, Certified Professional Accountants Institute. In Australia, we have something called ACCA. In Canada, we have something called CPA Institute. All these institutes produce chartered accountants like you and me. What we do? Do we have any relationship with the company where we are doing audit? We are completely third parties. Me and the company, me and the directors, me and the shareholders do not have any relationship at all. I am completely a third person. I know how to verify balance sheet. I know how to verify P&L. I know how to verify background books of accounts. I know how to figure out frauds. I was trained for that. Correct? What we do? We will be appointed as auditor for those companies. Audit means what? Verification. And what you do ultimately, you verify all the financial information. What you do? Whether it is in Apple company auditor, or Indian company auditor, or a Chinese company's auditor, or German company auditor, whatever auditor it is, what we essentially do? We audit. Audit means what? Verify. We verify, and if it is correct, we say that the figures given by Tesla, figure was, Tesla in 2021 said, we have sold these many electric cars. How to believe that? It is his own business. He can obviously claim that his company is number one. He can claim that he is having highest number of sales. He is having this many $1 billion turnover. How do I believe? Some certified public accountant, he gave a report. Whatever financial statements given by Tesla company, Tesla Incorporation, the information contained in these financial statements is true and fair. Who certified this? Certified public accountant. Why should I believe him? He is a chartered accountant like you in India. He is governed by CPA Institute of America. If at all he do something wrong, he is punishable severely in the law. He do not have any relationship with the company. Completely a third person giving a report on the accuracy of the books of accounts, accuracy of the financial statements. Now tell me why you don't believe. Now I'll believe. Why I believe that particular report? You don't have any interest in the company. It's completely unrelated party. Correct? The auditor of Tesla is not a related person to the Tesla. Some outsider having accounting knowledge, having accounting standards knowledge, having financial statements knowledge, having books of accounts knowledge, verified the entire documents, verified the entire back-end data, and certified the financial statements of Tesla company, which is showing, a tremendous picture. And he said everything is true and fair. I am a person residing in India, somewhere residing at Chennai or Hyderabad. Getting it? I saw his report. I saw the financials. I felt Tesla is working super, working fantabulous. And that person also certified everything is correct. I will trust him. Tomorrow, if at all, if it is wrong, I will complain to CPA Institute on that fellow that he colluded with the management, he cheated investors, and he will be hanged. He will be punished. Correct? Civil frauds. These are all like, financial frauds. So that fellow will take they will take an action. So there is company which is showing this much of profit, this much of figures, this much of sales, this much of growth, and some independent person is certifying that everything is correct. And I am a person who is there in India, not seen any of them physically, but looking at the reports which are regulatory monitored. Correct? Which are regulatory monitored. Regulatories work for public welfare. So regulatory monitored. I saw these reports and I trusted Tesla is performing really well. I purchased the share of the Tesla. Same way, an investor who is there outside India is also buying shares in India. Same way, everybody, whoever is there in India, buying shares of a company, Reliance Industries, which is incorporated somewhere in Mumbai. Okay, Navi Mumbai. Somewhere head office is in Navi Mumbai. Somewhere they have a refinery in Mumbai. Have you visited there to buy the share of a company? No, by looking at the documents, you are trusting the company and then, buying the shares. Now those documents is called as audit report. That documents are called as audited financial statements. Why are you trusting these documents? Because the person doing audit is independent. Are you getting it? Now independence is having two dimensions. Independence in terms of appearance, independence in terms of mindset. Independence in terms of appearance, independence in terms of mindset. Tell me what we can see actually in this. In appearance and mind, what is visible? Appearance is visible. Independence of mind is not visible. Auditor will say that I am honest. But do we know how far he is honest? See, I am not related to Tesla company. I am not related to Mukesh Ambani family. I don't have shares in the company. Okay, you are able to prove. You don't have shares, your relatives do not have shares, you show me proofs. You are able to show me the proof. But I am independent in terms of mind. How can I prove? Do me narcotic test. Only that is the only way to prove. How can I prove my honesty? Independence of mind is nothing but honesty, nothing but integrity. That is something invisible. Are you getting it? Whereas independence, appearance, you see, I am not related to the director. I am not a relative of the shareholder. I am not having shares in the company. See my demat account. My relative, my wife is not having shares in the company. See my demat account. I can show proofs for all of you that I don't have relationship with the company where I am doing audit. I don't have relationship. I can show the proof. Correct? Independence in terms of appearance is visible. It is something we can prove. So in audit, which is most important, generally, mindset is most important. Honesty is most important. But tell me, if I tell you to act honestly, how many of people will act? So the lawmaker protected independence of appearance, independence in terms of appearance. By looking at the auditor, by looking at the relationship he's having, he should be independent. If at all he is unrelated person, obviously he will not do favor. If he is my relative, I will do favor. If he is not my relative, why will I do favor? So, people believe People believe if auditor do not have relationship with the company, naturally he is honest with the company. If at all auditor is related to the company, he will not be working honestly. That's why what company law disqualification says, a relative cannot be appointed. A partner of the firm should not have shares in the company, should not be indebted to the company, should not have business relationship with the company. Why all of these are prohibited? If at all you are having shares in the company, you naturally support your company because you are also owner. If you don't have shares in the company, if you boycott that, naturally, whoever chartered accountant is there, who do not have shares in this company, we will appoint him as an auditor. And since he don't have any relation with the company, he will do audit honestly. Suppose if I have shares in the company, I will not do honestly. Because if something is wrong, I may not comment on that. Because I'm also owner, I will also affect. Self-interest threat. What is it called as? Self-interest threat. Since I'm having interest in the entity, if something went wrong, I will not be commenting because I'm having interest. My interest will affect. Able to understand all of you. So audit independence is both appearance and mind. Now an audit is independent verification. What is it? Verification, examination, assessment, determination, whatever. Independently you're verifying what? Financial information. Financial information means what? It is financial statements and books of accounts both. Financial information. It's not financial statements. Getting it? Financial information, financial statements and books of accounts both. You are verifying the entire financial information of any entity. Not necessarily company. Only companies will have auditors. Huh? A partnership firm can have auditor. A sole proprietor can appoint an auditor. A LLP can appoint an auditor. A society can appoint the auditor. All these are what? Enterprises. Enterprises, another synonym is what? Entity. Of any entity, whether or not profit oriented, it may be profit oriented entity or it may be non-profit oriented entity. Every organization which is dealing with many receipts and payments, do they maintain books of accounts or not? Correct? Huh? Do they maintain? See, in your family you might have seen, whatever expenses they are incurring, they'll maintain a chit, TT. Have you seen yes or no? In many families they maintain as a custom. Why do they maintain? If they are incurring on so many things, they should have something later on to look at. What we spend, where we spend, where, how the funds flow were affected. A small family spending some amount, they're writing in the record because they can't remember. So every organization, whoever is dealing with large number of receipts and payments should maintain records or not. So that subsequently they need to check everything. So non-profit entities will also maintain books of accounts. Non-profit entities will also prepare financial statements. Able to understand? All the temples you see, they have books of accounts. They have financial statements. It is incorporated as some trust. It is incorporated. Somehow it is incorporated. Getting it? So it may be profit oriented or non-profit oriented. Anybody. Tirumala Tirupati Devasthanam appointed me as an auditor? Yes. Suppose if they have appointed me as an auditor, what is my duty there? I will go check the assets, check the liabilities, check the incomes, check the expenditure, income and expenditure, and certify is it correct. Able to understand? TTD Devasthanam Temple says this year we have received 700 crore donations. Out of 700 crore we spent on devotees like this much. We spent on building renovation this much. We spent on other constructions this much. They are saying, who knows? It is public money. Some management inside TTD can do frauds, no? So that's why what they did, TTD trustees there, what they did, they appointed a CA. He will go and verify everything and say whether everything is fine or not. Whatever they showed in the books, is it reliable? Is it true and fair? They're going and commenting. So auditors are not only for commercial organizations, audit is necessary for non-commercial also. Everywhere audit is necessary. Profit or not, profit oriented or not, doesn't matter. Size, irrespective of size, doesn't matter. Size of the entity doesn't matter. Able to understand? Whether your company is a 100 crore company, 1000 crore company, $1 billion company, 10,000 crore turnover company, doesn't matter. For every organization, they will have books of accounts. They will have financial statements. Are they correct or not is what my duty. Yes or no? Legal form, irrespective of size or irrespective of legal form. What is a legal form? Legal forms are many. Partnership forms, LLPs, societies, sole proprietor. Yes or no? There are many legal forms. Tell me, if I have to do a business, I'm an individual. If I have to do a business, should I register under any legal form compulsorily? Is it compulsory? I want to open some idli dosa bandi. I want to open a restaurant. I want to open a garment shop. I want to open some ice cream store. Should I have any registration? I may require PAN number and GST number. That's it. Should I register compulsorily under company law? Should I register under LLP law? Should I register anywhere under partnership law? Nothing. They are not mandatory. It's my wish. If I want to register, I'll register. Able to understand? So, legal form doesn't matter. If you are doing business, in your business, if the receipts and payments are huge number of transactions, you maintain books of accounts. You maintain, list of transactions. No, what is books of accounts? It's an account. Account means what? Recording. What you're recording? Recording transactions. Books of account is nothing but a method of recording transactions. Whatever I'm doing, I'm recording. So every organization will maintain books of accounts. So legal form also doesn't matter. A sole proprietor appointed me, a partnership firm appointed me, a company appointed me, a Tirumala Tirupati Devasthanam appointed me, a church appointed me, mosque appointed me, whatever. Whoever appointed me as an auditor, what I'll do? Open your books of accounts. Give me the financial statements. Show me bills. Show me proofs. You said here expenditure is this much. Where is the bill for that? Bill is not there. That means fraud. Able to understand? I'm just example I'm telling. I may not certify it as fraud, but I'm just telling you example. I will question like this and I will verify proofs everything and finally certify based on the proofs, based on the evidence, based on sufficient appropriate audit evidence. They are true and fair. That's how I certify. So, legal form doesn't matter. Size doesn't matter. They're objective, profit oriented or not doesn't matter. I'm an auditor. I'm appointed to independently verify your financial information with a view to express opinion thereon. So audit is a definition not specific for companies. Audit definition is not specific to law. It may be non-stat audit or it may be stat audit. Doesn't matter. What is audit? Verifying something. Verification means what? Whatever you made that, maker and checker should be different. The person who is making the thing and checking the thing should be different. So maker and checker should be different means independence. If I only did the task, if I am only verifying, will I find a mistake? That's it. So, an audit is an independent examination of financial information of any entity, whether or not profit oriented, irrespective of size or legal form. When such an examination is conducted with a view to give an opinion. Now you see, the word financial statements. See, this fundamentals is very important. That's why I'm going a little slow. Gradual, I'll increase the speed. Okay. Now, you are preparing financial statements. You are actually auditing what? Financial statements. So, what do you mean by financial statements? What do you mean by financial statements? There are two types of financial statements. General purpose financial statements and special purpose financial statements. Clear is it here? So there are two sets of the financial statements. One is general purpose financial statements. Another one is special purpose financial statements. What are special purpose financial statements? If the financial statements are prepared for special purpose, if the financial statements are prepared as per special purpose framework, what is it called as? Special purpose framework. Then they are called as special purpose financial statements. We don't have this in our syllabus. We are discussing our entire subject. In which context? Audit of general purpose financial statements. We are discussing this entire subject from GPFS audit. We are not discussing audit of special purpose financial statements. We are not discussing anything else. We are only discussing audit of general purpose financial statements. And first of all, what is our subject name? Our subject name is auditing and assurance. Actually, the subject name must be audit assurance. Actual subject names must be what? Audit assurance. Because auditing is a type of assurance. We don't have auditing and assurance separately. Assurance is a very big subject. Assurance on what? I am giving assurance, confidence to many on the financials. You may be giving confidence on a motor car. You may be giving assurance on an air conditioner. You may be giving assurance on a gold ornament. Bismarck is an assurance on gold ornament. ISI is an assurance on electronic items. FSSAI is an assurance on food items. These are all assurance agencies, nothing but. They give confidence. Okay, on a biscuit packet, if SSA license number, everything is there, I can happily consume it. Because this particular product was produced in an organization which complied with the FSSA standards. Are you getting the point? So in every field, audit is a common word. L&T Metro project is going on in Chennai, Hyderabad, everywhere. Now whether the project is as per planned one or not, whether the railway track properly laid or not, there is an audit, you know. Now their audit means accounts audit, financial statements audit. That's an operational audit. What is it actually? That's an operational audit. There are many audits. Regulatory audit, nothing but it is called as compliance audit. There is energy audit. There is environmental audit. There is a pollution audit. You know that? We are discussing which audit? Financial audit. We are only discussing in our subject which audit? Financial audit. So, assurance is a very big subject. It has so many things. But we are only discussing in assurance which type of assurance? Financial audit type of assurance. That is the scope of discussion of the subject. And we are discussing about assurance on which statements? General purpose financial statements. Our entire subject has been drafted from general purpose financial statements. Correct? Now, what is the objective of audit? You might have read this. The objective of the auditor is to obtain reasonable assurance whether the financial statements are free from material misstatements and whether they are prepared as per applicable financial reporting framework. Correct? What is applicable financial reporting framework? It's a 5 marks question. Asked in November 2019 exams. November 2019, I think. What is applicable financial reporting framework? What will you write? Most of you have not seen that question itself. It's a 5 marks question. What will you write? They are nothing but financial statements. One line answer. So applicable financial reporting framework itself is having a big definition. What is that? Applicable financial reporting framework. It has 3 parts. Getting it? What do you mean by framework? First of all, rules and regulations. The framework is nothing but rules and regulations. What is financial reporting? You are not only preparing, but you are presenting to lakhs of shareholders spread across the world. Tell me, when you prepare notes for yourself, happily you write in whatever the manner you want. Because only you have to understand. But when you are writing notes where thousands are watching, where thousands will read later, can you write in whatever the way you want to prepare? Can you prepare the notes in whatever the way you want to prepare? No, you have to keep in mind. You have to keep in mind who are your general audience, who are your various users. So, presentation must be keeping in mind which large number of users. So, reporting financial statements is different, financial reporting is different. Financial reporting means what? Preparation and presentation of financial statements. You are presenting the financial statements. That is when the word reporting can be used. Correct? Now tell me, do banks, a sugar manufacturing company, insurance company, all of them prepare balance sheet P&L in same manner? No. A bank will prepare balance sheet P&L in a different manner. A sugar manufacturing company, oil manufacturing company, manufacturing trading company will prepare balance sheet P&L in a different manner. And an insurance company prepares financial statements in a different manner. A sole proprietor prepares financial statements in a different manner. A partnership firm prepares in a different manner. Correct? So the financial reporting framework, nothing but tell me, a partnership firm, when they are preparing financial, do they follow some rules and regulations? Do bank follow some rules and regulations? Do insurance company follow some rules and regulations? Are all these rules and regulations same for everyone? So, the rules and regulations, nothing but a framework for preparation and presentation of financials. Nothing but combinedly, financial reporting framework. The financial reporting framework is different for different types of entities. Agreed? Now, what is applicable framework? What is applicable? Depending on your nature of the business. Why are you preparing financials? Objective. Depending upon nature of the business and the objective of the financials, whatever financial reporting framework that company adopts, the management adopts, the partners adopt, the members adopt in a society, whatever framework they adopt for preparation and presentation of financial statements. That is what the definition of A for FW. And this applicable financial reporting framework can be a general purpose framework or a special purpose framework. It can be a fair presentation framework or a compliance framework. So first, have you understood that something is there this much? So now still we need to discuss what is general purpose framework, what is special purpose framework, what is compliance framework, what is fair presentation framework. Then slowly we will discuss the concept of misstatement, and half an hour we will close this session. Then we will start the next chapter. Clear everyone? That's it. Okay, we'll take break and get back in 15 minutes. So let's continue. So as I told, the financial statements are two kinds. Like one is general purpose financial statements, another one is special purpose financial statements. What are special purpose financial statements? If the financial statements are prepared as per special purpose framework. What is special purpose framework? There, the rules and regulations for preparation and presentation of financials were given by a special person or a group of persons. They are prepared for a special purpose. They are not for routine regular discussion by shareholders. They are not for routine regular discussion by stock markets. They are not for general public. They are for special reason. They are for getting loans. They are for mergers and acquisitions. If I am preparing financial statements specifically to exhibit about my company for certain things, getting it for certain special reasons, then those financial statements are called as special purpose financial statements. And when special purpose financials is prepared, mostly whenever company want to sell its business to another company, they prepare special purpose financials. And you know what? In special purpose financials, balance sheet need not tally. There is no requirement. What is special purpose framework? Is there any law for that? Special purpose means what? If I have some purpose, I want to look at my company in a different way. I want to value my company. Why do I prepare financials as per traditional format of balance sheet, P&L, going concern, historical cost? Why? So, special purpose financial statements, the rules are decided based on the need. What rules we will follow, what principles we will follow, it is based upon the need of the moment. So, there is no framework for special purpose. Getting the point? I want to buy another company. Don't give me that balance sheet P&L. That is prepared on historical cost basis. Plant and machinery, it shows 10,000 crore. If I sell the plant and machinery, 10 crore also it will not come. Don't give me that balance sheet. Don't give me that P&L. Getting it? I want a realistic balance sheet, realistic P&L. I want realistic figures. So, you prepare everything as per net realizable values. So, my way of valuation of business is different. Able to understand? Special purpose financials are prepared based on the special circumstances, based on the need, special need. If there is no such need, why will I prepare them? Able to understand? Whereas, every one of us, whenever we discuss about a company, suppose if I name one company, if I tell you to buy the shares of the company, if I ask you to invest in the company, first question, what will you ask? Where the company is situated? What business the company is doing? Who are the people managing this company? And how much turnover it has? What assets it has? What liabilities it has? Is this company having positive net worth or not? Will you check it or not? Before you buy, do you check all these points or not? Whether you want to buy, a bank want to buy, mutual fund company want to buy, anybody whoever want to buy shares in a company, all of you will expect commonly same points, You don't want to buy the entire company. You want to buy some shares in the company. All of you will commonly expect some few common points, yes or no? Suppose you go and ask insurance company, mutual fund company, sir, please invest in our shares. They will also ask similar questions like you. Maybe they may ask little more questions because they are much more knowledgeable. You will ask few questions. Somebody else will ask few questions. But all of you commonly every one of you wants some information, right? Some financial information. Commonly everyone want to know about my company, correct? Every year what my company is doing, every year how much income we are generating, every year what is our position, commonly everyone will expect or not, on a year to year basis, customarily gap. So based on general purpose, why am I preparing balance sheet as on 31st March every year? General reason, general purpose. For whom? For what purpose you are preparing? Is there any special reason? I don't have any special reason. Then for whom you are preparing? I am preparing for my shareholders. I am preparing this for my creditors. My debtors will use. Soon whoever is going to buy my shares will use. My directors will use. Many people will use. To meet their common financial information needs. To meet their common financial information needs. Everyone needs some financial information from me. And the information everyone wants is common in everyone. To meet the common financial information needs, I adopt some framework. I follow some rules and regulations for preparation and presentation of financials. And that framework is called as General Purpose Framework. What is that framework? General Purpose Framework. Now, when I am preparing balance sheet P&L using General Purpose Framework, do I value fixed assets? Do I value inventory? Do I measure income and expenditure based on one particular person requirement? No. I prepare them based on common requirements of everyone. Now you may get a doubt. Sir, if one company want to know some additional information, what they have to do? Nothing. Why will I give? It's a general purpose financials. Use it to what extent useful. You want to know something else? Come and talk to the company. They will prepare special purpose if you want, if at all necessary. Just because you are coming and asking me special purpose, why should I give? Are you getting the point? So, general purpose financial statements are those financial statements which are prepared using general purpose framework. Special purpose financials are the one which are prepared using special purpose framework. And the frame and we are discussing the subject of audit from which context? General purpose financial statements audit context. Done. Again, this financial statements are two types: fair presentation, compliance. This I will discuss in audit report chapter, not now. Let us discuss later. Next. So now, what is once again objective of audit? The objective of audit is to obtain reasonable assurance whether financial statements are free from material misstatements and whether they are prepared as per applicable framework. So we need to check whether the financial statements are prepared as per applicable framework. We need to check. In order to check what is applicable framework, first we must know what is applicable framework, and just now we completed. What do you mean by applicable financial reporting framework? We understood or not? Applicable framework is nothing but in view of nature of entity, bank, insurance, NBFC, which one? And objective of financials, general purpose, special purpose. The financial reporting framework. The financial reporting framework, nothing but the principles and policies and rules and regulations for preparation and presentation of financial statement. The principles followed by the managing persons of the enterprise. Partnership firm, partners. LLP, partners. Sole proprietor concern, the proprietor. Company, directors. The management will follow some framework. No, that framework is called as applicable financial reporting framework. And this framework is broadly based on the purpose of the financials, two types: general purpose, special purpose. Based on presentation manner, fair presentation, compliance. I'll discuss that later. Now, one of the objective we completed. The objective of the auditor is to obtain reasonable assurance whether financials are prepared as per applicable framework. You will check. Company appointed me. Company applicable framework is Schedule 3. Applicable framework is accounting standard. Every company shall prepare financial statements as per Schedule 3 and as per accounting standards and should convey true and fair view. Section 129 subsection 1 says this. Yes or no? So applicable framework for company Schedule 3. Accounting standards. If company appointed me as an auditor, I will check balance sheet P&L. Are they prepared as per Schedule 3? Are they followed schedule, accounting standards? I will cross verify. And finally give my opinion. Not only this, I have another objective, most important objective. Whether the financial statements are free from material misstatements. Are the financial statements are free from material misstatements? Free from material word you ignore. For few hours ignore that word material. Ignore. Obviously, do we concern about big mistakes or small mistakes? Material only we obviously concerned about. If it is some 10 rupees, 100 rupees mistake in the 100 crore balance sheet, do we worry? We only worry about a material mistake. So obviously. Now whether the financial statements are free from MMS. What do you mean by that? Free from MMS means, free from mistakes means, is it right or wrong? I said the books are free from mistakes. What do you mean by that? Books are right or books are wrong? Right. Now they are asking you, are the financial statements free from material misstatements? They are asking you, are they right? Are they wrong? That is what they are asking indirectly. The auditor has to verify whether the financial statements are free from material. Hey Mr. Verify, are they containing any mistakes or are they not containing mistakes? Check it out and come back and tell me. You told me Tesla balance sheet P&L. What Elon Musk says is not correct in the P&L account. He says in the P&L this many $1 billion sales, but in reality it is not there. Tell me that it is completely wrong. Give me a report that it is wrong. Or no. So now, what is the word here? Misstatement. What is the word that has been used? Misstatement. So what do you mean by a misstatement? What is misstatement? There is a big definition. Misstatement means a difference between amount, classification, presentation, disclosure of a reported financial statement item, amount, classification, presentation, disclosure that is applicable as per applicable financial reporting framework. If I ask you to remember like this, you will never remember even you read 20 times. So you need to understand. Now misstatement means what? What is mistake? How do we say something is mistake? If you know what is right and what he did, I will compare with what is right. And I will tell you whether you did is right or wrong. Whether your answer is right or wrong, how do I check? First look at the correct answer. Compare your answer. If it is matching, I'll give right answer. But if there is a difference, your answer is wrong. Misstatement means difference between right answer and wrong answer. Correct? Correct? But how here it has been written? I'm talking about definition. Misstatement means a difference between, in financial, we are not looking at mistakes of human beings. We are looking at mistakes in the financials. In financial statements, how mistakes can happen? 4 types. How mistakes can happen? 4 types. Amount, classification, presentation, disclosure. Amount, classification, presentation, disclosure of a reported financial statement item. Reported financial statement item means what? Already balance sheet prepared, already P&L prepared. In that fixed assets, current assets reported something. They are given some amount, some classification, some presentation, some disclosure. Difference between this and what? Difference between this and we need to compare with how they have to do. Correct? How we need to prepare financials? As per exactly applicable financial reporting framework. So compare amount with amount, classification, presentation, disclosure, required as per applicable financial reporting framework. You see the definition now, you understand, you'll never forget. What is a misstatement? It's a difference between amount, classification, presentation, disclosure. Now nothing but you see here, difference between what you reported in the financial statements and what is required as per applicable. If there is no difference, what you did, what is required, both are same. Now is there a mistake? But what you require, what you did, there is a lot of difference. Then it is called as misstatement. Now this misstatement can happen in 4 ways. Amount, classification, presentation, disclosure. You can mislead people by doing not only in amount, but you can do mislead people in form of classification, in form of presentation, in form of disclosure. In any way you can manipulate people. You know that? Able to understand? Suppose how in amount a misstatement can happen. In amount how a misstatement can happen. Suppose we all know. Let me take simple examples, traditional examples I'll take. At some places I'll take little modern examples where I think you can understand well. Inventory valuation is what? Cost or NRV, whichever is lower. Suppose a company is having 100 crore worth of cost of inventory. Getting it? The NRV value of this inventory is some 85 crore. What is actual valuation? Applicable framework, accounting standard says what? Cost or NRV, whichever is lower. What is right value? 85 crore. But you know, company presented in books of accounts at cost only 100 crore. They ignored valuation principle. Now, there is a difference between what they reported in the balance sheet and what they need to report. Now, is this a mistake or not? Yes. Next. A mistake can happen in classification. Suppose a company purchased land. What is a land for a company? Asset, not fixed asset. You cannot straight away say it's a fixed asset. Company purchased land, no, for what purpose? Factory construction? Warehouse construction, for what purpose? None of this. Company has idle money. Company has idle money. Reserves and surplus are so much. Now what companies will do with idle money? They invest. Now this company invested where? In the immovable property called land. Now tell me, when a company purchased land for the purpose of investment appreciation, value appreciation, what is this land for the company? Not a fixed asset, but investment. Fixed asset is something asset used for my business. Suppose I am a manufacturing company. If I buy an asset for my business need, for operating needs of the business, for factory purpose, manufacturing purpose, trading purpose, then it's a fixed asset to me. Yes or no? Here I purchased land. Am I using it as a factory or warehouse or something? Nothing. I'm just using it for investment appreciation. That's an investment. But you know, the company showed it as fixed asset. Actually, what is the classification? No, 100 crore land they purchased, 100 crore value correctly mentioned. But instead of showing it under investment, where they showed, it's actually investment, but where they showed fixed asset. Now the company did a classification mistake or not? Now you may say, sir, what happens, sir? Anyhow, balance sheet showing 100 crore value, no. What happens if it is shown under fixed asset, not under investment? What is the problem? The way I interpret the financial statements will change. Correct? The way I interpret the financials, very simple. You look at my investment, right, in the company. Suppose I have my personal asset. Will you calculate it for the purpose of investment in a business? No. For teaching the class, I purchased this and this. Correct? What you will check? What Harsha sir invested for teaching class? You will check only these, no? If I bring my land documents and show, hey, this also I am using now in the class, will you believe? Correct? So, if I classify like that, am I misleading you? Suppose simple, I am investing all this, I am investing my energy, all that. Based on that, I am fixing some fee and collecting from you. Sir, what is the basis for the fee calculation? If you ask me, I need to show you the basis. Plus my margin. If I keep my wife jewelry cost, hey, my wife, I purchased jewelry also. Please reimburse in the form of a tuition fee. Will you? No, right? So, classification is very important. In a company, if a company classifies a land, which is investment under fixed asset, have you done ratio analysis? Fixed asset turnover ratio meaning will differ. Fixed asset turnover ratio will change. So, classification must be proper. This way they can do, mistake. A company can do mistake in presentation. A company can do a mistake in presentation. Maybe mistake is not there in amount. Mistake may not be there in classification. Sometimes mistakes may be cumulative. Amount wrong, classification wrong, presentation also wrong. Like cumulatively also it can happen. Able to understand? Mistakes can be in the form of presentation as well. How? What is presentation? Simple example. Debtors, no. How do we present in the balance sheet? Debtors. Trade receivables minus provision for bad and doubtful debts. 100 crore minus 5, 95. Trade receivables 100 crore, provision 5 crore. Which is right? This is presentation 1, this is presentation 2. Which is right? Presentation 1. Why presentation 1? I will follow presentation 2. Am I misleading anybody? But you are presenting wrongly. Because of the presentation 2 type, people may not understand you are having doubtful debts worth of 5 crore. Yes or no? If I show you 100 crore, below 5 crore reduce, I am telling you indirectly, I have 5 crore doubtful. Actually 100 crore I should receive, but 5 crore I am doubtful. So 95 you consider. This is right, no? True and fair. This is true and fair picture. But if I classify 5 crore on the left side, I am showing you completely true and fairly. But can you correlate it immediately? It requires so much of effort for you to understand that I have doubtful assets. Correct? Presentation can be done like this. Mistake. Mistake can be in the form of disclosure. A mistake can be in the form of disclosure. Suppose I am having a court case pending against me. In my company, on my company, there is a very big pending case. If at all the case was successful on the other party, I have to pay 25-30 crore damages. If I don't disclose that to you when I'm selling my business, what will happen? Will you be at loss or not? If I don't disclose is also a misstatement. You see, misstatement. Statement means what? Stating something. Misstatement means what? Stating something wrongly. If I have some big liability and if I'm not disclosing that, it's a negative form of misstatement. Whatever mistake is there, whatever problem I have, I'm not disclosing. Non-disclosure is also a mistake, right? Misstatement can be in the form of disclosure, presentation, classification, amount. So now you see the definition of misstatement. Misstatement means a difference between amount, classification, presentation, disclosure of reported financial statement item and amount, classification, presentation, disclosure that is required as per applicable financial reporting framework. Easy to understand. So no need to remember. If you understand, you remember naturally. That's it. Next. So that's misstatement. Now tell me, in balance sheet P&L, these mistakes will happen, no? Commonly. Will it happen intentionally always? Always mistakes will happen in the financial statements intentionally. Or always do they happen unintentionally? Anything. Misstatement can be intentional or unintentional. How auditing subject is calling them as intentionally. If you do a mistake, it is not mistake. It is fraud. If you do unintentionally, it is called error. Which is difficult to identify. The person who is doing fraud, will he do in such a way that he can easily be caught? He will do fraud so that in such a way, it will be difficult to trace. So, generally the person doing fraud, intentionally he do that. Obviously he want to hide at any cost. He will never make it reveal. So he will manipulate everything like that. Detecting fraud is very difficult. Error. The person who did the error, do he has knowledge of the error? The person himself doesn't know that he did fraud, that he did an error. So he himself doesn't know. Now tell me, when a person who committed error unknowingly, can he hide it? How can I hide it? The fact that I did a mistake, I don't know first of all. How can I hide it? So I can't hide it. If something is not hidden cleverly, generally identifying that is easy because nobody is hiding it. Correct? So there are two types of mistakes, fraud and error. With this, fundamentals is over. So the person conducting the audit, we call him as what? Auditor. Auditor can be who? Auditor means who? Generally, all of us will be a chartered accountants. After that, some of us will go for industry. Some of us will open up practice. Getting it? Practice means what? You open up an office, take, accept clients, you are the auditor. Now tell me, how many of you are in articleship already? 5 or 10? Hardly. Okay. Now tell me, whenever in your office, no. When a company client is asking you to do audit, Only the CA partner, he is alone going for conducting audit. Your article, no, you are also going to do audit. In fact, major work you only do. Correct, and you will get 6,000, 7,000 stipend. And principal will charge 7 lakhs audit fee. Correct, and he will pay you 6,000 stipend for the 1 full month. Getting it? So, his auditor means who? Only, not the partner. The partner, my manager, my articles, everyone is called as auditor. Auditor means what? Everyone from auditor office is called as auditor, but not pune. Yes or no? Whoever is working on the financial statements for audit, we call him as auditor. Now tell me, we are accepting one work from client. What is it called as? Contract. In profession, we call it as engagement. Ring exchange kadayadu. It's an engagement. Getting it? Engagement means what? He is engaging me on an assignment. Yes or no? Engagement plus assignment. Savaratirka sandhi. Engagement. Getting it? So, he appointed me as an auditor and I am working on it. Now, I am not going individually. Me and I am taking along with me some team on this engagement. We will call as engagement team. I am the partner. My manager is there, who is also CA, but he is my employee, not my partner. He is also there to monitor you. And my articles were there. All of us are called as engagement team. Auditor means members of engagement team. But tell me, when something comes for answerability to SEBI, answerability to RBI, can I tell my article to go and answer? Who will come when it comes to responsibility? Partner. Who will sign the balance sheet ultimately? Partner, engagement partner. I am only taking their help just for the sake of my, because their articles, I need to train them, no? Just for that I am taking their help. Getting it? They are not responsible. They are only helping me. Ultimately, client appointed whom? Auditor. Able to understand? So this is fundamentals syllabus. Next, we need to discuss nature, objective and scope of audit. Next, we need to discuss nature, objective and scope of audit. So with this, fundamentals session is completely done. Clear? So now the actual chapter is nature, objective and scope of audit. This is what the first chapter I think in your institute book. Getting it? Now this chapter, if you look at, we divided this chapter into 4 parts. First, some concepts of auditing we are discussing. Then we will be discussing about how to accept the audit. Then we will be discussing what is independence, what is relationship with other subjects. Then we discuss about SQC principles. But we will not be discussing SQC now, we will be discussing later. Okay, now. So, first one, what is an audit? Explain the points which an auditor has to satisfy himself before expression of opinion. Now, what is audit definition? We have seen already. What is purpose of audit? Why audit? Why audit? No, I am not asking what is audit. I am asking why auditor? Because somebody is certifying Tesla documents, I am having confidence. What is auditor is doing? He is increasing my confidence level. Auditing enhances degree of confidence of user of financial statements. Why my confidence is increasing? Because it is verified. How are they valid? Are they accurate? It is verified by independent, unrelated, competent person. Able to understand? That's the purpose of audit. Next, now tell me, you are the auditor, right? You are checking books, balance sheet, P&L, right? What points you will check generally? There are so many things that we need to check, but generally as a points, what will you check? Will you check Schedule 3? Which means, will you check applicable financial reporting framework? Do we check accounting standards? Do we check, with the background invoices, documents, proofs and all? Company said, I have land worth of 1,000 crore, factory cost, plant and machinery. Okay sir, thank you, very good. Will you say that? Show me documents, title deeds, show me amount paid, show me bank statement. Will I verify or not? We will verify supporting documents, correct? Now company is depreciating plant and machinery. Depreciation, company plant and machinery, 100 years life. What will you tell? If 100 years life is used by a company, what will you say? How come it will come for 100 years? Suppose company purchased air conditioner, life for 50 years. Will AC work for 50 years? How many years it will work? Hardly 10 years. Correct? If company uses 50 years as life and calculated depreciation, don't you question that? Which means accounting estimate. Is it genuine or not? Don't you check it? Now company is depreciating company is following closing stock valuation methods, LIFO, FIFO, something they're following. I asked the company, sir, how do you sell the goods, sir? Sir, recent one the goods, whatever recent report, that we will sell it first. We will always make customers latest stock available. Which means company should follow which method of inventory valuation? LIFO, but company is following FIFO. How they are doing business and what they are accounting in the books, is it matching? Substance over form. Both should be same, no? Whatever I do in business, it should reflect in my books of accounts. So, if company is following FIFO, where LIFO is the style of business, don't I question it? So do me, which means I need to question accounting policy. Correct? So see how many things I need to verify. I need to verify applicable framework. I need to verify accounting standards. I need to verify accounting estimates. I need to verify accounting policies. So many things I need to verify. I need to see background transactions. And tell me, between balance sheet, P&L and books of accounts, should they match or can they mismatch? Should they match? Balance sheet, P&L is a result of books of accounts. Books of accounts means journal entry. We post it to ledger. Then we post it to trial balance. Then from there we prepare P&L and balance sheet. Obviously, if I change something in books of accounts one journal entry, my balance sheet P&L will affect or not? Obviously, balance sheet P&L should be in conformity with the books of accounts. So I should check books of accounts, financial statements, whether they are matching or not. Whether journal entries, purchases, sales, are they having supporting proofs or not? Correct? That is the point which we need to consider. Whether financial statements are in conformity with the books, entries, transactions supported by evidence. Can a transaction have duplication? What is duplication? Twice or thrice? Duplication means what? Twice or thrice? Any number of times. More than once is duplication. Getting it? Can they omit something? Can they ignore some information? Can they pass dummy transactions? We should check, no? Next, and see that financial statements information is clear and unambiguous, and see that amount, classification, presentation, disclosure are as per accounting standards. See that assets and liabilities are true and fair. Correct? 4 points they may ask you in exam. They'll ask you like this question. Write about what is the definition of audit and purpose of audit, and what are the 4 points the auditor shall consider before expression of opinion. Before expression of opinion. Tell me, I give opinion. What will I give opinion? And what? I will have to tell whether balance sheet P&L, numbers, classification, presentation, disclosures, whatever balance sheet P&L is containing, are they right or wrong? That's what my opinion. Correct? Are they right or wrong? People appointed me for what? They want to know, is it right or wrong? Hey, we all lakhs of people gave so many crores of dollars to Elon Musk. He invested in some rocket, space science, something. And after 1 year, he came and showed me, this is the result of the fund, whatever we gave. We all gave $1 billion money. And this is how he invested. This is what he's claiming. How do I know it is correct? I sent one competent person. I sent one unrelated person, a chartered accountant, a certified public accountant I sent. He verified everything and came back and told me, hey, he gave some statements, to all of you after 1 year. The statements are correct. You don't worry. In the statement, what it shows, company is having this much of profit. Company is having this much of turnover. Company spent this much. So they showed so much. My money you took and spent on so many things. Whether it is right or not, whatever you are mentioning is right or not, I want to know. And auditor came and certified. So, opinion means what? Opinion is of 2 kinds. Either you may have a positive opinion or you may have a negative opinion. So, before you give opinion, what points you will check? Suppose I sent one auditor, what he should check? All these points you should check. Are you getting it? Now tell me, these points, are they inclusive or exhaustive? Inclusive. There are so many things that you should do. Few points I gave here. There are so many things that you should verify. Few points we explained here. Inclusive list. This points is inclusive list. Next. Now tell me that auditor went and came back. Hey, you got balance sheet P&L right? I verified everything is correct. Does it mean company future is excellent? No. Am I giving guarantee about the future of the company? Or am I talking about Elon Musk intelligence? You appointed me for what? You gave money to him. Yes or no? He said to you, he gave back you 2 documents, balance sheet P&L. Hey, your money is invested here. See, this is a plant, machinery I purchased. This is a factory I constructed. This is the sales I generated. This is the profit. And out of that, some dividend, take it, enjoy. This is what he told you. You are having doubt. Hey, whatever he is telling, right? You are having doubt. So you appointed me. I went and came back and told you everything is right. That's it. How can, I am giving opinion on past. Whatever event already happened, past financial data, historical financial information. I am giving opinion on that. Getting it? How can you say it's a guarantee about future? How can you say it is about his efficiency? So is my audit opinion talking about management efficiency, management effectiveness? No. I'm not talking about company future. I'm only talking about past financial data. Is it right or wrong? Balance sheet P&L contains information about future or past. Historical means what? Past. Historical means not 17th century. Yesterday whatever happened is also called as historical. Understood? So that is what implications. The auditor opinion does not guarantee future viability, does not guarantee efficiency and effectiveness of management. What is efficiency? What is effectiveness? What is the difference? Effectiveness speaks about result. Efficiency speaks about process. Are you getting the point? Efficiency speaks about process. Effectiveness speaks about result, which is most important ultimately. Result is most important. Ultimate effectiveness is important. Now, how should we achieve that best result? Most efficient manner. Getting the point? So, how the Reliance Industries Board of Directors, Mukesh Ambani, how efficiently he is working, how effectively he is bringing the company into the future. Is my opinion talking about that? Is my audit opinion talking about Mukesh Ambani effectiveness? No need. Getting it? So my audit opinion is purely on historical financials, whether they are reliable or not reliable. That's it. Clear? Everyone. Next. What is objective of auditor? We already finished this. The objective of the auditor is to obtain reasonable assurance. Sir, what is reasonable assurance? I'll discuss later. Getting it? Whether the financial statements are free from material misstatements, whether due to fraud or error, thereby making you express opinion whether the financials are prepared as per financial reporting framework. Check it out. Then give a report. How do you give your opinion? Orally with mic. We'll give a written document. That is called audit report. That's it. So this point is explained under SA 200. There is a standard called SA 200. The standard heading is this: overall objectives of an independent auditor and conduct of an audit in accordance with the standards of auditing. That's it. Clear? Scope of audit, principal aspects to be covered in audit. You will understand only after you understand the entire subject. Before reading the entire subject, you should not read that. Getting it? Scope of audit. What audit covers, what audit do not cover. What are the aspects to be verified in audit? You should verify internal control system. You should verify accounting system. You should conduct risk assessment process. These are all, we have separate chapters. Suppose you see principal aspects of audit. Auditor has to study internal controls. What is internal control? We have a chapter. Systems and procedure. Nothing but internal control element. Correct? Arithmetical accuracy. How to verify arithmetical accuracy? Items of financial statements we have. How to verify authorization? Again, it's a control. Accounting principles we should verify. Getting it? Overall review. Balance sheet P&L. Verification of assets. Verification of liabilities. How to verify assets? How to verify liabilities? Items of financial statements we have chapter. Yes or no? Finally, reporting. We have a chapter called audit report. If you want to understand this entire question truly, not sentence meaning, but concept, you need to understand remaining chapters. Clear? I think by this time you might have understood the difference between sentence and concept. Next. Now, tell me, is audit compulsory for everybody? Right now I'm taking class. You all have paid little fee. So no, some fees you have paid. And I incurred some expenditure. Is audit compulsory after this class? Is audit compulsory for me? Is audit compulsory for every type of business? No. Depending upon the law applicable to you. Depending upon the law applicable to you. How you registered your business. How you registered your business. There is a hotel called Akshayam, here. Alvapet, nearby. There's a hotel called Akshayam. It's a very good restaurant, decent restaurant. What is Akshayam legal form, It's a partnership form. What is it? It's a partnership form. Barbecue Nation. It's a listed company. What is it? It's a listed company. Sharavana Bhavan. I think it's a sole proprietary concern. It's a sole proprietary concern. And Lalita Jewelry. It's a private limited company. You see, I'm showing you different businesses. They're all businesses actually. Partnership company. Do you say that? No, right. I want idli. And I want sambar in that. And Saravana Bhavan is special for that. And I go there. How they are incorporating their business, how do I need? If at all Saravana Bhavan is a company, do you sit on table and keep a plate on the chair and eat? No, right. Business is different. Legal form is different. Understand? Correct? Now, there are only two forms of organization. Only two forms according to me. Either I'll do individually entire risk. Or me, another person, or more than two. Two or more than two persons, we will form as an association and do the business. Only these two ways we do the business. Either Taniya Namattu Pandra business. Illana group சேர்ந்துட்டு பண்ற. Only two reasons. That's why only two forms. Either individually do business or group of people will do business. If I do individually, sole, single. Yes or no? Single, king, gullam. Okay, so only individual I do. Or association I'll do. Association of person. We call them as what? Association of person. AOP means what? Association of person. Now, whatever the way we do we register? Is it compulsory to register under company law? Not. Is it compulsory to register under partnership law? No. Is it compulsory on LLP? No. Now, Lalita Jewelries, no. They're registered as a private limited company. Getting it? Saravana Bhavan have not registered as a private limited company, maybe a sole proprietor. Akshayam registered under a partnership form. Barbecue Nation registered as a company, public company, went for listing, publicly traded share. Are you getting the point? But all of them are actually selling what? Food. Some are vegetarian, some are non-vegetarian, some are mixed. Correct? So, they are all selling food actually. It's a restaurant business. But the form in which the business registered is different. Now, if you register your business under Companies Act, your business organization is called as company. If I register my business organization under Partnership Act, I'm an AOP. Then it is called as partnership form. If I register my business organization under LLP, it's called as LLP. If I don't register my organization, but multiple of us are doing together, partners, but we didn't register anywhere, it's not partnership firm, it's AOP. Unregistered partnership firm is not correct word. Unregistered partnership, can I say unregistered company? Only if you register under Companies Act, it's a company. Without registering under Companies Act, can I say unregistered company? Correct. Same way, unregistered partnership is also not a proper terminology. It's association of person. Me and my friends associated. Are you getting it? And if I only do single person, I'm a sole, single owner, sole proprietor. Getting the point? Now, depending upon the law applicable for me, in some law, business must be audited. In some laws and regulations, business doesn't require audit. Suppose if I don't register anywhere my business, AOP, no law applicable to me. Audit is not compulsory. Company, if I register my business under Companies Act, it's a company and registration is, audit is compulsory. Companies Act says every business registered under my law. Every business which registered company license must require audit. So, depending upon the law applicable, the audits are two types: statutory audit, non-statutory audit. Able to understand? Now, statutory audit means audit mandatory under law for the time being enforced. Non-statutory audit, nothing but it's also called as voluntary. Non-statutory means not compulsory. Audit is not compulsory, but still voluntarily I'll appoint auditor. I want to know about my business. Getting it? Because my business is very big. Saravana Bhavan has so many stores. Saravana Bhavan has so many hotels, so many restaurants, so big. I want to know whether everything is working fine, every employee is working fine, every sale is accounted. I want to know voluntarily. I appointed voluntarily some auditor. It's called voluntary audit. Yes or no? Now tell me, in statutory audit, who will decide the framework for financial statements? The law will decide. In non-statutory audit, who will decide? Client will decide. Yes or no? In statutory audit, auditor must be unrelated person. Independence of appearance is compulsory. Companies Act says that. Whereas sole proprietor, can I appoint my brother as my auditor? It's voluntary I'm doing. What problem? See, if I appoint my brother, no. If you want to say violation, what I violated? There is no law. Non-statutory audit means no law. I am voluntarily calling my brother and appointing him as an auditor. He is verifying. My wish. It's my choice. I'm not doing as per law. I'm doing voluntarily. Yes or no? Able to understand? So that's the difference between statutory. So terms of engagement. What is it? Terms of engagement between the auditor and the client. In case of statutory audit, the law will fix. Not the client, not the auditor. The law will fix. The client and auditor can have additional terms. But can it be contrary to the law? Exactly. So the auditor should obtain the terms of engagement from the client which is in line with the law. It should not be against the law. Getting it? And here the auditor is highly independent. Whereas non-statutory audit, it is important for obtaining instructions in writing. It is always highly recommendatory in a non-statutory audit to get engagement letter. It's okay. Engagement letter I have not yet started. We'll discuss later. Getting it? Now, so need for the terms of engagement I'll speak later. Next, what is the benefit for voluntary audit? Is audit benefits only for commercial organizations? No. Suppose I want to give donation to one charitable trust. Okay. So if at all some auditor has been appointed, if at all he do audit and says the trust is really helping the poor people, whatever expenditure they are showing, spent on poor people, spent on treatment, health treatment of poor people, spent on poor people education, like that they are showing so many expenditure. Sir, we raised this donation, we spent everything honestly here, like that they are showing and asking me donation. If at all it is audited, will I have a confidence or not? So not only investment, when I am donating also I want to know whether they are showing authenticity. Yes or no? So in voluntary audit also we are having so many benefits. So that is what they are giving here indirectly. Able to understand? See, your reading style should change. You should read carefully. So audit is a special reference is necessary for non-profit institutions. Most of these have some rules to govern their affairs. Generally, a provision about requirement of audit is inserted in most of these non-profit entities. They register under some trust act where audit is not mandatory. But in the trust deed, no. Every business organization will have deed, no. Tell me, when two or more than two of us, we all together started a small business. Tomorrow if some dispute comes, it will be a problem, no. So what do we write today itself? Let us write on white paper some terms and you sign, I will sign. We will keep this at some third party. Yes or no, this letter. Tomorrow if any of us have dispute, we will go there and he will resolve. Correct? That is the reason why we are writing written terms and conditions. For trust also, same way deed. Partnership firm, same way deed. For company, what is the deed? MOA, AOA. They are nothing but deed of, the rights and duties of people incorporated it. Getting it? So, any surplus can only be used for the objective. Education institutions, hospitals, they will also have some internal rules for audits, for getting grants and all. So that is why, even though there is no mandatory audit under law, their internal rules and regulations say audit is compulsory. Partnership Act, audit compulsory? No. But if partnership deed says audit must be done every year, we must follow or not? Now, audit of trust. This itself can be asked as a separate question. Audit of trust itself. Write about audit of trust. They can ask you a separate straight question. Getting it? See, at every concept I'm discussing, how a question can be asked, I'm mentioning. Getting it? Audit of trust. By the way, this is colored notes which I'm using. Related to this, parallelly, you are having a black and white notes, which you can take printout also. If at all you have not, you can take a printout. There's an application called Race for CA and CMA. Getting it? So in that application, white color logo, it's Race for CA CMA, you'll find a logo, white, Play Store. You download that app. In the main menu, you go CA Intern November 2022, May 2023 attempt. Okay, which is an edition released in July. Recent July 2022, I released an edition. So that material will have 3 parts. That material will have 3 parts. All the 3 parts you download. If you want, you can take a print. That's a very reliable book. You can ever read. Getting it? Next. So audit of trust. Now, trust means what, first of all? Trust means, suppose, trust can be a private trust or public trust. Private trust means, suppose, there is a father and children. Getting it? Or grandfather is there. Maybe the child's parents, they were expired. The grandparents is there. He's having so much of net worth. You might have seen this kind of movie. The child will inherit the entire, he's the owner of the entire that net worth. But that fact the child doesn't know. Correct? Have you seen these kinds of movies? Now the child will get only after he became major. Only after he fulfills some dreams, he will get the entire empire. Arunachalam movie, Yes or no? Arunachalam will get the entire trust of Simhachalam only after he complete, only after he incur, only after he spent 30 crore in 30 days. This is what Simhachalam executed a trust. Simhachalam trusted whom? Rangachari. And the movie landa, all. Rudraksha poya umela edikilla, signature podumbo. Yeah, Ramba father. He is Simhachalam. Sorry, he is Rangachari. So, Simhachalam has trust on Rangachari. Executed trust deed. No, this is what private trust means. Yes or no? This is what private trust. So what Simhachalam will instruct Rangachari? Tomorrow my son Arunachalam will come. That time, put him the condition. That is the condition of the trust. What the condition? If he spent 30 crore in 30 days, at the end of 30th day, no property should be in his name. Single rupee should not be left out. Entire money he should spend, 30 crore. Only if he is able to spend 30 crore within 30 days, he will be eligible to spend the money later on. It's not difficult. Those days, see, now at least you can spend 1 crore one day easily. 1990s pa. How to spend 1 crore? It's impossible in a day. Getting it? So if at all we give him that kind of task, he will be eligible to spend the money later on. He will save the entire net worth later. That is how the movie was. They'll give one cigarette example. In the same movie, they'll give one cigarette example. This fellow Simhachalam will be, he's habituated to smoking. Okay. And one day his father caught. His father didn't punish him. He just threw him in a room. Almost some 100 packets of cigarette he kept. By morning you should complete all the cigarettes, he told. He said he loves cigarette. So this is the condition his father put. So he thought, oh my God, luckiest day in that, he felt. Night after 2 hours of, continuous smoking, he was irritated with the, entire cigarettes. By the morning, he decided the next day onwards he should not use 1 cigarette as well. So, because naturally that hatred will come. Anything that we overuse, we naturally, later we will be reluctant. Our body will not support it. Exact logic. So private trust means exact cinema. In that they will show the concept of private trust. Getting it? Private trust means what? It's a trust between, trust deed. Trust means trust deed. Trust means what? Nambikam. Getting it? Out of the trust I'm having on you, I'm executing the deed. Take this empire. Protect this empire. Once my child comes, tomorrow hand over him after he satisfy all these terms and conditions. Now, I gave you so much of empire. No. Every year, this fellow on whom I trusted may do fraud. No. I put a condition. This trust must be audited. That is called private trust audit. Now, likewise, we have public trust. We have public trust where multiple people involved. Most of the public trust audit is compulsory. For most of the public trust, audit is compulsory. Now, how these trusts are governed? Indian Trust Act. There is a Trust Act, is that the Trust Act governs. Now, Trust Act, no. Does it govern private trust? No. Private trust is their own this thing. Trust Act will not involve. But all public trust must be audited. Why? Public money is involved. That's what. Okay. The trust may be public trust or private trust. They do business or they may do something else. You know, there are generally two types of beneficiaries. Reminder, tenant for life. Reminder means what? If you spend 30 crore in 30 days, entire 3000 crores is yours. Reminder, he will become. Getting it? Tenant for life. If you want 30 crore, take 30 crore and enjoy. Ignore 3000 crore. 3000 crore will go for charity, all that. Getting the point? If you want 30 crore, take 30 crore. You can enjoy 30 crore throughout your life. Getting it? Then tenant for life. Tenant for life means what? Whatever property you can only enjoy, but you can't take it. Getting it? Happily enjoy. Take this car throughout the life. For the next 10 years you will use it, but you can't sell it. Use it whatever the way you want, but you can't sell it. Means tenant for life. You can only use it. When நம்ம building rent கொடுத்தோமோ tenant, அவன் sale பண்ண முடியுமா? You can use it. Tenant means what? We only give usability rights. Remainder means what? After agreed period, you take it. It is yours. Do whatever you want. That's what exactly tenant for life remainder means. Understood or not? Getting it? Generally, in trust to know, why audit is important? Because who are the trustees? Widows, minors. In Simhachalam movie, who is the trust? Who is ultimate beneficiary? Arunachalam is beneficiary. Getting it? But Rangachari discovered him after he became major. But logically, you need to protect him from the minor. Getting it? Who cannot understand the accounts, who cannot criticize the accounts. They don't understand anything. So audit is compulsory. So audit of trust is non-mandatory. Yet, most deeds contain audit point. Private trustees like Rangachari recognize the advantage of audit for their own interest. Tomorrow if something goes wrong, everyone will blame Rangachari. Correct? Yeah, since any mistakes in accounts for which they might be personally liable will be pointed out. That's it. Able to understand? This question can be asked as, write about audit of trust, 6 marks question they may ask, or 4 marks question they may ask. You have to write these points. Understood or not? And any of this sentence can be asked as a correct or incorrect statement. Clear all of you? Next, advantages of audit. Simple question, I'm not doing. Okay. Next, there are limitations in audit. I'll come back to this limitations point later. Then, what should be the quality of an auditor? Auditor eppadi irukano? Ava lakshanam eppadi irukano? In Tamil also we'll call lakshanam. Quality na lakshanama. Oh, nice. Okay, fine. So, what should be the quality of an auditor? What are the qualities? Qualities are broadly 2 types. Personal qualities, work-related qualities. Work-related qualities are called as professional or technical. What are they called as? Professional or technical. In exam, they'll ask you, write about professional qualities, write about technical qualities. You should write like this. Auditor must have knowledge of accounting. Auditor romba nalla sir, ana accounts edu theriyadu. So, is it good? Is it okay if at all the person is good? No. So, knowledge of accounting, knowledge of law, knowledge of financial and management, and above all, without understanding client business, can you do audit? When a Reliance company audit panni vandita. Example, I did audit of Reliance company and came. You asked me, so what you did? I saw only accounts. What the company? I don't know anything. Tell me, without understanding business, how can I do audit? Now you may have a doubt. Sir, why should we understand business, sir? We are dealing with accounts, sales, purchases and all. See, I went to the go down. I saw whenever they purchased old stock, first they are selling it. Latest whatever they are purchasing, they are keeping it in the last side of the go down. So that old stock they are selling it first. Now, which method they are following? Only when I saw the business, I understand FIFO method they need to follow for valuation. Without looking at the business, how can I understand FIFO is correct? Logically correct or not? Now tell me, for a furniture company, furniture fixed asset, current asset. For a furniture trading company, whatever chairs, tables they are purchasing, is it stock in trade or fixed asset? For a normal company, what is chairs, tables? So, if I know nature of business, what business they are doing, then only I can properly classify is it fixed asset or current asset. Correct? Huh? Without understanding what they are doing, how can I verify the financial statements? For one company, what is capital expenditure? For another company, it's revenue expenditure. For one company, what is big amount? For another company, it is small amount. For one company, what is current asset? For another company, it may be a fixed asset. So if I have to understand the accounting process correctly, I need to first understand what business they are doing. For a real estate company, purchase of land is an inventory. For a normal company, purchase of land for business purpose is a fixed asset. For value appreciation is a investment. Only if I understand why are they doing, what business they are doing, I can understand the accounting process. Otherwise, why will I understand? Easy. So I need to understand knowledge of client business. All the 4 points compulsory in exam. They'll ask you, write about definition of audit and what qualities auditor should have. Getting it? Auditor is concerned with reporting on financial matters of the business. Financial matters inherently are set out. Problems of human fallibility of tendency of generally preparation of financials involves errors. Getting it? Hence, there is a need for certain qualities. If you want to discover an error, first you must know how error can happen. So these technical qualities. Apart from this, there are some other personal qualities that you must have. You must have basic human qualities. The manishiya and the madri kelpanga. Getting it? So you must have certain basic qualities. What are they? Tact. You must be tactful. You must have caution. You must be careful in doing the work. You must be firm, means strong, bold, confident. You must have good temper. Getting it? Suppose a client has wrongly valued. Okay, if you speak like this, what happens? The client will never appoint you again. You must have good temper. You must have integrity, means what? Honesty and discretion. You must know how to take a decision. Industry, you must have knowledge. You must know how to judge. You must know how to, is it right or is it wrong? Is it correct way of accounting? They're doing business FIFO method and they're not following FIFO method in valuation of inventory. You must have good judgmental skills. You must have patience. You must be having clarity. You must be reliable. Client pon on a bank audit we go for bank audits and we will be given cash physical verification. Manager pakra on the side 2,000 rupees board. You must be reliable, no? Honest, no? These are all personal qualities. Now tell me, is this qualities required only for auditor? Are these qualities required for doctor? For every profession, right? These qualities are given by Code of Ethics. What is it? Code of Ethics. Code of Ethics is given by whom? Institute of Chartered Accountants of India. But remember, the Code of Ethics is there for every industry. You have seen Arjun Reddy movie, right? Maybe Kabir Singh movie, right? Or maybe some other movie, right? The doctor will be suspended in some movies. Why? He violated Code of Ethics, they'll say. What violated? Because he drank, kudichit operation panniyach. Na operation panna correct irukku adu paaru. Na kudichitena kudukka bole anna. Can he claim like this? He can't. Why? Because if at all it went right, everything is fine. What if it goes wrong? So there is a code of ethics for engineers, there is a code of ethics for doctor, there is a code of ethics for lawyer, there is code of ethics for auditor. For every profession, including teaching, everyone has certain code of ethics. That is called moral code. Able to understand. So qualities of auditor. Here the moral code is fixed by ICAI. For doctors, the moral code is fixed by Medical Council of India. For lawyers, moral code is fixed by Bar Council of India. Like this. Understood or not? So moral code means what? Ethical requirements. What are they? Ethical requirements. Auditor must be integrity, honest, sincere, straightforward to the professional work. He shall not be. Don't associate with reports, with statements, communications, other information which is materially false, which is provided recklessly, where there are omissions due to misleading. Where there are omissions and they could be misleading. Can you sign these kind of documents? You must be honest. Don't sign something wrong. Don't sign something which is prepared recklessly. Correct? Next, objectivity. What is objectivity? Unbiased. When you're doing the work, ignore what relationships you have with him. Getting it? Unbiased. Getting it? So you should be fair, without bias, without prejudice, impartial. You must be impartial. When I'm teaching the class, I must cover every student's interest. I must be impartial. Without bias, I should clarify your doubts, everyone. Yes or no? Next, confidentiality. Auditor, no? You are looking at the financial data. Not just balance sheet P&L. That is public document. But you are going inside the company. You are seeing what is happening in the company. You saw books of accounts. You saw so many confidential documents. Can you leak it outside? You should not. So, should not disclose information collected by him during the course of professional work to any third party. But if client permits me, can I disclose? Without authority from client, don't disclose. But if client tells you, okay, no problems are disclosed, I can disclose. And tell me, beyond all this, what is most important in order to do audit? You must know how to do audit first. Getting it? You must have professional competence. You must be careful in doing the work. Professional competence means it requires auditor maintains knowledge and skill at the level it is required. Yes or no? Not only that, due care means what? Act diligently. Act in accordance with standards. Diligence means what? Responsibility to act carefully, thoroughly, timely basis, in accordance with the requirements of the work, requirements of the engagement, requirements of the assignment. Clear? Now you're able to understand all this. Have you all read this previously? Next, above all, one more thing, professional behavior. It is also ethical requirement. I think it. So the auditor shall comply with laws and regulations and avoid any conduct that he knows and should know might decredit the profession. Don't bring disrepute to the profession. Getting it? You know, for all this, if at all you violate, we have punishments. All the punishments we will learn at CA final. We have something called Code of Ethics, professional ethics. You know, suppose no, if a CA, if at all I'm alcohol, if at all he drink alcohol and make an accident. And at the night, especially police were caught him. And a media person also there. Mr. Ram Harsha made an accident. They will not write like this. A chartered accountant made an accident. Correct, huh? This is how they are writing. A doctor made an accident. So, only when the word is used, professional word, then only that news caught attention. Now tell me, am I bringing disrepute to the profession or not? Even if you do bring this kind of disrepute, I say will suspend your membership. You know that? Sir, the personal, it doesn't matter. Newspaper highlighted your profession. Why you disclose that you are a CA? Correct? Na disclose pannala sir. In car pinnad sticker irukku. Adanal the sticker poda kudadu. Okay, va? Fine. Next. All of you understood? That's it. So, with this, ethical requirements also be understood. Next. Short note on skepticism. Nothing but. So what is skepticism? Many of you have read this. Have you felt this? What is skepticism? Skeptic. Skeptic. Getting up. Skepticism means what? Questioning mind. What is it? Questioning mind. Means I should question everything. Suppose, simple logic. See, this is skepticism is not something we learn here and apply. It is something we already have inbuilt. Right now, whatever I'm teaching, are you correlating in your mind with what you learned? If I teach something wrongly, immediately correct? How are you able to find that something, if I teach wrongly, how will you find out? Because you're questioning indirectly whatever I'm teaching. You're not only listening, you're not only critically assessing whatever I'm delivering, you are indirectly checking it with the material you're having. Getting the point? You are alert to know throughout. Skepticism means that. Being alert. Getting the point? Careful in verifying the evidence that we are getting. Here you are carefully analyzing whatever I'm teaching. So that is called skepticism. So professional skepticism means being alert. What are the examples? They'll ask you. Write about professional skepticism. Give 3 examples. 3 marks question they'll ask. This is one. Audit evidence contradicts with other audit evidence obtained. What audit evidence contradicts with other audit evidence? When I go and saw the go down, first old goods are sold. Whatever new goods that are coming into the godown, they are keeping at the back side. Old one only first they are delivering. So which means, I was thinking, okay, client is following FIFO method of stock. So his valuation is also FIFO. I came the books of accounts. They are following LIFO method. Now tell me, books of accounts are showing LIFO. Reality, what is happening? Don't you be alert in this case? Will you leave it? It's okay. Don't you be alert? So being alert. When evidence from one source contradicts with another source or conditions that indicate possible fraud. Getting it? So the go down, CCTV cameras were not working, security guard is not there. Definitely when this kind of scenario is there, will you suspect something is wrong? Exactly. So skepticism, is it necessary for throughout the audit? Yes. Why it is necessary? To reduce risk of overlooking. You should not casually go into the audit. You should be careful. Careful, na seriously kudukudadu. Normal, alert mind. It's a mindset. Getting it? Don't believe anything blindly. That is what the point is. Don't believe any blindly. If client says something, sir, we have made this much profit, don't doubt him. Keep your doubt inside. Really solo kuda thiruppi. And you should apply skepticism only in professional context, not in the personal context. So when a client tells you something, professional context, you should question, is it right, is it wrong, like that. Get it? Don't believe it. Ask for proof for everything. That's it. Now, by the way, tell me, should I doubt the client always? Should I always doubt? I mean, should I look at the client as a thief? No need to suspect. But if you come across any suspicious transactions, any suspicious elements, then investigate. So, the auditor may accept books of accounts as genuine unless the auditor has reason to believe the contrary. Nevertheless, auditor is required to consider reliability of information to be used as audit evidence. Whatever client is giving you the data, always check, is it reliable, is it accurate or not. Getting it? If at all doubt, or if there is a possible fraud, investigate. Getting it? And determine what modification or additions you have to, what additional work you have to do to resolve the matter. Getting the point? Next. The auditor cannot be expected to disregard past experience of honesty and integrity. This sentence can be asked as a question. Comment. What you will read? This sentence is asked. The last sentence. The auditor cannot be expected to disregard the honesty and experience and integrity of the entity's management and those charged with governance. Full stop. Explain 4 marks. What? You need to write nothing but professional skepticism answer. Look, question will not be as you expect. Question will be always unexpected. They may pick this particular line and ask you to comment. What will you write? If you never say in this line, what will you write? Understood my point? So this is skepticism. Because of skepticism, I'll be careful in doing audit, all that. But remember, skepticism is not something I explicitly exercise. It is something implied in our system. Getting the point? Dog has a natural skepticism. Some unknown person, if it sees it, start shouting, yes or no, barking, yes or no. So it will not. That is natural. Skepticism is a natural element in every one of us. That is what called as common sense. Able to understand? That's something called as common sense. Then you must also have professional judgment. Professional judgment related matter is not there in the icai material, but I only gave just for your understanding. Read it later. So that is professional skepticism and professional judgment. Then after that, we will have 220 related content. But before this, I have to finish inherent limitations of an audit. Inherent limitations of an audit. Now tell me, can I do audit 100%? Can I do 100% verification of all the transactions and balances? All the transactions and balances, can I do 100%? Means obviously no. See, you take this one, Reliance Industries or anything. Reliance Industries Limited is having so many businesses. So many businesses. Under one company name only they have multiple businesses. See, Jio, they have a separate business now. But earlier, they used to have only one company, but multiple businesses they are doing. Why to that extent? ITC Limited. ITC Limited is having hotels business. Is having this, a foodstuff business. Biscuits, packets, all that, bingo and all that. They're having, cigarettes, tobacco business. They're having agriculture. They're having cosmetics. So many businesses they're having. Correct? Now tell me how many thousands, crores of invoices they will have. How many you will verify? ITC, you are the auditor for ITC. Some ITC turnover is some 2.5 lakh crore. This 2.5 lakh crore is coming from 10 or 12 businesses. Each business is having 100 and 150 stores across India. How will you verify them? Will you verify each and every invoice, each and every bill, each and every customer signature? Not possible. So what we'll do? How we will do audit? In sample. Based on sample, but are we giving opinion on the sample? We are giving opinion on the entire balance sheet P&L. But are we verifying entire balance sheet P&L 100%? We are taking only sample. Based on sample, we are giving opinion on the population. Which means, if I say everything is true and fair, absolutely everything is true and fair, reasonably everything is true and fair. First of all, I myself did not verify 100%. How can I say absolute opinion? How can I give absolute assurance? I can only give reasonable assurance. Why am I giving reasonable? Why not absolute? Because I have limitations. Because I have limitations. Can I overcome these limitations? Impossible. Can I sit and verify 100%? Impossible. But that's why they are unavoidable, inherent. Inherent means what? Unavoidable. These are the limitations which auditor is having, which cannot be avoided. It's impossible. Unavoidable limitations. And that's why the level of assurance that we are giving is only reasonable, but not absolute. Only in investigation, we will give absolute assurance. Audit versus investigation means what? How audit is different from investigation. 4 marks question they'll ask. Getting it? In investigation, we don't do investigation of entire financials. Suppose in purchases some fraud happened. They will appoint separate investigator. Sir, please come detective. Please investigate. These are the staff. Try to investigate everything and then give me a report. That's an investigation report. Now tell me, he will go in depth in investigation? Because for him only one work, purchases. Now auditor, can he do the same in-depth work like investigation? I am not investigator, I am auditor. I only verify sample. Based on sample, I'll give opinion. Now you may get a doubt. Sir, we are verifying hardly 1% out of 100. Based on that, we are giving opinion. Why to verify that 1% also, sir? Didn't you get a doubt? Sir, why should we verify that 1% also? Why can't we verify 100%? Anyhow, we are not verifying 99%. Only 1% we are verifying and giving. We are only saying it is reasonable, not absolute. Even after we do fraud, so many mistakes will be there, no? Do we discover all the mistakes? No, possible. No, it is impossible. Now, why are we doing audit, sir? Anyhow, he is not discovering. Why? Something is better than nothing, no? Correct, huh? Something is better than nothing. Able to understand? On the same logic audit. Fundamental logic. At least if I give reason, see, simple, ma. You're having a fever. Or we are having a fever. We will not die on the next day immediately. But still we go for a hospital. Just to get the confidence. Hospital pona and adhe tablet kudupa. Medical shop pona adhe tablet kudupa. 99% of the cases this is same. Only 1% exceptional cases only patient condition will be severe. But 99% of the cases, no need to go to hospital, but we can directly go with the medical shop and get. But still, 50% of the patients will prefer to go hospital. Why? To get reasonable assurance. Correct? Exactly audit. Audit is like a medicine. Getting it? It's a medicine. The medicine can only, stop temporary all these things, but cannot cure completely 100%. It is you who have to take ultimate care. You'll give only a reasonable assurance. If that is also not there, think of the fraud levels. Like because of this much of verification and all going on independent regulatory, even if it is there also so many frauds are happening. If that is also not there, if nobody is coming and verifying, obviously in examination also, 50 students are sitting, only one examiner is there. Only one valuation. For each student, one valuation shall be given, no? Valuation is in this line, that side line students are copying. If he is coming that side, this side line students are copying. Can you say, when the valuation is remove panunga? Can you say that? Exactly, same logic. Getting it? We will not verify 100% absolutely. We verify at least reasonable. At least if somebody is there, we will act diligently. So now, there are many limitations. So how the standard classifies limitation? Nature of financial reporting, nature of audit procedure, timeliness of cost benefit analysis, and other limitations. These are the limitations. I'll continue post lunch. Getting it? Yes. So we'll continue after that because this will take some 5-10 minutes discussion. Then almost the chapter is major over. We still have few more topics. That's it. This chapter will be over. So are you all comfortable with the speed? All of you? That's it. Afternoon we'll start much more interesting topic. So we are actually discussing inherent limitations of audit, right? And what we understood is, no matter what, it is impossible for auditors to obtain 100% assurance. It is not possible at all. And the auditor can only get reasonable assurance, but cannot obtain absolute assurance. And the reasons are as below. The conceptual part I have already told. So just we'll look at the reasons. So one reason is nature of financial reporting. One reason is nature of financial reporting. Tell me, in the financial statements, we have so many amounts, right? Incomes, expenses, assets, liabilities. Are they 100% accurate? First of all, depreciation is there. It's an estimate. Correct? Provisions are there. It's an estimate. There are many elements of the financial statements which are estimates. Now, financial statements themselves are not 100% correct. Getting it? How come the auditor's report on that can be 100% accurate? Logica. The financial statements itself is not 100% correct. The financial statements themselves are not 100% reliable. So how come we give 100% assurance on the financial statements that they are 100% true and fair? Logical. So nature of financial reporting itself is a limitation. Getting it? Many items involve subjective decisions. Many items involve subjective decisions. There is a degree of uncertainty. When I say plant and machinery useful for 10 years, will it exactly work for 10th year and then stop? There is an uncertainty, right? It may stop at the end of 8th year, or it may go beyond 10 years. But some sort of uncertainty is there, right? See, when do we worry? When the uncertainty is very high. Then only we will be worried in audit. If accounting estimate is reasonable, that is fine. Air conditioner useful life 7 years they used. It's okay. It's reasonable estimate. Able to understand. Next, another we have limitation is nature of audit procedure. The way we do audit. See, like in some cases, one way of audit procedure will give one type of evidence. Another way of audit evidence will give another type of evidence. Very simple. We have debtors or creditors. Everyone know external confirmation? Have you heard? Yes. What is external confirmation? Direct confirmation, third party confirmation. What is that? As on 31st March, in our client balance sheet, there is a debtor receivable from so and so suppliers. Sorry, so and so, agencies. Some 10 lakhs is there. We sent a confirmation letter. Sir, I am the auditor. In our client books, where I am acting as an auditor, we discovered that you are liable to pay some 10 lakh rupee. Please give me a confirmation whether you are liable to pay 10 lakh rupee or not. So I am exercising external confirmation regarding existence of the balance. There is a balance existing in my books of accounts. How much? 10 lakhs. Really 10 lakhs balance existing? Is really debtor outstanding? I want to know. I sent a confirmation. He replied, yes sir, we are liable to pay 10 lakhs. Now I got a reply. Now tell me, debtor confirmed that he is liable to pay 10 lakhs. Does it mean he will guaranteely pay later 10 lakh? Can I see here? I got a confirmation from third party. Yes, he is liable to pay. He also agreed. He agreed regarding existence. But is there any guarantee that do we recover in future? So the confirmation provides only regarding existence, especially in this example. But does it guarantee about recoverability? No. But in the balance sheet, we are showing it as an asset receivable. Yes or no? We are saying it is recoverable in future. But who knows whether it will be received or not? There is a limitation here, yes or no? So the level of evidence that we obtain, the nature of evidence that we obtain is only persuasive. What is it? Persuasive. Means we can only convince. We can only convince based on the evidence. Yes, there is a debtor. He also agrees that he has to pay. It will be recovered. But is there any guarantee that it will be paid by the third party for sure? Can we even verify that? No. That's another limitation. The nature of audit procedure, the method we follow sometimes may provide limited evidence, but it will not provide 100% dimension. 360-degree dimension evidence it will not provide. Are you getting the point? So, normal audit procedure may not be effective, especially if there is a fraud. Getting it? Fraud detection is not possible. And further, remember, do we discover, is it necessary for all of us to discover all the frauds and errors? Not necessary. So audit is not an official investigation, getting it, of the alleged wrongdoing. Accordingly, it is not, there is no legal powers like power of search and all for the auditors. They cannot go and do 100% investigation. There is no legal power given for the auditors basically. But remember, in Companies Act, we have right to inspect books of accounts. We have given power to search under Companies Act indirectly. But that power is useful for us only for the purpose of audit. So the nature of audit process is determined by professional judgment. Whether debtor balance is there or not, I want to know as on 31st March company showing this much debtors outstanding. I want to know really that much there or not. So I sent a third party, I directly made a call. He confirmed that he has to pay. Now here, what is the audit process I did? External confirmation. By applying judgment. Now here tell me, I only got confirmation that he has to pay. But later, will he pay or not? Who knows? These are all the limitations. Able to understand. So, look at. After I verified all the financial statements, I told people that everything is true and fair. Does it mean tomorrow the debtor will guarantee pay? This is limitation. Look, take audit opinion only as reasonable assurance. Don't take it absolute. He is not guaranteeing about future. Based on past, he verified something and he is giving opinion. Next. Now what is audit versus investigation? This itself can be asked as a separate 4 marks theory question. Getting it? So they'll give you here, they'll give you this statement. The audit is this statement they'll give you and ask you to comment. Audit is never started with a preconceived notion about state of affairs, about wrongdoings, about some wrong, about something wrong which have been committed, about some wrongdoings have been committed. Getting it? So audit will not start about this preconceived notions. Hey, something went wrong in this company, something is happening, that is why they appointed me. No, nothing happened. You are appointed every year. Every year you have to comment about books of accounts, financials, are they fair or not? Getting the point? We are not doubting. If at all we doubt, why do we invest our money with them? If at all I doubt Elon Musk, why will I invest in his company? I will not invest. No, I invested. He is good. But then I want a precaution. I have to take a precaution. I cannot trust him 100%. So I want an auditor. So audit will not start with a preconceived notion that something went wrong. You need not doubt the client. You need not suspect the client. Trust him. But you be careful. You be skeptical. Be alert. Maintain alertness. Be skeptical. Try to identify where and all loopholes were there. Getting it? And if at all you come across something, maybe the top management is very good, but some middle level management may be having a fraudulent mindset. Able to understand? This regarding this fraudulent mindset, all that we'll discuss in fraud chapter. Clear? Next, another limitation. Another limitation that we have is we need to balance financial reporting, timeliness and cost benefit. Remember, if you want to do 100% audit, it is impossible for you to cover. You have to do audit with a very limited period of time. Within a limited period of time. You know how many days we spend on audit? If it's a very small private company having 10 crore turnover, we hardly spend 5 to 7 days in real life audit. If it's a public company or listed company, we will be spending some in the entire year 45 to 50 days. Some 5 or 6 members will go. DMart itself, you take Avenue Supermarts or Reliance Industries, you take any industry you take. They're having some 3-4 lakh crore turnover. And this turnover was generated across some 500 shops across India, stores. And these stores were billed inside the store. Only billing persons were in each store were 3 to 4 persons. For booking the revenue, for billing the revenue, approximately 10,000 staff is working. Only for billing. Imagine, this is only sales. What about purchases? What about stock? What about transport people? What about administrative employees? Imagine the affairs. So is it possible for me to verify 100% everything? Not. So I need to, tally between time and cost. If at all I want to do work more amount of time. See, remember, cost means not money. Resources consumption. Cost means what? Resources consumption. Articles. I am taking 2 articles. Am I incurring some cost or not? Their time. Yes or no? So the auditor cannot escape. By the way, one more thing. What this point again says is, you cannot escape saying, I don't have time. That is why I did not even obtain reasonable assurance. See, can you argue, I don't have time, and moreover, the fees, whatever client is paid, is not correct for me, is not enough for me to give absolute assurance. Can I argue for this? For absolute assurance, I can argue. How can I give absolute assurance? I don't have time. Can I argue the same for even giving reasonable assurance? No. Giving reasonable assurance is your minimum responsibility. Are you getting the point? Giving minimum responsibility. See, I want to get sufficient appropriate evidence. Inventory, some go down, it is there. I need to at least go there and physically see sample, right? May not 100%, but sample at least I should say, right? Can I skip sample verification also saying I don't have time? I cannot. So minimum work you need to do, reasonable assurance you need to get. So the auditor cannot escape saying time and cost as a reason for not obtaining sufficient appropriate evidence. Getting it? The matter of time, the matter of difficulty, the matter of cost is not a valid basis for the auditor to omit an audit procedure. Debtors, I want to get external confirmation. You must get. SA 505 says, wherever possible, get external confirmation. In one audit, you did not get external confirmation and you are saying, I don't have time. Client fees are seriya pay pannala. He didn't pay me fee properly. Tell me if I do audit at free of cost. First, suppose a temple is there. They want to appoint me as an auditor and I don't want to take fees as a gratitude, whatever. Getting it? Out of devotion, whatever. Just because they are not paying fee, can I directly sign the balance sheet P&L? Whether you take reasonable amount of fee or high amount of fee or you're not taking fee, doesn't matter. You have to do your minimum work, yes or no? You have to satisfy with the evidence, yes or no? Yes or no? Only if you satisfy balance sheet P&L are really true and fair, then only you should say they're true and fair. Without verifying they're true and fair, can you give opinion? Let's layman example you take. Suppose there is a phone you want to buy. Or a friend of you have approached you and asking a phone. You both went to a mobile store, some demo piece is there. You both want to verify that and then accordingly take a decision whether to buy it or not. So mobile shopkeeper, he just permitted you to touch the phone once. You just touched it for a moment and sir, no buy sir. You got evidence, no. This is how phone looks like. Will you be satisfied? What will you say? Sir, how much time you need to verify a phone? How much time you need? In order to decide, you want to see the phone features, all that. How much time you will take? 20 minutes. How much time you will take? 20 minutes only. How much time you will take? So depends. Correct? 20 to 30 minutes. You need to check all the features. Suppose if I give you 5 minutes time. Tell me now how the phone is performing. Can you say like that? Unless the phone is worst performing phone, within first 2-3 minutes only we can figure out. Yes or no? Within first 2 to 3 minutes, it's a preliminary assessment. Getting the point? So, what will you tell to the shopkeeper? Okay, let me operate enough amount of time. Let me see every feature, 15, 20 minutes, 30 minutes, maybe half a day. Or else, you verify some half an hour, another customer is waiting, you will tell him, I'll come back evening once again. Until you sufficiently satisfy yourself, will you give your opinion on the phone to somebody else? Like, have you seen YouTube reviews on phones, cars, bikes? They'll give you the review after using it for 2 or 3 days. Somebody will use 3 days, somebody will use 1 week, somebody will use 1 month and then give review. How much ever time they take, that much level of assurance they can give, correct? So what is sufficient appropriate evidence for the auditor? Same way, auditor also, I am asking auditor, sir, how is the balance sheet P&L? Are they right or wrong? You verified 1 voucher in purchase. Only 1 voucher you verified. Can you give your opinion? You verified 10 vouchers. Can you give your opinion? But better than 1, right? You verified 100 vouchers. Will your confidence increases? You verified 250 vouchers. Will your confidence increases? So you felt 250 vouchers I verified until this 250th voucher also, I did not discover single mistake. All this 250 randomly I selected. Across 10,000 bills, randomly I selected. Nothing, no mistake at all. Now, will you satisfy there or not? It's enough. Even if I verify 200 vouchers, answer is saying unnecessary. So, 250 is enough for me. So, this is sufficient appropriate. Sufficient appropriate audit evidence. What is sufficient? What is appropriate? Who will decide? No one will decide. It is your perception. You should prove somebody. Tomorrow when someone questions you, hey, you didn't get sufficient appropriate evidence. You did not do audit properly. You are punishable. You are negligently providing services as a profession, you are bringing disrepute to the profession. Somebody is blaming you tomorrow. You will show them your papers, working papers. You will show them, see, I have verified enough number of vouchers. 250 vouchers I verified. What else I need? In fact, 100 enough. Still I verified 250 vouchers. See how I selected these 250 vouchers. Will you argue or not? You must get that. You must obtain that much quantum of evidence with which you can defend. Are you getting it? If you think with the 10 vouchers you can't defend, then get 50. If you think with 50 you can't defend, then get 100. Are you getting the point? But there is a limit now. What is reasonable? Exactly. Can you say to the mobile shop holder, give me 6 months of phone, I'll use and then buy? It's not possible. Same way audit also. Getting it? Next up. So the relevance of information, thereby its value tends to diminish over the time. Remember, we are auditing historical data. That information, whatever circumstances that are prevailing at the time may not be prevailing now. Able to understand? So the value of information as the time passes by diminishes. So you need to strike a balance between reliability of information and its cost. Like you, how to what extent you want to update. See, suppose debtors, no, I want to check existence and debtor confirmed me. Yes sir, we are liable to pay. Will he tomorrow pay or not? Will you go, entire your team will go to that debtor office, will you see due diligence, how far he will pay? Is it necessary? Not required. See, I'm an auditor of one company. This company has sold some goods on credit to some customers and the customer account is showing in the balance sheet. Now company, before giving credit, company internal people know, they did a credit worthiness analysis. Can we give credit to the customer or not? You go and ask any goods on credit, do you think they'll give you? No, they'll do credit worthiness analysis first. First they will check whether you are, who are you? Give me your Aadhaar card, give me your PAN card. You know, what is your business? Give me your business profile. Where are you operating? For how long you're operating? Show me your GST return. If everything is super, then they'll give you credit. That too for 30 days. See how company is giving credit. Check it out. Company is giving credit to only those customers who are having credibility. Now, they will give credit. They sold goods on credit, 10 lakhs outstanding. You got confirmation that 10 lakhs is agreed. Will he pay tomorrow? After 2 months, his due date is coming. Will he pay that time? Will you go and sit in the debtor's office until he pay? So, it is not possible for you to do all that. Your resources will not support. Next. So, due to many other external factors, audit shall be completed within a limited period of time. So, this is also one more limitation. Able to understand, all of you. So, you cannot say time, cost, difficulty as a reason for not obtaining sufficient appropriate evidence. Don't say. For absolute assurance, you can always argue. Hey, absolute assurance, why you didn't give? Time is not there, you can say happily. No problem. But for giving reasonable assurance, you cannot. So the matter of time, difficulty, cost is not a valid basis for you to omit and proceed so. Or can you satisfy with less than persuasive evidence? What is persuasive? You must at least get convincing evidence, correct? You must convince, no? Until you get convinced, you have to do audit. You have to verify the things, correct? See, before convincing, will you buy the phone? You may convince after half an hour. You may convince after 45 minutes of verification. But first you must convince, correct? Can auditor obtain less than convincing evidence? Auditor should obtain how much evidence? Whatever the number where he will convince. Convincing evidence means what? In audit, technical term is what? Persuasive. Can auditor obtain evidence less than persuasive? Not permitted. Persuasive is convincing. Convincing means sufficient. Sufficient appropriate evidence. It is mandatory. Able to understand. That's it. Then still apart from this, there are various other limitations. In July 21, 3 marks question has been asked. Write about other limitations, which are a limitation as part of audit. Getting it? Like especially frauds where top management involved. Going concern related situation. Can you predict all this? In future, what is going to happen? Who knows? Suddenly something goes wrong. I will try to predict going concern next to 12 months. But who knows? Next. Related party relationships. Examples only. Related party transactions and all. Whether some frauds might happen in related parties. I will discuss about related party point in fraud. Getting it? Then non-compliance with laws and regulations. How do I find all this? It's impossible. Are you clear? These are all limitations, inherent limitations. That's it. Next. So almost we have completed part 1 in this chapter. Next, actually this will come under part 2. Engagement acceptance. This topic also comes under actually part 2. This topic also you can keep it under part 2. Not a problem. Even in one also it is fine. But keep it under part 2. This is related to engagement acceptance. Now what is this? Suppose tomorrow you cleared CA. Okay. You opened up a CA practice. A company client approached. One of the director in a company approached you. Sir, we are looking for auditors. When we Google search, Your location is showed nearby. Our company is also in the next street. Okay. So we saw Google reviews also. Your client have given so many good reviews, positive reviews. So just, the company director came and explained you everything. Now they want to appoint you as an auditor. Will you directly accept? Won't you check some points? What points you will check? Qualifications and disqualifications I should check. But before all that, first, on the client, integrity of the client you should check. Integrity of the owners, integrity of the key management, integrity of those charged with governance. Now, who is those charged with governance? Who is management? First of all, understand management means everybody. In Reliance Industries, Mukesh Ambani part of management. Correct? Mukesh Ambani is part of management. In Reliance Industries, approximately 2 lakh employees are working. Is every employee responsible for governing the company? Who is responsible for governing the company? In case of company, board of directors, key managerial persons, top management, they are called as those charged with governance. What is governance? Accountability, authority, responsibility. Governance is not about, top management means not just authority, they are accountable. Yes or no? If something, a big, scam happened in Reliance, everybody will blame whom? In the Reliance digital store, on the billing person, will you blame him? You will directly blame the top management. They are the one who are accountable, ultimately those charged with, responsible with governance. Able to understand. So those charged with governance means only top management. Management means everybody, including TCWG. Correct? So in audit, wherever they say communicate with TCWG, you have to communicate those charges. Communicate to management means maybe top, maybe middle, maybe low, depends on whom you have to communicate. Even in SA 580, we have a standard. There it clearly says to whom auditors should communicate. We have a clear discussion. We'll discuss there. Are you clear? All of you. Now, so first point, you will check what? Honestiness. Then that company is engaged in some technical business, stock market, commodity business. That company who approached me. Now tell me, without checking my work exposure knowledge, can I accept that work? I studied audit subject, but I never did this kind of audit. Can I blindly accept? Nalla fees kudutittirukka client. Can I blindly accept by tempting for the fee? If at all you accept the work which you do not understand or which you cannot do, what will happen? Your credibility will affect. Correct? So first I will check is it good or not. Then I will check my competence. Then after accepting this work, I need to do audit. No. For that, can I alone go and do audit? I need team. No. So should I check my resources, staff, manpower availability? Yes or no? First of all, do I have time to do audit? This company is asking 55 days to do audit. 55 days I can't go and sit. So I need to look at the requirement of resources. Correct? Third, as you all said, now legal I will check. Legally can I accept qualifications and disqualifications? Able to understand. Suppose a company client whom I already an auditor. They are asking me, sir, please continue next year also. So they are asking me to continue. Actually, I thought of withdrawing. But suddenly they came and asking once again, sir, please continue. You're a very good person. Something they're saying. Now tell me, all these points, same points, I'll check whether I continue or not. Is the management good? All last 3 years I'm working, they're good. I have resources. I'm competent. And ethically also I'm fit. Can you check past experience also? Because you already associated with him. So significant matter that have arisen in previous engagement and their impact on continuing relationship. In case of existing client who is asking you to continue, you will check what? Important issues arisen in past. If it is new client, only 3 points. Integrity, my competency, ethical requirements. That's it. So that's why you see the question. Mention any 4 points which help the auditor in accepting and continuing client relationship. Able to understand this? You might have seen this earlier. Have you seen in this perspective? Getting it? So before you accept a new client, before you accept a new work from new client, what points you should check? before you decide to continue existing work with the existing client, what matters you should check. Before you accept new work with the existing client, in any way the question can be twisted. What are the points the auditor shall consider before accepting new engagement from new client? What are the points the auditor shall consider before continuing existing engagement with existing client? What are the points the auditor shall consider before deciding, before accepting new engagement from existing client? Anyway, they can ask. What points you will consider while acceptance and continuation of relationship with client as per SA 220? This is the answer. Easy or not? Suppose, no, tell me this sentence, no, this sentence itself they'll give you and ask you for 3 marks question. So for if they ask you this sentence, you need to write the above answer. The engagement partners, if at all he obtains information that would have caused the firm to decline the engagement, had that information been available earlier, the engagement partner shall communicate so that the firm and partner can take necessary action. Full stop, comment. They'll ask you this question. You need to understand what is the sentence exactly, not the meaning but the concept. Now tell me, I'm a partner newly joined in this firm. In this firm already existing partners were there. Suddenly one client approached. He's asking me to do audit work. He thought he's a new person. So I accepted. Later my firm people told me, sir, that client and all we don't accept. We had an issue in the past. Let us not accept. Now if this kind of issue had that information available earlier, if I know that information earlier, will I accept this? Now what should I do? Since I accepted, I will first communicate with my firm. Now we all sit together and discuss. Take necessary action. That's it. What action they might take? They may decline, they may withdraw, they may resign. Able to understand. So this statement can be asked and asked you to comment. That's it. Next. Now, letter of engagement. After that I'll come to the above topics. What is the letter of engagement? Look, the persons for whom we are doing audit. Simple example, Lalita Jewelers Private Limited. The MD is Kiran. Yes or no? That uncle. Brand ambassador. Hey, no, we should not. He's really motivated, he's such a powerful person, obviously. You must have charisma to project yourself. And obviously, he is very handsome, no doubt. Yes or no? Even at that age, he's maintaining that level of fitness. Yes or no? So obviously, no doubt, and he is projecting himself so powerfully. If at all even a separate brand ambassador come, Lalita Jeweler would have been not that popular. Correct? Huh? Now tell me, is that uncle, whoever is there, Lalita Jewelers MD, is he aware of audit definition? Is he aware of Schedule 3? Is he aware of financial reporting framework? But we have a question, right? What are all management responsibilities? What are management responsibilities? Management is responsible for preparation and presentation of financial statements as per applicable financial reporting framework. Management is responsible to design and implement internal control systems so as to prepare financials in true and fair manner. Management is responsible to provide the auditor with information. Management is responsible to provide the auditor with explanation he is asking. Management is responsible to permit the auditor to talk with anybody in the company. Unrestricted access to persons. That is what preconditions to audit question. That is what preconditions to audit question. All these points, is the chairman aware of? Are board of directors aware of? Definitely no. And you might have seen in your offices, wherever, if at all you have done articles, or if at all you might have heard this discussion. Auditor is there, he'll take everything. What he'll take everything? Whatever fees you give, he'll take it happily. But he will not take care everything. Yes or no? Tell me, a small restaurant people were there. They incorporated their business as company. Bad luck. A CA suggested them. Why CA will suggest to incorporate company? Because we'll get fee. Why company that person? In this, many CAs, they recommend. Have you seen private companies? In private companies, the shareholders are, one person will be there, he is the one who is doing business. There are 2 more shareholders. இவங்களோட அம்மா இவங்களோட பாட்டி. பாத்தீங்களா? அந்த பாட்டிக்கு கையெழுத்து போடுறதே தெரியாது. எக்ஸாம்பிள், She doesn't know how to sign itself, and she is a board of director. In a private company, she is a director, and she is chairman of audit committee. Getting it? Now, do they ever have all these formalities? These are designations which we give, yes or no? You see, in Reliance Industries, Neeta Ambani is a non-executive director. And do you think she is aware of all these financial statements, formalities, all the things? No. Fundamental question I'll ask, ignoring all this aside. In any contract of sale or contract of service, who should give terms and conditions? Who should decide the terms and conditions? Will buyer decide or seller decide? Will service provider decide or service receiver decide? Terms and conditions. Common sense provider. When you are attending to this class, what are the things that you must know before you attend to this class? Who gave terms and conditions? I give. When you are going to a movie theater, terms and conditions somewhere they would have mentioned. When you are going for any hotel, terms and conditions would have been mentioned. Will you fix terms and conditions? No. Why you don't fix terms and conditions? Because buyer or service receiver may not know all the complications. I may not know all the problems that might come in future. But who will know the problems? The person who is dealing with. He will know the problem. I know what kind of questions you will ask me in future. Getting the point? Because I am doing in that activity. Same way in audit, terms and conditions, who should make it? Auditor. Sir, but just we decided, no, in the previous class, statutory audit, law will decide. We will also agree with law only. Whatever law terms and conditions were there, we will put the same. Are you getting it? But that knowledge of law, for whom it is there, the knowledge of law, only for the auditor. Client may not aware of all this. Client, no, they appointed you. Sir, நீங்க வந்து audit பண்ணுங்க அப்படி some or else Saravana Pavan proprietor வந்துட்டு, sir, you do audit, sir. I said, okay. And he is thinking, I will only prepare books of accounts, I will only prepare financial statements, I will only do audit, I will only file IT return, I will only take care of GST. He is thinking, auditor ella paathirpa. I'm not doing everything. For what purpose I'm appointed? Only audit. Now I should tell this to my client, no? That's why letter of engagement is required. So who should give this letter of engagement? Auditor should give to client. Prescribing what? See, this is letter of engagement. 2. Board of directors. Scope of work. Scope of the engagement. Nature and scope of the work. I am appointed as an auditor for conducting audit of financial statements. The audit is conducted with a view to give opinion thereon. Auditor's management responsibility. First, you are responsible to prepare financials. You are responsible to comply internal controls. You are responsible to give me information. My responsibility. I will do audit on a sampling basis. I will give reasonable assurance. I will not give absolute assurance. Correct? Huh? So, you see engagement letter, how it looks like. We'll see how an engagement letter looks like. Is it visible clearly? Clear the letters? Yes. So, letter of engagement. Letter of engagement. என்ன ஆயிடுச்சு? Or else 210 will try. So 210 is what? The standard heading. Agreeing the terms of audit engagement. So I accepted audit engagement. Now I need to agree with client terms. What terms you will agree with client? The heading, you see, how can you decode? Agreeing the terms of audit engagement. Okay. So what will you fix? What terms you will agree? So we will see letter of engagement format here. You see, this is an audit engagement letter. To whom it was written? To board of directors. What? To board of directors. So this following. So addressee to board of directors. Heading will be letter of engagement. First, what you should mention? Objective and scope. What objective? Who requested whom to audit? Did auditor went and begged the client, or client came and asked the auditor? In reality, different. Okay. So you have requested that we audit the financial statements of ABC, which comprise so and so items. And you see here, you see this word, cursor visible, huh? We are pleased to confirm our acceptance and our understanding of this audit engagement. What we understand about this by means of this letter. Our audit will be conducted with an objective of expressing opinion. Now look, what are my responsibilities? Look at inherent limitations I have. So even though I do audit, still mistakes will be there. I need to tell the client no, otherwise client will think I will discover all the mistakes. Even after I do audit, some mistakes will be there because there are so many inherent limitations. Now our audit will be conducted on the basis that means precondition. What is it called as? Precondition. I assume before I start the audit, you acknowledge the following responsibility. Management, those charged with governance, acknowledge and understand the following. What responsibilities? For preparation of financials, for internal controls, provide access into books, information that we ask for, unrestricted access to people. Now what are all these? Responsibilities of management. So at last, I will give audit report as per so and so standard. Getting it? And I will sign, put my name, firm registration number, my membership registration. I'll send a letter to him. He will also sign and give me one copy. Tomorrow he is coming and blaming me. Sir, you prepared books of accounts. Where did I tell? Show me in the letter. You read? No. So this engagement letter is important to protect my rights and duties. I should tell the client at the beginning itself what are my powers, what are my duties. He should also know that what are his duties. Correct? Huh? So that's why this is. Now you see here, what are preconditions to audit? Preparation of financial statements in accordance with the framework, designing and implementation of internal controls, provide access to information, additional information, understood. Same is there now in the letter also. Exactly. Able to understand. So this is precondition. So what is the purpose? What are the contents of letter of engagement? There should be title, addressee to board of directors. We have seen the format. Objective and scope first, yes or no? Responsibilities of auditor next. Responsibilities of management. You need to mention applicable framework is what? Management is responsible to prepare financial statements as per Schedule 3. Management is responsible to prepare financial statements as per Form A of the insurance IRDA regulations if it is insurance company. So, and what is the form and content of audit report? How audit report looks like? He may not know. I will tell him, we will give audit report in accordance with SA 700. So if your client has a doubt, he will go and see SA 700. Of course, he will not understand anything. Okay. Then signature of the auditor, signature of the client, confirming the acceptance, date and place. How many copies we should take this print out? 3 edukku 3 yaarukku unaka 2 bodum. Yes or no? 1 for auditor, 1 for client. But you can take 3-4 also, not an issue. Conservatively. Getting it? But 2 is the main. Getting it? Next. Easy or not? So now letter of engagement is issued by whom? By auditor to client. Why am I issuing? Tomorrow if any dispute comes, I can show. So reducing the chances of misunderstanding. Why? Where and all we misunderstand? Regarding my scope of work, regarding my objective, regarding rights and duties, we may have problem. Tell me, in which audit it is very, very important? Stat or non-statutory auditor? Non-statutory. In stat audit, if some dispute is there, law is there to clarify. In non-statutory, what is my scope, what is the scope, nobody is there to clarify. So we should only discuss. In case of non-statutory, issue of letter of engagement is highly recommendatory. Therefore, for both auditor and client, that each party should be clear about the nature of the work. It must be written, it must be kept reduced to writing and should exactly specify the scope of work. Correct? Huh? In case of partnership firm, few more precautions we need to take. Yes or no? The appointment of auditor is normally governed by partnership deed. So the chartered accountant, when he is appointed for undertaking professional assignment of a partner by a firm, first he should get a clear idea of the what is the service with reference to partnership agreement. So whenever a partnership firm appointed, don't blindly accept. Check partnership deed. Who appointed you? The person has authority or not? Check it out. Are you getting it? Now, they'll give you this point in exam, partnership firm point in exam, and ask you comment. Which point you will write answer? This answer you have to write. Letter of engagement answer. Understood or not? You see how in different ways a questions can come. I'm giving you all the idea. Yes or no? You know, mostly in another 1 or 2 days, this entire smart notes I told, right? We are going to give it as a A5 book, small novel type book. Getting it? You can, anyhow, you're looking at this. What I have decided is whoever have come for physical, getting it? For all of you, 1.8 view. What is it? 1.8 view. What is 1.8 view? If at all the class is for 100 minutes, you can watch the class for 180 minutes. Which means 100 minutes you watched. Somewhere some 40 minutes, 50 minutes you still have to. Another 40, 50 you watched. 180 minus how much already you watched? 100 you watched plus 50, 150 over. Still another 30 minutes you can watch the video. Which means 100 minutes video you can watch it for 180 minutes. You may watch at higher speed or lower speed. Doesn't matter how much video duration you watch. That will only count. So with the 180, with the 1.8 view, I'll give you Google Drive access. For all of you, I'll give you Google Drive access. Just make a list with them. I will tell them tomorrow or day after. You can just give them the list. You will get once again backup Google Drive class. Only thing is, for that 500 rupees extra charge you have to pay, because I need to give Google Drive encryption. We have a key cost. Only that. Just a complimentary. So that tomorrow or day after I'm releasing this book. Probably bulk. Getting it? So some 100 copies will be ready within 1 or 2 days. So that if you want to buy and then once again take the book and once again want to watch this class, you can watch it. All of you? Yes, whatever this 25, 26 hours net recording will come, right? Until I'll give you backup. Next. It is your choice. Whoever wants, pay that additional charge and then take. I'll tell you what is the price, all that. Some 500 rupees is enough for backup. We don't charge anything else. For a new admission only, we will take price, okay? For you, 500 rupees additional charge is enough. Next, even for CA final also, I have given in the class itself. I don't have a thought, but I just decided to give once again so that you can watch in exams within this. Okay. So 500 rupees is the Google Drive cost, and book cost will be some 300, 350 something it will be there. That A5 book cost. Getting it will be having 150 papers with binding proper everything it will come. Okay. Anyhow, I myself have not seen the book. Today only we ordered. Maybe it will take 1 or 2 days to come here. Next. All of you understood or not? Now tell me, letter of engagement. Is it mandatory that every year should I send this? Suppose my client appointed me for 5 years. Companies, they will appoint me for 5 years. Non-government company. Now, should I send every year this letter of engagement? Not required. One time it is enough. Yes or no? But whenever there are changes in circumstances, if there is any indication that entity misunderstand, that time when they misunderstand, no, why will you send the same letter again? They misunderstood already. Will you give same letter again? What you will do generally, we will give one more letter with clear-cut explanation. Getting it? Or some terms have been changed. Or law has been changed. Law is saying no, you should give every year. Or financial reporting framework changed. Or audit reporting requirement have changed. Until financial year 17-18, the audit report format is different. From the financial year 18-19, the audit report format is different. So I need to give letter of engagement once again when formatting changed. Generally 5 years I have been appointed. 5 years I need not worry. Next, change in management. Originally I gave letter of engagement to previous people. Now top management people have changed. So they may not aware of all these terms. So I will give once again letter. Actually in this case, in reality, when top management changed, will they take this letter away with them? The letter will be still in the company only, no? This they told. Or a significant change in nature or size of business. Suppose company name changed. Company operations changed. That time also you may have to give letter of engagement. Are you clear? Everyone. Next. Suppose management is asking you, sir, they have taken letter of engagement. What they need to do when you send letter of engagement? They need to read, sign it and then send you back. But instead of signing and sending back, they are asking you, sir, these terms please, I don't want to agree. I will not prepare financial statements. You are saying I am responsible, but I will not prepare. Please, you only prepare, they are asking. Will you accept? Audit, maker and checker should be different. So, whenever a management is requesting for change, do we say always no? Depending upon the situation. If at all, the change requested by them is justified. Getting it? Now, will you accept? the changes we requested by the management? Obviously, because it is genuine. Yes or no? Suppose if at all management is giving no, that is not genuine at all. Management is asking me to prepare financials, asking me only to do audit. How can I do both? It is against law. No reasonable justification behind asking to change the terms and conditions. I will not accept. Now, if at all I accept, suppose no, some management changes I have been asked. Management is asking, sir, like, please do tax audit also. Okay, you are stat auditor. Please add a tax audit point also, sir, in the same letter. Let us not have a separate letter. Keep tax audit also in the same letter. Okay, I can do tax audit. As per income tax law, I am appointed, eligible to appoint as an auditor. There is a guidance note on tax audit. I can accept the tax audit happily. Able to understand. So I accepted tax audit. So now management is asking me to give entire combined letter. Now I will take back my old letter, redraft the, the original letter, whatever is there. I will not, I will discard it and put a new letter and then give new letter. Now tell me, when I am giving new letter, should I refer about my old letter in the new letter? Suppose you wrote question in examination, one answer you wrote, you felt it is wrong answer. You striked off and started second answer. In that, because I striked off the previous answer, I am starting new answer. Will you write a reference? Exactly. So the report new letter will not include reference to original work. Will not give reference to procedures that you already performed. Understood the points? Next. Suppose no, you did not accept. Management is asking some changes. You felt it is not correct or you don't have time. Whatever. You did not accept. Management also not cooperating you properly. What will you do? Management is not, management is not cooperating you at all. No, sir. Without accepting that, we will not, cooperate with you. You cannot. We will see how will you do audit. Management is blamed, blackmailing you like this. What will I do? Withdraw. Resign from the company. Suppose if withdrawal is not possible. Here it is not given. Just I am telling you, if withdrawal is not possible. What sir, withdrawal not possible. And the mother circumstance irka. In listed companies, we cannot resign in between. There is a condition. There is a condition in listed company for quarterly results that time. After 45 days from the end of the quarter, if you want to resign, you can't resign. Getting it? There are some conditions which you will understand at CFI. So there are some cases where withdrawal is not possible, resignation is not possible. So better always take what? Take a legal opinion. And whenever you want to withdraw, you have obligation to communicate no. Suppose you felt humiliated, next day onwards you are not going to the client office. Is it deemed resignation? Resignation must be explicit. Yes or no? You must clearly explain the client. Correct? It cannot be implied. You clear. That's it. Now, then we have the concept of independence. What is independence of mind? What is independence of appearance? This you can understand. I already spoke. Okay. Now, there are some safeguards to independence. How to protect independence? Company law is protecting independence by prescribing disqualifications of the auditor. We are boycotting the auditor who are having relationship with the company. So thereby, by giving disqualifications, what are we targeting? We are only targeting chartered accountants who don't have any relationship with the company. So for public to have confidence, the professional should appear that he is independent of the entity which they are auditing. Very recently, 2 days back, Adani related some audit report was circulating, which was signed by a chartered accountant who qualified in 2017. That itself became an issue. Why, how come such an youngster who qualified in 2017 can negotiate with such a big company? Suppose if a CA who signed Adani audit report is of 45 years age or 50 years age, or who is in practice from more than 20 years, naturally that kind of client may approach him. He is independent. But how an young person be appointed as an auditor of Adani directly? That's supposed to circulating in the LinkedIn. Getting it? அங்க எது பிரச்சனை இல்லை. இவன் யங்ஸ்டர், இவன் எப்படி ஆடிட்டர் ஆகிட்டான்? அதான் பிரச்சனை. அதான் குரூப். ஏன்னா கம்பெனிஸ் ஆக்ட்ல ஏதாச்சும் ரெஸ்ட்ரிக்ஷன் இருக்கா? ஏஜ் ரெஸ்ட்ரிக்ஷன் இருக்கா? Disqualification to audit a company having 500 crores turnover or over, auditor must have age of 35 years. No. Correct? So that itself is circulating. I felt heights of stupidity, but then there is a logic behind that as well. Okay, generally big companies will not come to fresher CAs. Naturally. But if they come to a fresher CA, they'll have a better bargaining power. Enna bargaining power? நான் நியூவா பிராக்டிஸ் ஓபன் பண்ணிட்டேன், கிளைண்ட் கிடைக்கதே பெரிய விஷயம். கரெக்டா? அந்த மாதிரி அப்ப அதான குரூப் வந்தா, சார் நீங்க அவருக்கு 10 லட்சம் பே பண்ணிட்டு இருக்கீங்க, எனக்கு 10,000 ரூபாய் பே பண்ணுங்க சார் போதும் மாசத்துக்கு. பாசிபிலிட்டி தேர் நோ டு நெகோசியேட். ஐ வில் ஹெல்ப் யூ இன் வாட் எவர் த வே ஐ வாண்ட். இண்டிபெண்டன்ஸ் காம்ப்ரமைஸ் ஆகுதுல, integrity compromise ஆகுது. they are compromising on integrity, yes or no? So the auditors are compromising on integrity. Because of that that became an issue. Able to understand? Generally, beyond our level of experience, if at all we are taking up such a very big work, it will question our integrity by default. You have seen in political either speeches also, a very new company has got a very big project. Every political party will start questioning it, opposition. How come for a new company you can give a contract? That shows integrity. Able to understand? So, anyhow, this issue is not being made by any public person. This issue is made by CS only. In case of audit, the key fundamental principles, integrity, they have to be necessarily protected. Yes or no? So, auditor must consider, is there any threat to the independence? Auditor should withdraw the engagement or do not take that work if at all there is a threat. Suppose if you are unable to implement the safeguards, if you cannot protect your independence, please don't accept the work. So these are the safeguards. They may ask you in exam, write about the concept of independence and write any 4 safeguards for independence. What is independence? Independence means like meaning of independence means ability to take decisions by not becoming subordinate of others. Getting it? Auditor must take decisions independently. He should not act as a subordinate person to somebody else. Next. And there are various threats to independence. This threats point I will discuss while discussing company audit disqualifications. Understood? Easy or not? Now, how auditing is having a relationship with other subjects, how audit and economics are interrelated. See, you must understand economics, geopolitical factors, all that. Tomorrow, your company going concern might affect your company. See, this is little bit beyond the knowledge, but still we have in the syllabus. If you want to have a conceptual understanding, slightly I'll give you data. Slight information I'll give you. There is a company, now across the world, there is a shortage of semiconductors. Due to which the phone production, the car production, electronic industry production, appliance production, everything were affected badly. So there is a supply-demand mismatch. The supply was extremely low. Correct? Now, in Europe right now, the gas has become extremely costly. Extremely costly. The reason was Russia is not supplying the gas to the Europe nation. Now tell me, if I do not have the knowledge of Russia, Europe war and all, and if I am doing audit of a company in the Europe, and the company uses going concern assumption, how far they can use going concern assumption if this is a situation, suppose I am the auditor of gas company, they are not getting gas supply, so they are unable to fulfill customer demands, and the company cash rotation stopped. When cash rotation stopped, can the company continue? Going concern affected. When going concern affected, can the financial statements be prepared using going concern assumption? Now tell me, if I do not have the knowledge of this economics, can I talk about going concern of this company? Can I get an idea? So auditor must have knowledge of economics. Economics knowledge means what? Not economics for finance. GDP means what? NDP means what? Not that alone. Practically what is happening across the world. Getting it? That doesn't mean you should sit and study on the general knowledge books and all. No, not required. You have to be alert. Every day you need to just follow up with some sort of news. Next. Auditing and behavioral science. You must know how to, behave with people. You interact with a lot of people, yes or no, in the organization. So, auditor is expected to deal with human beings rather than figures, financial statements. Getting it? Next. See, knowledge of human behavior is indeed an essential for the auditor so as to effectively discharge the duties. Simply, you must know how to deal with people. The way you deal with people gives you the evidence. Getting it? If you behave that I'm strict auditor, CA, you can't. Getting it? You should not see, like you see, Instagram post and all, CA students. Instagram post and all. Have you seen the Instagram post? Proud to be CA student. Yes or no? 5 years, 50 laws, 5,000 sections. 25,000 pages. Ordinary person, it is not possible. And the other people are called as chartered accountants. Have you seen all this? இவனுக்கு 10 ஆக்ட் பேர் சொல்றதே தெரியாது. அந்த போஸ்ட் எல்லாரும் ஷேர் பண்ணிடுங்க. இன்ஸ்டாகிராம் எல்லாமே we will do halchal. And when some of your relative comes and asks, should I do CA? Don't do CA. அது என்ன? Dual standardல. Next. Fine. Auditing and statistics mathematics. See, audit is completely based on samples. And sample is nothing but based on probability theory. Probability theory is nothing but statistics. அந்த சாப்டரை படிக்கவே இல்லை சிபிடில. Auditor must have knowledge of statistics and mathematics because you are using statistical sampling to get a conclusions meaningfully. You're able to understand now this? And auditing and data processing. This is nothing but data analytics. What is data analytics? I'll discuss in IT. I'll discuss in analytical procedure chapter. Data analytics, analytical procedure, data processors, more or less similar. And auditing and financial management. How do you know company will successfully continue in the next 1 year? Going concern you should check, no? You might have understood the auditor must be going concern. Next 1 year. So what will you look at? Funds flow analysis. How the company funds are utilized. Funds flow analysis means what? Financial management. So auditor should have an understanding of financial management. Auditing and production. You must apply analytical procedures on scrap calculations. How much is scrap generated? How much is accounted in books of accounts? How much is generated? How much accounted? What is the balance? What happened to the balance? You should question. You must have a knowledge of production. And above all, you must have knowledge of accounting. You must have knowledge of law. Easy. Then part 4 of this chapter is system of quality control. This will discuss while discussing standards. This is not to be discussed at this moment, but along with standards on auditing, we will discuss. There are few standards, right? I told you, few exclusive standards. Along with it, I'll discuss. With this, invoice audit chapter is completed. Are you clear? Yes. So the next chapter is the appointment of auditors. This is also called as company audit chapter. Nothing but appointment of auditors. We are discussing all appointment related provisions, rules and regulations. Getting it? And I hope many of you have grip on this chapter. Mostly. Okay. So I'll go little faster now. So in this chapter, we are going to discuss these sections 138, 139, 140, 141, 142, 143, 144, 145, 146, 147, 148. These are the sections that we have. This is regarding internal audit. This is regarding appointment and reappointment of auditors. This is regarding removal, resignation. This is regarding qualifications and disqualifications. Correct? This is regarding remuneration of auditor, rights and duties of auditor, prohibited services, yes or no? And this is regarding signing of the audit report, duty to sign. And this is regarding duty to attend general meetings, not AGM. General meetings, everything is covered. 147, penalty provisions. 148 is regarding cost audit. 148 is regarding cost audit. Now, the first will start with qualifications and disqualifications of an auditor. So what are they saying actually? See, once you qualify as a CA, you can either take up the practice or you can either take up employment, or you may do some other business completely, outrightly different from CA. Now, if you decided to take a practice, first you should have a membership number. By qualifying CA final, you will not become member. You need to obtain membership number by paying specifically some fees. Okay, there is a member enrollment fee, something. And you are not eligible to practice directly. For practice again, you have to pay separate fee. Certificate of practice. You see, the practice is CE, not SE. Observe. It is not PRACTI SE. Practice. Getting it? Sa. There is a difference. SE is not the actual name. Practice means it's a noun. It's a license. It's actually have another meaning called license. You can claim yourself as a chartered accountant. Chartered accountant is different, CA is different, All this that you are thinking that's just an abbreviation. No, CA is a qualification. Chartered accountant is a designation. Section 7 of CA Act, it says the word chartered accountant can be used only by those who are having COP. Getting the point? Generally, that's how the provision was. You cannot use the designation chartered accountant. Suppose you want to name and below you want to use full form chartered accountant. People think you are practicing CA by default. But if you put CA, they don't think that you are a practicing person. They may ask you what you are doing. But if you put a board and claim below chartered accountant, means people naturally think that you are practicing. That fact even CA Institute recognized. So they said the CA cannot use chartered accountant as a designation. Getting it? You can use the designation if you are in practice, no problem. In the name board you can have at home, but it is not permitted if you don't have COP. That's actual intention of the provision is that. Getting it? Beside your name CA you can put. Getting the point? CA Ram Harsha I can use, whether I am in practice or not. But chartered accountant designation I cannot use. Understood or not? Now, as per CA Act, you can start this license, you can get this license, practice COP, either if you are individually practicing or you are practicing as a partnership firm. See, what is firm? Firm means it may be a sole proprietary firm or a partnership firm. Firm means anything. Getting it? Individual we call him as sole proprietary firm. Partnership is nothing but partnership firm. We'll discuss all this you will get all this at CA final. How to incorporate partnership firm, code of ethics is what. So firm registration number means what. Everything you will be getting at final. Now it is not required. Getting it? Next up. So now for a company, who can be appointed as an auditor? Sole proprietor, individual. He can be appointed as an auditor provided if he is a chartered accountant holding certificate of practice, or a firm. A firm means actually what? Partnership firm or LLP firm where majority partners are practicing in India and qualified. They may be appointed by the company in the name of the firm. By using in the name of the firm I can appoint. The firm itself can be appointed. But the partner of the firm will sign the audit report. The partner of the firm will sign the financials. He is called as engagement partner. Understood or not? All of you. Next. Now this is the qualification. Now okay, a firm is appointed, partnership firm LLP. Who should sign the audit report? Only the partner who are chartered accountants shall sign the audit report. So partners who are chartered accountants shall sign the. All partners will sign or only one partner? One partner is enough. Able to understand. Any one partner the firm should choose and that partner will sign and he is called as engagement partner. Getting it? Next. Now there is a question in the institute book in first chapter, I think first or somewhere it will come. Suppose one partner was appointed as an auditor. One partner is the engagement partner. He verified entire audit, but before he signing he died. Can other partner sign the audit report without verifying the working of the previous partner? No. The other partner before he sign first should review the entire workings performed by previous partner or the other partner. Then get a conclusion whether the other partner has performed all the reasonable necessary evidences obtained or not. Only after that this fellow will proceed further. Able to understand? For that answer is not given so lengthy. Some 4 or 5 lines only it is given. Next. Disqualifications. Who are not disqualified? Who are not eligible to act as an auditor? All of them are CS only. But still we will not appoint. Why? To protect independence. We want the auditor must be independent. So anybody who has relationship with our company, we will not appoint. Who? A body corporate other than LLP. A body corporate is not eligible because Companies Act itself says body corporate is boycotted. Body corporate has a separate legal entity status from members. Now when an auditor and the company, suppose I incorporated a private company. I qualified CA, COP, me and my 3 friends together, totally 5 of us, example. All 5 of us became a shareholders in company. We wanted to act as auditor. Our company itself want to act as auditor for another company. Now separate legal entity, limited liability, so many issues were there, no? Can auditor have separate legal entity status? Is audit a technical work? No. It's a work involving personal intelligence. Personally you should be liable, yes or no? You cannot be under the protection of separate legal entity, limited liability. No, auditor should have personal liability in the audit. Getting the point? So body corporates are straight away boycotted. And anyhow, in CA Act, you can't incorporate body corporate. You are only permitted to practice as a individual, or you are permitted to practice as a firm. Then officer of the company is disqualified, employee of the company is disqualified. Officer and employee both are disqualified. Officer means so many were there in the officer position. Yes or no? Like all the directors will come as an officer. All of them, key managerial person, they all come under officer. I am a director in a company. How can I do audit of the same company? I am working as an employee in this company. How can I do audit of the same company? Self-review threat. Next. A person who is a partner or who is in employment of an officer or employee. This is nothing but partner of an employee. What is this? Partner of an employee. Partner of an officer. Both are disqualified. Same way, employee of an employee, employee of an officer, both are disqualified. Director has some other business. In that you are working as an employee. You cannot act as an auditor for this company. In this company there is an employee. He has some other business. You are acting as an employee there. You cannot do this audit of the same company. Able to understand. So, for company officer and employee, their partners, their employees, who are those chartered accountants, disqualified. Clear? All of you. Next. A person who means the CA or his relative or his partner, getting it, holding any security or interest in the company, its subsidiary, its holding, associate, subsidiary of the holding. Subsidiary of the holding is called as a sister company. Subsidiary of the holding means what? I am having one holding company. This company has another subsidiary. We both are having common parent. Then we are called as siblings, sisters company. Getting it? Not brother companies. Next. So, if a person, a person or relative or partner is holding any security or interest in the company, holding company, subsidiary company, associate company, or subsidiary of its holding company, is disqualified. In exam, you should write this entire provision. Only then you will get full marks. Yes or no? If auditor is holding shares in the company, is disqualified. That is correct answer, but that is not complete answer. Understood or not? Same way, if the auditor is indebted, by the way, before that, now if you have security or interest, right? Security means what? There are so many equity shares, preference shares, bonds, debentures, mutual funds, derivatives, so many were there. Getting it? Now, your relatives can have securities up to 1 lakh rupee face value. How much maximum a relative can have? 1 lakh rupee in the face value. Remember, the 1 lakh rupee exception is applicable only if the relatives are holding securities. If auditor is holding in his name, the exception do not apply. Now, relatives can hold up to 1 lakh rupee face value, right? Where in the company they use the word. Actually, there is no interpretation for that. People wrongly interpret. Even institute book also contains the word. If the shares are held in the same company, best example, Tata Group itself you take. Tata Group is best to understand this. Suppose Tata Motors is looking for auditors. This is the Tata Motors which is actually looking for auditors. It has holding company Tata Sons. This has a subsidiary company Jaguar Land Rover Range Rover. This has associate company some electric motor company. Getting it? This has a sister company TCS. It has sister company Tata Steel, Tata Power, Tata Chemical, Tata Beverages, Tata Salt. These are all various companies. Getting it? Now, so we have covered, it's like auditor or relative or partner. Originally, main provision should not have shares in Tata Motors, its holding company, its subsidiary company, associate company, or subsidiaries of the same holding companies. Nothing but sister. We should not have shares. Only then we are eligible. Only then we can be appointed as an auditor. However, relative can have securities in the company up to an amount of 1 lakh. That's what they are saying. Not exceeding 1 lakh. In the company means only Tata Motors or every group. Logically, everywhere I can have. Altogether one group. Altogether maximum 1 lakh. But in the institute book of CA final, they gave a clarification. They gave just a point that relative can hold securities only in the company where you are acting as auditor, but cannot hold in other companies. That's a blender interpretation. Sir, but ICA book gave no. Who prepared ICA book? God, human being only, no? Correct, la? So, just because ICA book is containing some point, that doesn't mean it is always right. Able to understand. You should apply common sense. I am doing audit of a company, in that you are permitting my relative. Why not other group companies? In fact, I am not auditor in Tata Sons, I am not auditor in TCS, I am not auditor in Jaguar Land Rover, I am not auditor for this company. In that company, let my relative have what problem? In my company, where I am acting as auditor, you are permitting relative. Why not others? That's a wrong interpretation, no? In the exception, no. See, every time I cannot give the entire list, no. Every time I cannot give entire list. So, exception when they are drafting, they simply used the word the company. They didn't use the entire sentence. Now, people are interpreting the company means only the company. Is there any significance for the word THE? Is there any significance for that? Thing. Above context, they used this. So, literally, relatives can have securities up to 1 lakh rupee face value in all the companies put together. All my relatives together, in all the companies together, maximum face value, 1 lakh, aggregate. But in exam point of view, you should consider only the company. Yes or no? Because in the suggested answer, what is used? Correct, huh? Yes. Sometimes if it is wrong, we should say it is wrong, but we should follow. Okay, next. So relative can have up to face value 1 lakh. Understood all of you? Next. Suppose indebtedness point. How much indebtedness is permitted? Maximum up to 5 lakh. Now here indebtedness, can auditor also have? Yes. Here you see a person who relative partner indebted to the company or group companies in excess of 5 lakhs. Up to 5 lakhs it is permitted. Main point you see, auditor is straightaway prohibited. Exception says relative can hold. Up to 1 lakh. Main provision do not contain 1 lakh security. Auditor cannot hold securities at all. But can I have indebtedness to the company up to 5 lakhs? Yes. Me, my relative, my partner, all of us together to the entire group companies, maximum outstanding indebtedness is how much? 5 lakhs. That's it. Are you getting the point? All of you. Or if auditor has given guarantee or provided security on behalf of third person to this company or group companies. I am using the word group company for convenience. Group means what? Remaining 4 companies. Other than this company, remaining 4. It's holding, it's a subsidiary, it's associate, it's a subsidiary of the holding company. Up to how much it is permitted? 1 lakh. The limit of 1 lakh will apply even for the company not having share capital. If the company is limited by guarantee, see this guarantee is different, paid up capital guarantee is different. Here guarantee means guarantee given on behalf of third party to the company. A third company you can sell goods to them. They are trustworthy people. I am giving guarantee. That guarantee is different. Becoming a shareholder by guarantee is different. So this point exception is what? Becoming a shareholder by guarantee. Can you become a shareholder in a company by giving guarantee? At the time you become a member, no. So can you give any company? Can you become a member of any company by giving guarantee? An auditor? No. However, relatives can they become? Yes. Up to how much they can give guarantee by member? 1 lakh. Paid up capital you are permitted to hold up to 1 lakh face value. Same way guarantee also up to how much face value? 1 lakh. Yes or no? Next. Now you see, indebtedness they are saying, right? Indebtedness means what? Suppose company sold me goods in ordinary course of business on credit. Just like any other customer of the company, I also got credit period and I got 6 lakhs worth of goods. Just like any other customer. And the company is now asking me to appoint as an auditor. Will I accept or not? No. Even in ordinary course of business, doesn't matter. You are indebted for 5 lakhs or more. Yes, disqualified. Ordinary course, extraordinary course, in normal course, that and all doesn't matter. If auditor is indebted for more than 5 lakhs, disqualify. Correct? Now, can auditor receive audit fees in advance? Entire audit fee can I take in advance? If you take entire audit fee in advance before you start the work, it will again become indebtedness, no? Before you start work, how can you take the fee? Which means you are taking advance. Advance is indebtedness. So take fees only on progressive basis. Finish some percentage of work, take fees. That is permitted. Next. So that's it. Next is about the business relationship point. Next one is relating to business relationship point. So this is little bit lengthy. We will take break and then come back. Okay, all of you just go and get back within 15 minutes. So we'll continue with all this business relationship, all that. So the next disqualification is regarding business relationship. Next disqualification is regarding business. Remember, I will not cover each and every point. Briefly, I will revise and proceed. Getting it? So what are they saying? If a person or a firm which has a business relationship with a company or group companies. Now here actually group companies means there is additional one more company added. Subsidiary of associate company. Generally what are the companies? Auditor, the company, or its holding company, or its subsidiary company, or its associate company, or its subsidiary of holding company, subsidiary of associate company is another point added in this. See, for this, no, there is no specific intention behind law. These provisions are drafted by different people at different points of time. So that is the only reason why this kind of inconsistency will be there. Suppose actually if you see the bottom, no, J, there is another disqualification, there is another disqualification. What it says you say. Here you see, if any person directly or indirectly providing prohibited services to the company, its holding company or its subsidiary, only 3 are covered totally. Whereas in business relationship, totally 6 were covered. Whereas securities, indebtedness, guarantee, 5 were covered. Now, is there any logic behind this? Means no logic. Are you getting it? These provisions were drafted and added in different points of time by different people. If I ask you who is relative according to you, you will give some 3-4 relationships. If I ask another person who is relative according to him, he will give 7-8 relationships. Correct? Huh? Exactly same. So related party means who? Important related party means who? Important person means who? For everybody, it will have different number. Same way, when law is being made, the people who are drafting the law, according to their experience, according to their understanding, they will put that company list. Getting the point? That's it. So, this is a interpretation point. This is not a very big interpretational issue. Now, exception. So, you see how the disqualifications are drafted. You should not be a body corporate. That's okay. That's a legal interpretation issue. So, they removed it. You should not be an officer of the company. You should not be their partner, their employee. You should not have securities in the company. You should not have, indebtedness to the company. You must not have guarantee. You must not have given guarantee to the company. All the ways they are prohibiting. Just to make you independent. Very simple. What are they trying to achieve? Auditor and the company should not have any relationship. You should not have business relationship. Business relationship means what? You should not be a distributor, sub-distributor, wholesaler, retailer. Able to understand? Can I be a customer of a company? Can I be a consumer of the goods of the company? For that, no problem. As long as you are purchasing goods at arm's length price in ordinary course of business, no problem. Able to understand? When the problem will come, if you buy goods on credit, up to more than 5 lakhs, then only the problem will come. Indebtedness point will attract. Are you getting it? Otherwise, if you are purchasing on cash basis, using company goods and services for so many years, so much you are using every year, no problem. But if I am buying company goods and services with a view to resell, then it is called as business relationship. Are you getting it? Same way, professional services permitted to be rendered. For the company where I am acting as an auditor, I can provide some services. I can provide some services to the company as per CA Act. There are some additional services, even though I am auditor, I can provide. But which services permitted, but not prohibited? If at all you are providing prohibited services, you are disqualified under J point. Other than prohibited services, are you permitted to render any other service along with audit? Yes. If it is permitted service, even though you are having some relationship with the company, we will not treat it as business relationship. Apart from permitted service, apart from consumer relationship, if you have any reseller relationship with the company, distributor, dealer, authorized dealer, any such kind of relationship, what will happen? You are disqualified. Are you getting the point? Because if you are having a business relationship, you are having interest in the company, self-interest threat again. Next. Not only that, we have seen B point, officer of a company, employee of a company disqualified. Their partner and employee is disqualified. Not only him, relative of a director, relative of a key managerial person are also disqualified. And a person who is in full-time employment disqualified. Actually on this so much of discussion is there, but revision it is not required. Getting it? Even in exam point of view, not required. Or a person or a firm, a person or a partner of a firm holding appointment of more than 20 company auditors as on the date of proposed appointment. So this is called audit ceiling. What is this called as? Audit ceiling. Which means audit ceiling is not to protect independence, but to protect quality of the audit. What is the audit ceiling guidelines? What is the necessity of audit ceiling? Quality of audit. You cannot give permission to a single CA to accept any number of audits. He can audit maximum 20. How many maximum? 20 companies. However, the following companies, any number I can audit. 20 limit do not apply for the following companies. Which companies 20 limit do not apply? 1% dormant small company or a private limited company having paid up capital less than 100 crore provided such private company does not violate 137(92) section. If a private limited company do not violate 137(92) sections under company law provisions, getting it, and having paid up capital less than 100 crore, that kind of private companies, any number of companies I can do audit. Now tell me 20 companies they are saying no. Is it per financial year or per assessment year or what? At any point of time. Today right now I received a call example. Someone is asking me to do audit of a company. I will just look at my list of companies. Right now I am acting as auditor. Right now I am acting as auditor in some company's position. I will look at the list. Total I will see 20. If it is 20, I will not accept this company. If it is less than 20, I will accept the new company which is asking me. Able to understand? Any day whenever you receive a new worker, new client, new company audit, check whether how many companies right now, right then, how many companies are acting as an auditor. That's it. It is not per year, per financial, nothing such. Any point of time, at any point of time, you cannot do more than 20 companies. And while counting the 20, these companies will not be considered. Suppose if it is a partnership firm, the 20 limit applies per partner. It is applicable per partner. Now, in case if a firm is having multiple partners, number of partners multiplied by 20. Which partners you will consider? Only those partners who are CAs, having COP. Suppose I'm a partner in 2 firms. Now on firm A 20, firm B 20. No, all firms together. From my name, on my name. How many I can accept? Maximum 20. Clear? Suppose if I am doing audit of a private company having paid up capital less than 100 crore but violated 137, violated 92, will this be exempted from ceiling limit? No, that will be counted as part of ceiling limit. Yeah. Next, in CA Act we have 30. In CA Act, what is the ceiling limit? 30, including private companies. Including private companies. Their private companies are not given exemption. Only 1% company, dormant company were exempted as per CA Act. You can do maximum 30, excluding 1% dormant company. Remaining all will be counted. Now you have a doubt. Which one we should satisfy, sir? Both. Which one you should satisfy? Both. Suppose I am having 35 private company audits. Company law, as per company law, it is okay, fine. But as per CA Act, it is not permitted. Because I am having more than totally 30 companies. More than 30 companies I'm having. I'm disqualified as per CA Act. Code of Ethics. ICA will take an action against me. Are you getting the point? It's okay. You need not have that knowledge. Later you can learn. I'm just giving you a hint. Next. Tax audits. How many you can have? 60. How many you can have? 60 tax audits. So, in computing specified number of audits, whether you are handling singly or combination with another chartered accountants, everything shall be taken. The number of partners of a firm on the date of accepting the new work shall be taken into account. Who are in full-time employment shall not be counted for ceiling limit. Yes or no? If at all, a member in practice is exceeding the limit, he is treated as guilty of professional misconduct. We have in ethics, schedule 1, part number 1, clause number 9. There is a guideline. If at all you are accepting company audit without satisfying provisions of Companies Act, it is treated as guilty of professional misconduct. You will understand that in CA final. Next. A chartered accountant in practice, okay, what they need to do, everyone have to maintain a record of works they are accepting. You need to maintain record of your clients list. That's it. All of you clear? Then we have another disqualification, important disqualification. Prohibited services. What is the disqualification? Prohibited services. I'm not covering every point. Remember, I'm only covering important disqualifications. Major I covered. Now, if a person directly or indirectly rendering any services under 144 to the company, holding company, subsidiary company, you are disqualified. What services if you render, you are disqualified? 144 services. 144 services name is what? Prohibited services. What do you mean by prohibited services? What do you mean by prohibited services? See, these are the prohibited services. They will ask you a straight question on this 4 marks question. What are they? Accounting services. To the same company, you cannot be accountant and auditor. Internal audit you cannot do because you are stat auditor. Why will you do internal audit? Implementation of financial information system. In the company, you are implementing some accounting software. You should not. You are testing some software. You should not. You cannot provide actuarial services if at all you are acting as auditor. You cannot do investment advisory. You cannot do investment banking. Investment advisory. Suppose some stockbroker, which is a company, they appointed you as an auditor and he is asking some investment advices from you. Or you are appointed as an auditor for one big company, listed company. They are asking you to underwrite their IPO. That's called investment banking. Getting it? Outsourced services. Management services. Management services means those services where it involves decision making. Example of management service is independent director. What is it? Independent director is a management service. Able to understand? Next example. Or any other service prohibited. Suppose, if at all you are having any of the above services, can you accept the appointment as an auditor? No. Suppose if you withdraw from the above services, can you accept the auditor appointment in that company? Yes. You should not provide these services to which companies? The company where you are proposed as an auditor, it's holding, it's a subsidiary. That's it. Correct? Huh? Next. We have now they are saying the word directly or indirectly. What do you mean by directly, indirectly? If I only provide to the company, that's called, in case of auditor is sole proprietor himself, that is direct. Through relative, indirect. Or through any other person connected or associated with me through any other entity in which I have significant influence or control or whose name trademark is used by me. Getting it? You have to read this 3 and 4 and this point together. Any other person connected or associated with that individual. Associated or connected with me means what? I am a partner in another firm. Can that firm provide that services to the company? No, because the firm is connected with me. The firm is associated with me. Able to understand? Or some entity, example company. The company is providing accounting services to Tata Motors where I am auditor. What is this company? Some management consultancy other services company. In this company, I am the individual has 20% shares. I am the individual has more than 50% shares. Now in a company where I am having influence or control, the company is providing accounting services to Tata Motors where I am acting as auditor. Disqualified. Able to understand? Or the company has a brand name, same brand name we are using, same trade name we are also using for practice. Then also it is said to be providing indirectly. Are you getting it? Similar definition was given for firm. This you look into. All of you clear? What do you mean by directly, indirectly? They asked as a straight theory question. The past one of the attempt they asked. Think it. Next. Subsequent disqualification point. What is this subsequent disqualification point? We have seen above points. If at all a chartered accountant is coming under any of the above point, we will not appoint him as an auditor. Suppose we appointed. After that disqualification arises. After that disqualification arises. Now what will happen? He shall immediately vacate the office. He shall immediately vacate the office. Yes or no? He shall immediately vacate his office. Office means what? Position. Office means what? position of auditor. Office means not office chair table. Getting it? So auditor should immediately vacate his office, nothing but position. But in one of the case alone, in only one case, immediately don't vacate. I am giving you 60 days time to rectify your mistake. Only if it is in this kind of disqualification, 60 days time is given. Suppose you are affected with disqualification in the above list any reason, generally any reason, on which date you are affected with disqualification, same date you have to vacate. You don't have any other option. But if you have one disqualification, no, security held by relative up to 1 lakh is permitted. Suppose my relative acquired securities for more than 1 lakh face value accidentally. How accidentally? Bonus shares. What is it? Bonus shares. Suppose in Tata Motors, my wife is having some 75,000 rupees face value worth of shares. Market value doesn't matter. Market value can be crores. But face value 75,000. Tata Motors declared 1:1 bonus shares. She didn't purchase. Can a shareholder say, I alone don't want bonus share? Can a company declare every shareholder will be allotted? Company also cannot stop. Yes or no? Her shareholding became 1,50,000 face value because of the bonus shares. Face value increases, no. 1,50,000 face value suddenly. Now just tell me, I told her not to buy the shares because I am the auditor. I took all the precautions. Still, because of the company bonus plan, the shareholding percentage increased. Is there any mistake that I did? In all other cases, if at all something went wrong, I might have not taken sufficient precautions. Correct? Here I told, in spite of it, shareholding increased. Is there any my side mistake or my relative side mistake? That's why, because considering this difficulty, if a shareholding of relative increases more than 1 lakh, please rectify that within 60 days. Sell 50,000 worth of face value, make it less than 1 lakh. Then continue as an auditor. 60 days over, still you didn't rectify. 61st day, you have to vacate. Be able to understand. All of you, the logic. Next. Now, who is relative? In case of HUF, every member of HUF is a relative to each other. Remaining people, in case of other than HUF, husband and wife is a relative. Or father, mother, brother, sister, son, son's wife, daughter, daughter, husband. Getting it? Now here you see daughter, stepdaughter is not there. That kind of observations and all stop. புரியுதா? நம்ம கேட்ட content இல்லல தான் இந்த மாதிரி observations எல்லாம் highlight பண்ண முடியும். So there is no intention here. Getting it? So all of you clear on ceiling limit, all that? So that's it. Disqualifications is done. So maximum tax audit assignments, how many you can accept? 60 per financial year. That is per financial year, not at any point of time. Whereas company audit 20 at any point of time. Be clear. Next. Next we will have to discuss appointment of auditors. Until now, everyone clear? Next. Getting more clarity? Next. Appointment of auditors. Appointment of auditors. See, the appointment of auditors process involves two things. One is selection of auditor. One is selection of auditors. One is actually appointment process. Now again, selection of auditor is different for government company and selection of auditor is different for non-government company. Here also, selection of auditor is, appointment of auditor is different for government company. Appointment of auditor for non-government company, the process is different. Now, we have only in our we don't have in our syllabus how to select auditor for government company. We don't have how to select auditor for government company. We don't have in the syllabus. We have in syllabus how to select auditor for non-government company, procedure for appointment for government company, procedure for appointment for non-government company. Everything we have in our syllabus. Now here, what is a government company? 4 criteria are there. If any of these 4 criteria are satisfied by a company, it's a government company. Criteria 1, not less than 51% of the voting power held by central government. Or criteria 2, not less than 51% held by state governments, one or more state governments. Criteria 3, A combination of central and state together held minimum 51% of voting power. Or if a government company is a subsidiary of another government, if a company is a subsidiary of another government company, then that company is also government company. Only these 4 criteria. Are you getting the point? Now, many have this confusion. What is private limited company? What is public limited company? What is private sector? What is public sector? So this is where we will have an opportunity to discuss that. See, private limited company means what? The ownership of this company is restricted to private people. My company is not open to public. Anybody going on roadside public cannot come into ownership. Yes or no? You saw my company, you liked it. You want to become owner. No, not possible. It's private. Able to understand? The affairs of the company are private, confidential. Are you getting the point? What is public limited? I'm open to public. My company shares are open to public. My members can sell to anybody. Anybody can buy and become a member. That is public limited. Understood the word public limited means what? Private limited means what? Concept part. Now, next, in this, how many of you have cleared group 1 already? Oh, நிறைய பேர் இருக்காங்க. Fine, it's okay. Now, what is public sector and private sector? Public sector, okay, ITC. What is it? Private sector or public sector? ITC Limited. Public sector. Major ownership is held by government. Yes or no? Tata Consultancy Services Limited. Listed company. Big listed company. Public limited listed company. Public sector or private sector? Private sector. Why in TCS? Less than 50%, more than 50%, more than 50% ownership is held by not government, somebody else. Some shareholders. We are we government? No, we are public. If more than 51% of the voting power is held by government directly, central, state, what? Then only it is called as public sector undertaking. Otherwise, it is not public sector. Reliance, all these are public limited companies, but private sector. Private sector, public sector is not company law term. It's an economics term. Understood? In Companies Act, will you find the word private sector? Clear? Understood? That's it. So, government company means naturally public sector. Non-government company, private sector. Now, non-government company can be private limited company, public limited company. This is company law terminology. Understood the difference between public limited company and public sector company? Public sector means government owned. It may be public limited. Public limited company not necessarily government owned. Reliance Industries Limited is a public limited company. Public like you and me can buy shares, no? But is it government owned? So it's private sector. Understood? Private banks we call. Private bank means what? Private limited company, huh? ICICI Bank is a private bank. But what is ICICI company name full form? ICICI Limited. Where is private word in that? But we are calling it as private bank because it is owned by private people, not government. Now, see how to select the auditor. In case if a company is having audit committee, So what do you mean by audit committee? See, in a company, there are many board of directors. If you look at Reliance Industries Limited, it has many directors. Just a minute. So you take this is Reliance Industries Limited, and in this company, you see there are 14 directors totally. There are how many directors? 14 directors. These are the directors of Reliance company. Getting it? And you see here, so Mukesh Ambani, he is one of the directors, chairman and managing director. Neeta Ambani, non-executive director. See again, directors know there are various types. Independent director, non-independent director. Independent director is something like who do not have any interest in the company. who do not have any relationship with the company. He's just a director. Director simpliciter. We call him as. Like how auditor, same independent director. He's appointed based on merit. He's appointed to look at the company, monitor the company, watchdog. Getting it? Now you see, in listed companies or in many big companies, 14 directors were there, right? Now this company, business will be taken care, business has to be looked upon, accounts have to be maintained, audit has to be conducted. There are so many works which CSR activities have to be undertaken, governance activities have to be undertaken, HR policy should be designed, company risk and all has to be, strategic risk management and all they need to check. Strategic management, you might have studied, no, business risk analysis, they need to do. Do you think all these 14 directors will do all the activities? No. How the board of directors work? They divide the work between them. They divide the work between them. So that's why, how do they form? They form committees. How do they form? They form committees. There are 14 directors. Whenever board meeting is held, all 14 will present. But whenever accounts and audit shall be discussed, accounts and audit, some 4 directors are there. 4 of you take care of accounts and audit. 4 of you will take care of how? Form a committee. What committee? Audit committee. Business risk analysis has to be done every day. Some 3 directors were there. 3 of you please form. That is a risk management committee. Company HR policies shall be designed. Human resource policy, salary policy, increment policy, all that. Human resources and nomination and remuneration committee. Some directors together, 3 or 4 of them will form. Company finance completely has to be looked upon. Finance committee. Company CSR project. Some directors have to be looked upon. CSR committee. Overall governance aspects have to be checked upon. Corporate governance committee. Stakeholder relationship committee. Likewise, there are many committees which has to be formed. One example of committee is what? Audit committee. So audit committee will have whom? Board of directors. Will all directors will come in audit committee? No. Few of them will come in part of audit committee. So which companies this committee is mandatory? Now whenever audit committee is there, what will happen? They will exclusively look into audit related aspects. They will exclusively look into financial statements, preparation related things and all. They will guide. Whenever a company has audit committee, those charged with governance means whom? Audit committee. Those charged with whom governance means what? Audit committee, then board of directors. Higher level. Board is ultimate. Audit committee is below board. But audit committee will give recommendations to board. Audit committee will guide the board of directors. Not every director is having knowledge of accounts and audit. But audit committee directors will have that knowledge, Because the members of audit committee must have, composition of audit committee. The audit committee will have minimum 3 directors. Majority means 51% shall be independent. The members of audit committee shall be able to read and understand financial statement. They should have financial statements knowledge. Do you think financial statements can be understood by everybody? Going concern means what? Only you and me can understand. Because we have that question. Because it is important for exams. Will our parents, even though they are educated, do they understand going concern topic if at all they are not from commerce background? Suppose your father or your mother or your relative, some of them is working in a tech company. No idea about commerce, balance sheet, nothing. You go and ask him, hey, this company is preparing financial statements on going concern basis using generally accepted accounting principles. You will not understand anything. Correct? So financial statement is not something that can be understood easily. So audit committee, whoever director is coming part of audit committee, they must be having the knowledge to read financial statements. Now, so that is how company has to constitute audit committee. Now tell me, for whom this is applicable? All listed companies, audit committee is compulsory. Unlisted public companies, any of the 3 criteria if they satisfy, any of the following 3 criteria if they satisfy, audit committee is required. Here actually exceeding 50 crore they say, it is only more. 50 crore is not there, only more than 50 crore. But this kind of mock observation is not required. Getting it? In institute they will not ask an MCQ, is it 50 or more than 50? They will not ask that kind of question. Getting it? Broadly you remember, that's enough. Next, these limits shall be taken as on last preceding audited balance sheet date. Now, what is the selection of auditor for appointment of auditor? Before appointment, first you should select the auditor. No. Now, what is the procedure for selection? Suppose, first you see, if audit committee is constituted, then the auditor shall be selected by audit committee. If audit committee is constituted, then auditor must be selected by audit committee and recommended to board of directors. Board of directors can't appoint. They will recommend it to members. By the way, we are discussing this entire provision from which company point of view? Government point of view, non-government. Government company selection we don't have in syllabus. Government company auditor selection is taken care by C&AG. C&AG has some panel where you and me have to register. We chartered accountants register. If C&AG want government company appointment, they will allocate audit. They will select auditor on suitable basis. So you and me cannot decide that. So C&AG. But for non-government company, auditor will be selected by audit committee. They will recommend to board of directors and board will recommend to members. Members will appoint. Sometimes audit committee will select the board. No. Board of directors may not agree. Then what board of directors will do? Please audit committee change another person. Audit committee decided not to change. No, I will go with the same person. ABC and chartered accountants are very good. Board of directors are not okay. Now who will prevail? Whose decision ultimately will prevail? Board of directors. And whenever board of directors disagree with audit committee, they should record the reason. Able to understand. And wherever audit committee and board of directors disagreed with each other, corporate governance issue, it shall be given in annual report. Why board disagreed with the committees and what is the reason? They should give information in the annual report as per SEBI. Generally, board will not disagree. But if at all they disagree, they need to give explanation to all the shareholders why you did not follow audit committee. Audit committee, honest people, independent directors. They will take right decision. Why are you rejecting them? Are you getting the point? People will question. Understood or not? So ultimately they will recommend to members. Members will come and appoint the auditor. And that appointed auditor, his appointment is valid up to 6th AGM conclusion. This is a broad process. This is what we clearly mentioned. Board may agree with the proposed auditor. If board disagrees with the recommendation, refer to audit committee for revision. Audit committee decided not to change. Then board can recommend to auditor, proposed auditor, and the fact that they disagree with committee selection and reasons, members may take final action. Easy. Next. So what is the appointment procedure? What is the provisions related to appointment? Now here, again, I told you appointment process is different for government company and non-government company. Again, for government company itself, we have how to appoint first auditor, how to appoint subsequent auditor. Non-government company also we have how to appoint first auditor, how to appoint subsequent auditor. Who is a first auditor? If the auditor is appointed for the first year of its incorporation, we call him as first auditor. Nothing but if the auditor is appointed for conducting audit of first financial year, we call him as first auditor. Any other auditor is subsequent auditor. Getting it? You know, company financial year. No, there is a definition for financial year. If company financial year shall end on 31st March, shall gap, the maximum duration of financial year is what? 15 months. Maximum financial year can have how many months? 15. Only in the first year 15 months is possible. Getting it? Suppose if a company is incorporated between January 1st and 31st March, only between this, if company is incorporated on or after 1st January up to 31st March, only within these 90 days or 91 days, whatever, if a company got incorporated, it can have more than 12 months financial year. If a company incorporated on January, generally closing should be done by 31st March. But immediate 31st March I will not do. I will go beyond 31st March. Are you getting the point? I will go beyond 31st March. One of the students have told me indirectly, a company cannot have less than 3 months financial year. That interpretation is wrong because that is not a condition. Able to understand? Simple. If a company incorporated in January 1st, by 31st March instead of closing, I will close on the next 31st March. Suppose I incorporated on 1st January 2022. I will close my books of accounts on 2023. What is the gap? 15 months. Suppose I incorporated on 1st March 2022. I will close on 31st March 2024. The gap is more than 15 months. So not permitted. So 2023. Gap is less than 15 months? Yes. Accepted. Suppose I am incorporating company on 1st December 2021. Let me check up to 31st March 2023. Gap is again more than 15 months. Not permitted. But I should close on 31st March only. So which year I should come? 4 months. It is permitted. Okay. Less than 15. It can be 15 or less than 15. And should close by 31st March. So this is first year. So in some exceptional cases, first year can be more than 12 months. But not exceeding 15 months. Only first year. Second year onwards, April onwards, it will start again close on 31st March. All other years will be only 12 months. Very clear. Next. So if auditor is appointed for the first year of incorporation, we call him as first auditor. Remaining are called as subsequent auditors. Now, in case of government company, first we will discuss provisions for government company. So what is the procedure for appointment of auditor in case of government company? The first auditor will be appointed by whom? Selection will be by C&AG. Appointment will also be C&AG within 60 days from the date of registration. Many students fail to write the word from the date of registration. Complete answer. If C&AG fails to appoint, board of directors will appoint within next 30 days. If board also fails to appoint, inform the members who will appoint within 60 days at EGM. This point many people will not write. And not only this, whoever is appointed, his appointment is valid up to conclusion of next AGM. Conclusion what many people will miss. Until next AGM, until conclusion of next AGM. What's the difference? Suppose I planned the AGM on 10th August. But on that day, quorum was not formed. Or quorum was formed, some additional discussion came. AGM was adjourned to 17th August. Now AGM finally concluded when 17th August. Now if I say appointment is valid up to until next AGM means what? 10th August. Conclusion of next AGM means what? 17th August. What is the provision? Conclusion of first AGM. So the auditor appointment, auditor shall hold office till conclusion of first AGM. Able to understand. So whenever a question has been asked on this practical question, you should write fully like this, provision. Now, what about subsequent auditor of government company? Appointment of subsequent auditor for government company. The C&AG only shall appoint within 180 days from the date of commencement of the financial year, and his appointment is valid till the conclusion of next AGM. Conclusion of next AGM. Are you getting it? For non-government company, we will check with the dates. Getting it? Now, what is the appointment procedure for non-government company? First auditor. First auditor of non-government company. Who will appoint? Board of directors will appoint. First auditor of non-government company shall be appointed by board of directors within 30 days from the date of incorporation. If they fail to appoint, inform the members. Members shall appoint the auditor within 90 days at EGM. 90 days will be calculated from date of registration. 90 days is calculated from date of registration. If board fails within 30 days, next 60 days members will appoint. But instead of defining next 60, what they said? Just within 90 they said. Now 90 means what? From which date? Incorporation date. Are you getting it? But don't write 60 days word. Write only 90 from incorporation. Don't even mention from incorporation. Just you understand that. You just simply write within 90 days. That's it. Are you clear? And the auditor will hold office till conclusion of first AGM. Clear? Now, we'll take an example here. Suppose a company XYZ Limited was incorporated on 10th April 2020. This is the year when the company was incorporated. So first year is what actually? What is the first year? 10th April 2022, 31st March 2020. Okay, sorry, 2021. Now within 30 days means by 10th May we should appoint the auditor. Let us assume board of directors has appointed on 5th May. Board of directors have appointed on 5th May Mr. A as the auditor. Now Mr. A appointment is valid up to conclusion of first AGM. Company year is over on 31st March 2021. First AGM will be conducted within 9 months, no? But company decided to conduct within June itself. They didn't wait up to 6 months also, within 3 months itself. Every time the company will conduct AGM in June month only. Let us assume 15th June 2021 is first AGM for the company. Is a first AGM for the company. No adjournment, nothing. Same day, everything concluded. Mr. A appointment is valid up to 15th June. Now, Mr. A is reappointed. Mr. A is reappointed for how many years? Subsequent auditor. Mr. A is appointed on the same day again. Mr. A is appointed. Mr. A is appointed on the same day again. Now his appointment is valid up to 6th AGM. Conclusion of 6th AGM. Which means this is year 1, this you don't count. So here he is appointed. Now first he will do audit of which year? Or let us assume Mr. B is appointed. Mr. B is appointed as subsequent auditor in the first AGM, whose appointment is valid up to 6th AGM from the conclusion of first AGM. Now Mr. B will do audit of which year first? 1st April 21, 31st March 22. So 21-22 he will do audit. 2021 last year auditor did. He audited. What about 21-22? Who will do audit? B will do. That year will over on 31st March 22. AGM is conducted 15th June 2022. Will he leave the company? No. Again he will do audit of 22-23. The AGM is conducted on 15th June 2023. Again he will do audit of 23-24. Then AGM will be completed on 15th June 2024. Same date company is conducting AGM. Let us assume. Sir, what if it is Sunday? Don't ask. Okay. Just for the sake of example. Next. 24-25. Same 15th June 2025. Again 25-26. 31st March 2026. Books of accounts closed. And audit is done in the 2026 AGM. Completely everything is done. Now he will leave. Now you see, this is the 6th AGM. From the AGM where he was appointed. Suppose if I call this as 1, 2, 3, 4, 5, 6. Suppose if the auditor is appointed in 40th AGM. His appointment is valid up to conclusion of 45th AGM. If auditor is appointed in the conclusion of 45th AGM, his appointment is valid up to conclusion of 50th AGM. Likewise it will come. Able to understand, all of you. Correct? So, now you see, for how many years he is doing audit totally? How many financial years? 5 financial years he is doing audit. Able to understand? Now, we will say no, auditor is appointed for 5 years. Not correct. Auditor is appointed for conducting audit of 5 financial years. That is correct sentence. Suppose no, first AGM is conducted in 15th June, whereas 6th AGM was conducted in September. Gap is more than 5 years. But 6 AGMs only. But gap is more than 5 years. Our first AGM was conducted in September. 5th AGM was conducted in June 6th. The gap is less than 5 years. So auditor may be appointed for a duration of more than 5 years or less than 5 years. But he will do audit of. That's it. Understood. Conceptually you should understand all this. Next. Next. So everyone clear all of this, all of you. So that's it. So that is regarding subsequent auditor provision. Every company shall at AGM appoint an individual or a firm, and appointed auditor shall hold office from the conclusion of that meeting till the conclusion of 6th AGM, and thereafter till the conclusion of every 6th AGM. Now this question has been asked. What are the certificates the company shall obtain from the proposed auditor or proposed cost auditor or proposed secretary, anybody? What are the certificates the company shall obtain from proposed cost auditor? They may ask you like this. Cost auditor also has same disqualifications. Before appointment is made, first get the consent. First of all, is he interested or not? Ask him. Don't give him a surprise that he was appointed. Correct? Next, A certificate indicating he is eligible and not disqualified. You should get a certificate that he should give a self-declaration that I am eligible to become auditor of the company. I met with qualification. I don't have any disqualification. And he should once again give declaration. Total number of audits after accepting this client also will be within ceiling limit. And I should give him list of pending cases against me or my partner or the firm indicated in proper manner. I should give all these declarations to the company. Only then company board of directors recommend to members. Then members will appoint. Yes or no? Once auditor is appointed by the company shall file a form with ROC within 15 days. The form number is ADT1. Mostly they will not ask this form number. Some senior citizens, whoever is setting paper, they will ask. Getting it? Now, வீட்டோ உக்கார மாட்ட சும்மா எக்ஸாம் பேப்பர் செட்டரா வந்துட்டு இந்த மாதிரி மொக்க கொஸ்டின் எல்லாம் கேள்வி கேட்பா. எஸ் ஆர் நோ? இது 30 days 60 days என்ன ஆச்சுன்னா என்ன ஆயிடும் உனக்கு எனக்கு? You should ask the concept. Yes or no? You should test the concept, analytical skills of the student. Next. Everyone clear? Where at any AGM, if no auditor is appointed or reappointed, existing will continue to be auditor. This provision is copy pasted from previous Companies Act to this Companies Act. Now in this Companies Act, no relevance for this. Getting the point? Earlier, no, before this 2013 Companies Act, we used to have appointment every year. Only after 2013 Companies Act, 5 years at a time appointment concept came. Now 5 years appointment concept at a time, we will not apply this provision. But still some super senior citizens setting the paper are questioning this. Because they don't know Companies Act 2013, they would have not read. They read only 1956, they're still in that only. Next. So, all of you clear? Everyone? Next. Provisions of filing casual vacancy. So, how to fill casual vacancy of the auditor? So, what is that vacancy? Casual vacancy. What is meant by the word casual? They just used casually. Promise. They just used the word casually. There is no significance for the word casual. See, when will I say casual vacancy? If at all uncasual vacancy is there, then it's a casual vacancy. Word have some significance. Is there any uncasual vacancy provision in the law? No. Simple. In auditor's office, no position, no. If auditor is not there in the position, he is disqualified because of some reason. Then there is a space, no, there is an empty, no, in the position. Who is auditor? So that vacancy is called as casual vacancy. Are you getting it? Now casual vacancy shall be filled. Yes or no? So how to fill the casual vacancy? First of all, what do you mean by casual vacancy? First of all, what do you mean by casual vacancy? In this example, the auditor was appointed on 15th June 2021. Yes or no? First AGM. And his appointment is valid up to 15th June 2026, which is 6th AGM conclusion. I am talking about non-government company. Example. Now, this is the date of appointment. This is the expiry of term. What is it called as? Expiry of the term. This is called term of appointment or tenure. So, once the term is over, then the term is expired. What you have to do on the expiry? You have to leave the company. But before expiry of the term, you left the company. The auditor left the company before expiry of term. Why he will leave the company before expiry of the term? There are many reasons. Yes or no? The auditor might have died, demise of the auditor. Or if it is a partnership form, dissolution might have happened. Or the auditor may become incompetent to contract. The auditor may have become incompetent to contract as per contract law. Or auditor might have been disqualified subsequently after the appointment. Subsequent disqualification immediately shall vacate, and that vacancy shall be treated as casual vacancy. Or auditor was removed by the company only removed, or tribunal removed. Either company or NCLT, someone have removed. Or auditor poita resignation. Auditor himself resigned. Any reason. By reason of by any reason, if the position of the auditor became empty, that vacancy is called as what? Casual vacancy. Remember, there is a definition for casual vacancy. Vacancy arising in auditor's office by any reason other than expiry of term. Other than expiry of term, if vacancy comes, that's a casual vacancy. Term expired, he left. That is not casual vacancy. 6 AGM, he will leave company. Is it vacancy? No, that is not casual vacancy. Before expiry of term, vacancy if arises, it's called as casual vacancy. Now, how to fill the casual vacancy is the question. Can I just leave like that, or should we fill the auditor? That is the question. We must fill the auditor. Casual vacancy in case of non-government company, what is the procedure? In case of government company, what is the procedure? This is the question. Now, in case of government company, casual vacancy shall be filled by whom? C&AG within 30 days. Hey, auditor left the company, man. Audit was not conducted. Books of accounts have to be prepared. Books are prepared. Auditor has to conduct the audit. Audit report should be given. We should send to all the shareholders. We should call for the general meeting. All this, if it should happen, audit must be done. And the auditor left. So we cannot continue like this without auditor. Can we conduct AGM without having financial statements? You might have seen in 137. Yes or no? So C&AG will appoint within 30 days. If C&AG do not fill, board of directors will fill within next 30 days. Now, what if it is a government company? What is the why auditor vacancy is there? Check it out. Auditor died, or dissolution in case of partnership firm, or incompetence to contract, or subsequently disqualified, or he was removed by the company. Any reason other than resignation. Vacancy arises not because of resignation. We only removed it. Board of directors can fill within next 30 days another chartered accountant. Suppose if it is resignation, the appointment shall be approved by company at the general meeting. Which general meeting? EGM, which will be convened within 3 months of the recommendation of the board. Board will recommend the auditor. They will not appoint. They don't have power to appoint here. They will recommend the auditor. Within 3 months, meeting will be conducted. Their auditor will be appointed. Are you getting the point? All of you. Sir, within 3 months, AGM only coming, sir. Can I directly appoint in AGM? If you want to conduct AGM, first books of accounts, financials, everything must be audited. No. Audit report must be there. No. Then only you can conduct AGM. Correct? Huh? In order to call AGM, you must send 21 days notice. Along with notice, what will you send? Financial statements and audit report. So, auditor resigned. Financial statements not ready. Financial statements were not audited. How can you call for AGM? At a time, how can you mix these two? So, first call AGM. Appoint auditor. He will do audit. Then again call AGM. He will explain to all the shareholders all the things. Clear? Now, we are appointing auditor, no? Government company, anyhow, it is appointment is valid up to next AGM conclusion. Non-government company, 5 years, no. In casual vacancy also 5 years it will come. No. In casual vacancy, if you are appointed, always your appointment will be until conclusion of next AGM only. Original auditor was appointed for 5 years. You are not appointed for 5 years. You are appointed temporarily. In AGM, people will decide. In AGM, people will decide. Able to understand. That's it. So what is casual vacancy meaning is also explained. Next. Now, auditor can resign, no? How he should resign? That is a question. How he should resign? Can he resign or not is debatable question. That you will understand in final. How to resign, all that. If at all you want to resign, what procedure you should follow? That is given under Companies Act. First, if you want to resign, inform the same to C&AG in case of government company. More importantly, first inform to the company. Yes or no? And you need to file a form with ROC in ADT3 within 30 days from the date of resignation. In auditing chapter, you will get totally 4 forms. ADT1, ADT2, ADT3 and 4. 1 and 2 filed by company. ADT3 and 4 filed by auditor. ADT3 resignation. ADT4 reporting of fraud. ADT1 appointment of auditor by the company. Means company did the appointment, so they need to inform. Company want to remove the auditor. Say they did removed, so they need to file. Resignation who did? Auditor. So he has to file. Fraud who should report? Auditor. So who should file? Auditor. That's why 1 and 2 by company, 3 and 4 by auditor. Understood. Next. Now, whatever the reason form you are filing, no, should you mention reason or not? Clearly. Whatever, anything is fine. Getting any reason you can mention. So, the auditor should mention the reasons and other facts that may be relevant regarding resignation. Suppose if you fail to comply with this, if you fail to comply with the above terms and conditions, you are liable for punishment under 140 subsection 3. What is the punishment? 140 subsection 3 says, 143 subsection 3 says, if you fail to inform the company, if you fail to inform the C&G, if you fail to mention the reason for resignation, if you fail to file ADT3 form with the ROC, any failure, you are liable for penalty. Penalty is having three parts: fixed penalty, variable penalty. In the law, you don't find these words. For understanding purpose, I am using. What is a fixed penalty? Auditor is liable for a penalty. What is the provision? In case if the auditor failed to comply with 140 subsection 2, he is liable for a penalty of 50,000 rupees or auditor's remuneration, whichever is lower, and for continuing failure, 500 rupees per day, subject to overall maximum of 2 lakhs. This is a question. This is a statement. Now, fixed penalty is how much? 50,000 rupees or remuneration, whichever is lower. And variable penalty is what? 500 rupees per day for continuing failure from the date of first failure. Now, when the first failure will start? After 30 days. After 30 days. Within 30 days, you have to inform. Up to 30th day, is there any failure on your part? After 30 days also, you didn't inform them. 31st day onwards, your failing start? No. So, every day is a failure? No. You are failing with the provision. So, for every day after 30 days, 500 rupees per day penalty we have to calculate. Now, as a whole, what is the maximum limit? 2 lakhs. That's it. Easy or not? Next. Now, then we still have removal of auditor. So, next. Removal of auditor. Now, removal of auditor is again having two provisions. Removal of auditor by company, removal of auditor by NCLT. Removal of auditor by company, removal of auditor by NCLT. Now, what is the procedure? If company board of directors want to remove, first board resolution is required. Then you must obtain central government approval within next 30 days. Getting it? Central government gave approval. You filed a form ADT2 to central government and got approval. After getting approval, within next 60 days, conduct an extraordinary general meeting. Inform the members what happened clearly. Pass special resolution. 3/4 majority is compulsory. Only if central government gave approval, only after passing special resolution, auditor will be removed. Otherwise, he will not be removed. Now, before you do this entire process, if you want to remove the auditor, first you should communicate him, no. Opportunity of being heard should be given, no. So, before removing the auditor, an opportunity of being heard shall be given. Now, here you see the provision. The rotation, I'll come back later, okay? So, provisions related to removal of auditor. Getting it? So, an opportunity of being heard shall be given to the auditor before removing him. Actually, in my main material, I think we have added a question. Why central government approval is required for removing an auditor before expiry of term? Actually, removal means what? Is it after expiry of term or before expiry of term? Logically, common sense, before. Term expired, he will only leave. Why you have to remove? After 6 months, you will only leave. Why should I suspend you? Correct? So, before expiry of the term only, removal, permission, prior government, prior approval of the government, everything is required. Otherwise, not required. Correct? So, in the main material, I have a question, additional question. Why central government approval is required? Why central government approval is required if auditor shall be removed before expiry of term? Suppose if auditor want to be removed after expiry of term, that is not removal, first of all. That is not removal. Auditor will naturally change. Able to understand. Now you have a provision here. 140 subsection 4. There is a provision. How to appoint an auditor other than retiring auditor. How to appoint an auditor other than retiring auditor. Special notice. Have you seen all that? So many will read that provision without understanding it. I will give you the logic here. Okay. So understood until now? Next. Removal of auditor by NCLT. When NCLT will remove the auditor? When NCLT will remove the auditor? If NCLT received an application from either tribunal on its own or central government or some aggrieved party. What application? Application is received that auditor of a company has acted in fraudulent manner, colluded with directors and officers and cheated public. then tribunal will direct the company to change auditor. Then that means casual vacancy arisen. Company will appoint another auditor. Government company, C&AG will appoint. Suppose if the application is made by central government. Central government means what? Income tax department, GST department, somebody. Okay, and tribunal satisfied that change is required. Then it shall make an order that he will not function as auditor within 15 days of receiving the application from central government. And central government may appoint another auditor in his place. Understood or not? Further, the auditor on whom this prohibition order was made, the auditor in respect of whom the prohibition order was passed, he will not be liable to become an auditor for another 5 years. The firm itself is disqualified for 5 years for all other companies. The firm against whom this disqualification notice was given, it is disqualified, for 5 years to do statutory audit for any company. Not only the company where you are removed, in every other company also you are disqualified for next 5 years. But this CFO can do non-audit services. Audit services they can't do. Able to understand. That's it. So that is regarding removal of auditors by tribunal. Next we have rotation of auditors. Getting it? Actually we have a spelling mistake here. So rotation of auditor. It's okay. If at all you have that any small mistake, you can take it out. Now, rotation is applicable for these companies. I'm not talking about the rotation. Applicability points. What is the manner of rotation? Why rotation of auditors concept came? To eliminate familiarity threat. If you are having continuous association with company for so many years, if you are continuing as an auditor for so many years, will you develop some bonding or not? Auditors and directors develop some bonding. Maybe you don't have any relationship with the company, business relation, you don't have shares, but your independence of mind will affect, no? Naturally, you develop some sympathy towards the client. They will develop some sympathy, some bonding will be developed. Now you are becoming more familiar. Mind is compromised now. Able to understand? So, compulsorily auditor has to be changed. By the way, this provision is applicable for which companies? Non-government companies. For government company, C&AG will take care. We are discussing rotation provision only for non-government company. Now, what is the rotation provision says? If at all a company appointed individual as an auditor, for how many years an individual can be appointed continuously? One term of 5 years. Not even 5 years, they say 5 consecutive years. Now, an individual completed one term. First, 39th AGM appointed, up to 44th AGM conclusion, this fellow is there. Can we reappoint him one more term? No. Can I reappoint one more term? No. Because he is an individual. For how many years we should block him? From expiry of the term till next 5 years, I should not appoint him. Suppose if it is a partnership firm, my auditor. Can I appoint at a time 10 years? No. I will appoint for one term of 5 consecutive years. Can I immediately reappoint for another term of 5 years? Yes. Another term we appointed. After 11th AGM, can we appoint again one more term of 5 years? No. How many years we should block them? 1. Getting it? Now, in my entire lifetime, with 2 auditors, can I manage? Happily, I can manage. 10 years, one firm appointed. 5 years, another auditor. Again, 10 years, I brought back the firm. Again, 5 years, this fellow will come back. With the 2 persons, with the 2 individuals or with the 2 firms, I can easily manipulate. No. Able to understand. All of you. Now, you see the word here, they use the word firm of auditors. Firm of auditors means sole proprietor of partnership firm. Act do not contain anything clearly, but ICI gave a notification saying it is, MCA gave a notification saying it is a partnership firm and LLP. Not sole proprietary firm. Sole proprietary firm is also firm only. Able to understand. Now, when you are rotating, getting it, what points you should take care. You should take care. Like we will call, if an auditor who is appointed in 39th AGM, he will be retiring in 44th AGM. He is retiring. Can I reappoint him means? I will check, is he eligible or not. If the company rotation is applicable, this is individual not eligible for reappointment. If not eligible for reappointment, retiring auditor will be reappointed or not? Not reappointed means he will leave the company. Then he is called as outgoing auditor. Now in his place another auditor is coming. No, we call him as incoming auditor. Now incoming audit firm, outgoing audit firm, common partner should not be there. If at all there is a common partner, the new firm is also blocked for 5 years. Outgoing auditor, incoming auditor shall not belong to same network, Airtel Jio, not that. Getting it? There are network firms in India, okay, like Deloitte, KPMG, ENY, BDO, PwC. There are so many network firms in India. Grant Thornton, getting it? So GT. So there are so many network firms that are there in India. Now network means what? It's a brand name. The actual firm is different. ABC & Co is a Deloitte firm. DEF & Co is also Deloitte firm. DHI & Co is also Deloitte firm. ABC & Co completed 10 years in one company, 2 terms. Now can I appoint DEF & Co which is also Deloitte network related firm? No. Network itself should change. Sir, what is network? How to form this network? All that you have in CA final ethics chapter. Now it is not required. Understood or not? Not only that, a person who is a partner in charge of the firm certifies the financial statements of the company, retire from the company and join another firm. The another firm is also disqualified for 5 years. Suppose last 10 years ABC & Co is our auditor. In that, Mr. A is signing our balance sheet P&L. Our company balance sheet P&L. Now that firm 10 years completed, left. Mr. A withdrawn from the firm, resigned from the firm also, came out, retirement of the partner, joined with another firm. Is it a common partner? No. He is not a common partner. He removed, no. In one partnership he came out. So common partner point cannot be applied. Now he joined another new firm, right? Can I appoint that as an auditor? Then also not appoint. No, you should not appoint. Now here people are making all wrong interpretations. Sir, Mr. A signed the financials and he resigned. He went to another firm. Then the firm is disqualified. Suppose ABC & Co, sir, 10 years they did audit. Mr. A is only signing our financials. But Mr. A did not come out. Mr. B came out and joined another firm. What about that? Still disqualified. Understand the intention of the law. Here, provisions, rotation principles are inclusive or exhaustive. Principles must be understood as inclusive. Understand the intention of the principle. Accordingly, if at all there is a resemblance of the partners, don't accept that audit. Don't accept them as an auditor. Clear? They only speak about 3 criteria, but doesn't mean only 3 you need to look into. Understand the logic behind that and accordingly fulfill it. Clear? Next. There is a question on this. The concept of joint audit. There is a correct or incorrect question on this. The Companies Act has some traces about joint audit, or the Companies Act do not contain any traces for joint audit. Correct or incorrect question? Incorrect. Actually in Companies Act, there is nowhere joint audit word is covered. Only in one provision it was covered, that too in the rotation of auditors. Here it is covered. Here it is covered. What they will say here? You see here, subject to the provisions of the Act, members may resolve that. What are they saying? Members may resolve that. In the firm appointed by it, auditing partner, nothing but engagement partner and team shall be rotated at such interval. What they can say? Okay, audit firm is appointed for 5 years. Sir, 5 years, same person don't come and do audit. Every year change. For better purpose. Members of the company may take that kind of decision also. Now, is it a normal rotation? Is it rotation? Is it change of auditor? Rotation of auditors means what, man? Change of the firm or change of partner? Firm. Here they are talking about what? Change of partner. That's why I call it as internal rotation. This is not firm changing, auditor changing. Just, sir, every year same partner. Why same partner every year? Every year let them come different partner. Is it compulsory by the way? No. Members if they resolve, then they have to follow. Or members may resolve. Audit will be conducted by more than one auditor. Members if they decided, joint auditors can be appointed. Now tell me, Companies Act 139 subsection 2 indirectly speaks about joint auditors, no? So, do Companies Act contain any reference to joint audit? Yes. Can I say Companies Act is not at all speaking about joint audit? No. Are you clear? All of you. Just a minute, I will show you the question how it will come. You see, I have given many questions, practical questions also. Okay, in the main book. I told, right, this is only a concept notes. Here we have given practical questions, how to present in the answer, everything is highlighted. So here the audit, true or false statements. In my main book at the end of the chapter, true or false statement is covered. You see, 19th question, you see true or false statement in my main book. The concept of joint audit has legal foothold under Companies Act 2013. Correct or incorrect statement? Correct. Under section 139, you can write 139 if you don't remember subsection. The members of company may resolve that audit shall be conducted by more than one auditor. Hence, the concept of joint audit has legal foothold. Legally, in Companies Act, identity is there. Companies Act is silent, generally joint audit, but indirectly through rotation, this point is indirectly covered, joint audit concept. That's it. With this, rotation is also completed. With this, rotation of auditors is also completed. Just one more provision I have. Before expiry of term, everything we finished. No, powers of auditor, all that I'll discuss later. Along with audit report, I'll cover. Powers, duties, all that. Reporting of fraud also I'll cover only with audit report. Audit of branch office accounts, applicability of provisions, appointment of auditor of all this I'll cover later. Provisions related to cost records, that also I'll cover later. So, what is the procedure for appointment of auditor other than retiring auditor? Generally, no. Suppose retiring auditor means what? Suppose we appointed auditor at 39th AGM. His appointment is valid up to 44th AGM. Suppose company directors, they decided, okay, let us change auditors. Until 44th AGM, he will continue. Before that, they will have board meeting. Audit committee will say another auditor name. They will approve. They will send AGM notice that in the 44th AGM, another auditor will be appointed up to 49th AGM. Notice has been sent. Members came. New auditor was appointed. Correct? How appointment of new auditor will happen? Suppose I have right now Mr. A. 44th AGM, until that his appointment is valid. Now, 44th AGM onwards, I want to appoint Mr. B. What is the process I will follow? Company. Board of Directors will form a resolution. What resolution? 44th AGM onwards, Mr. B will be our auditor. Now, AGM notice they will send to the members. In the notice, they will mention Mr. B will be our upcoming auditor from 44th AGM to 49th AGM. Shareholders will come, approve it, over. Correct? Where is special notice in this? Where is special notice? Here they are saying no, special notice shall be required. Have you read this provision? All of you, how many of you have read this provision? 140 subsection 4. It says special notice. Suppose, look at this situation. Suppose appointed auditor, Mr. A, in 39th AGM. Up to 44th AGM, his appointment is valid. Company decided, directors, they decided, Mr. A is working very well. Let us appoint same auditor from 44 to 49. Forget about rotation, all that for the timing. The company rotation does not apply. Okay, fine. So, 44 to 49 also same auditor. Now, company sent me notice. Hey, come for AGM. In that notice, I saw same auditor is going to be reappointed. I am a key shareholder. Who am I? key shareholder having 1% voting power in the company. Getting it? I thought auditor will be changed. Because previously Mr. A is our auditor, right? Up to 44th AGM, he is having so many cases pending against him. Right now he is an auditor for one company which is in insolvency. He is facing so many cases against. If the same person is our company auditor, I am worried. But anyhow, appointment was made. 44th AGM, he will leave. Directors will only change voluntarily, I thought. Directors only will voluntarily change. So I can happily come and approve new auditor. But when I saw the notice, I shocked. What the notice says? Mr. A is proposed to be reappointed. Along with me, every shareholder have received. What will happen if I don't react? Everybody will come, approve and leave happily. But I am a key shareholder. I don't want this to happen. What can I do? I will give special notice to the company 14 days before the AGM. Because they sent me notice 21 days before. And I saw within 7 days I should react. So I should send notice to company. Within 14 days, before 14 days before the AGM, I will send a notice, special notice. I am objecting Mr. A's reappointment. The following are the reasons. Please circulate my special notice to every other shareholder. Company circulated to every other shareholder. Until now, how many companies circulated? 2 documents. First document, director's intention to reappoint. Second document, one of the shareholders' objection on reappointment. Now auditor also, he will also receive special notice. Auditor said, hey, on me, what are these objections? I will give reply on this. Auditor gave written representation to the company at least 7 days before meeting. Company shall distribute this written representation to all other shareholders, including me, who sent the notice. Now everybody got 3 documents. Original notice, there Mr. A is being reappointed as proposed by directors. Special notice objecting Mr. A reappointment. Mr. A reply on the objection. Now shareholders will come. They have all the 3 documents, entire information. They will take the final call. Suppose shareholders believed special notice. What will happen? Will they reappoint the auditor? No. Now tell me, other than retiring auditor, we will appoint obviously another auditor. So in this situation only special notice is required. Otherwise, suppose if company itself decided to change to Mr. B, will I issue special notice? Company itself sent a new auditor name. Should I issue notice saying don't appoint existing auditor? Yeah, that's what now we mentioned in the notice. Able to understand. That's it. So that's the power. Have you read special notice provisions in company's law? Company law? Have you? That's it. So with this 140 subsection 4 is also completed. Suppose for the company rotation is applicable. 5 years individual completed. Should you give special notice telling the company don't appoint once? Already we don't appoint. Law will not permit, first of all. You need not tell. So that's what the last note point. This provision need not be applied where retiring auditor completed tenure of 5 years as per 139. Means if rotation of auditors provision is applicable, already tenure completed, company has to change. Even if company reappointed, board of directors are liable for punishment. Understood or not? That's it. Major provisions of company audit chapter are discussed. Remaining provisions of company audit we will have to discuss after audit report. So next chapter will start audit report. Comfortable? Yes. Easy? That's it. Okay. So we'll start tomorrow the audit report chapter. We'll continue in the next session. Okay. Thank you. So let's continue. So what auditor has to report? In the CARO, what are the points that auditor has to comment? So if you check here, so these are the points which auditor has to comment in CARO. So these clauses shall be reported as part of auditor's report as referred under SAS 700. Under which paragraph? Reporting on other legal and regulatory requirements. There, these points will appear. Now, what are the points that auditor has to check? Only important points we will discuss. Getting it? Now, first, auditor has to talk about fixed assets. The first thing which auditor has to report is about fixed assets. Inside fixed assets, there are 5 reporting requirements totally. A, B, C, D. There are 5 reporting requirements which auditor has to discuss. First one which auditor has to discuss is regarding fixed asset register. The side headings which I am giving is like I made it just for easy reference. Getting it? In the original CARO order or in the ICI book, there are no side headings like this. Now what auditor has to check regarding the register? Whether the company is maintaining proper records, showing full particulars like quantity details, location, situation of fixed assets, including intangible and PPE both. So what is this called as fixed asset register? See, every organization, they will have so many tables, so many chairs, so many air conditioner systems, yes or no, printers, and they have conference rooms, conference tables. Imagine a big IT company. They'll have security cameras. Yes or no, they'll have various security systems. They'll have server rooms. They'll have electrical fittings, generators. Yes or no, fire extinguishers. Imagine a company, how many assets they have. Should they have a control on that or not? How do the company will have a control on the assets? They will record it. What they'll do? They will record first. Whenever they buy an asset, whenever they buy something, they first record it in a register. Purchased so and so asset on so and so date. Date of purchase, from whom, supplier, date of installation, amount paid, GST, depreciable amount, depreciation, written down value. Like this they will maintain a register. Installation place. Building number 5, floor number 4, right side. They need to put installation details also. This is an internal control. Now tell me, maintaining this kind of record, is it alone sufficient? Company has to check physically whether the asset is there or not. Yes or no? So, physical verification also auditor has to check. Able to understand? So first please auditor, check, is this company which you are doing audit? Okay, I understand. You gave opinion on the balance sheet P&L showing everything is true and fair, fine. Is this company properly taking care of the assets? Is the question of the shareholders. The company has invested money in so many assets. Now my worry is this company properly taking care of these assets? First tell me, do they have a control on the assets register? And are they physically verified by management at reasonable interval? Is these fixed assets verified by management at reasonable interval? What is reasonable interval? It depends upon the nature and size of the organization and the controls implemented by them. Nature and size of the organization, controls implemented by them. You imagine Reliance Digital, Chroma, any store like this, electronic appliances, Bajaj Electronics or whatever, Pi Electronics, any electronic shop you imagine. Just imagine Sharvana stores. Can you bring anything from inside the store to outside without billing? How highly the controls are? Yes or no? Okay, forget about stores. Can you bring any fixed asset of the Sharvana store from inside to outside, any chair? Can you bring outside? The controls are so rigid. Yes or no? The controls are so rigid. Security guards were there, CCTV cameras were there, employees are monitoring. Yes or no? The controls are very high. Now, the fixed assets of these kinds of companies, big companies, where they're having completely campus surrounding by electrical fencing, security setup, CCTV surveillance. When this kind of structure is there in the campus, it is highly difficult for anybody to bring outside any asset of the company. Correct? The controls are so strong. So tell me, in such a kind of company, do we need to regularly verify physically? Is asset there or not? Chair there or not? Computer there or not? Should we check physically? Impossible. Whenever employee is entering inside, he is screened. Whenever he is going outside also, screening is done. So obviously there is no possibility that assets will move out without authorization, without management approval. Now in these kinds of companies, assets can be verified physically once in 3 years, once in 5 years. Getting it? Tata Motors is verifying fixed assets once in 3 years. But understand, physical verification is not that easy. It is not that easy what you think. You need to take up a paper, go to the building, go to each floor, record how many tables were there, record how many chairs were there. In this room, if I give you a paper, what are all the assets were identified except walls? If I ask you to make a list of it, you will take at least half an hour. Only in this room where there are no assets. Yes or no? This podium 1, this chair is there. Below some CPU is there. There is some speaker. There is some amplifier. There is another speaker. There are projector screens. There are 2 projectors. Yes or no? And there are chairs. There are 3 air conditioners. There is some controlling unit. Power controlling unit. It takes at least 15 minutes for writing down and listing it. Yes or no? Imagine a company spread in 130 acres. Having big buildings. Having so many chairs. Working approximately 20,000 employees. This classroom having 100-150 capacity itself is having these many assets. Imagine a company where work atmosphere is created, workstations, tables, phones, dedicated phones. Think about laboratories, inside that all the equipment. How many assets were there? Physical verification is not easy. Getting the point? So, in Tata Motors, every day whenever you go, in one of the campus in Tata Motor, in one of the campus in Tata Consultancy Services, every day physical verification will happen. Every day, somewhere it will happen. But by the time once I verify one fixed asset, again I will come back to that asset and verify when? After 3 years. In the manner, within 3 years, remaining assets are being verified. Are you getting it? So auditor has to check whether these fixed assets are physically verified by management at reasonable interval. Suppose if they are identifying discrepancies, material discrepancies. Discrepancy means shortage or excess. Are they properly dealt in the books of accounts? That is what the auditor has to check. Now I will ask management, what is the physical verification you did? Internal auditors gave a report. They found some shortage and excess. How they were dealt in the books of accounts, I saw the treatment and all. Everything appears fine. Then I will give here positive comment. Are you getting the point? Next. Whether the title of immovable properties, are they held in the name of the company? In the balance sheet, fixed assets, land and building, you are showing so much. Where is the title deed? Ask. See in whose name the title deed was. It is in the name of the company or not. Or if it is in the name of board of directors. Why the property is not registered in company name, but why on board of directors name? Description of the property, gross carrying value, in whose name it is held. Why it is not held in the name of the company? Auditor has to give this information. You are saying financials are true and fair, but you need to verify all these points and report to all the users. Next, revaluation. Auditor has to check. What auditor has to check? Whether the company has revalued its PPE and intangible, nothing but whether the company has revalued its fixed assets. If so, who has done the revaluation? Is it performed by a registered valuer? Is it performed by a registered valuer? And suppose if the revaluation effect is 10% or more in the net carrying value of each class of property, plant and equipment and intangible, net carrying value of each class of PPE. Net carrying value of each class of PPE. What is the percentage of change in case of revaluation? If it is 10% or more, how much amount has been changed? You should mention. Example, suppose in balance sheet of a company, getting it? This is current year figure. Fixed assets, you check it out. They have something called plant and machinery, one class. Furniture, another class. Electrical fittings, motor vehicles. Now plant and machinery, if you check, inside that they are having some 10,000 crore. You open the breakup. Notes to accounts is having the breakup. Getting it? This plant and machinery original was 15,000 crore. 15,000 crore. Now, minus depreciation during the year 2,000 crore. Minus revaluation effect is 3,000 crore. Like that, it came approximately to 10,000 crore. What is the figure before revaluation? 12,000 crore. Only these two. Ignore revaluation. Without revaluation, what is the change? What is the value? Net carrying value 12. What is the change in the net carrying value because of revaluation? 20%. Now is it more than 10%? Now auditor has to mention in CARO what? How much amount changed? 2,000 crore. Downward revaluation. Auditor has to mention. When this amount has to be mentioned? If the percentage of change in net carrying value because of revaluation is 10% or more. Clear? Like this a question can come in exam. Getting it? Don't think it will not come. Last time in CA final it was asked in working capital. Sir, the final, sir, adunale. No. Sometimes CA inter paper was much tougher than final. Most of these topics are there in final, you know. CARO is there in final. All the topics that we are discussing till date is there in final. In fact, compared to final, you are being tested much more difficult questions. Sometimes same topic. Getting it? All of you. Next. Now, suppose on this company, if any Benami Property Act related proceedings are they started against the company or pending against the company, auditor has to give, auditor has to check whether company has disclosed them in the financial statements. Whenever Benami Transactions Act, getting it? Benami law. Under that particular law, if any proceeding is pending on the company or any proceeding is started during the year on the company, did the company disclosed honestly in the balance sheet P&L notes? Check it out. If yes, say that it is disclosed. Suppose there are no cases against the company at all, say that they are not available. Are you clear? Now you see how auditor has to report in CARO. So auditor has to report on legal and regulatory requirements. Yes or no? You see what auditor has reported. What auditor has reported below. Annexure 1. What auditors of Tata are saying? The company maintained proper records showing particulars, quantitative details, situation. The company maintained proper records for intangibles. The physical verification of these PP are verified in a phased manner over a period of 3 years. And according to the having regard to the size of the company, the verification is reasonable. No material discrepancies were noticed. Means auditors are giving everything positive comment. Now here, the title deeds of immovable properties are disclosed in the name of the company. They were in the name of the company. The company has not revalued. Accordingly, that clause is not applicable. Now the company has no proceedings under Benami Property Transactions Act. Everywhere auditor gave which comment? Positive. Understood or not? Next, inventory. 2 points auditor has to check. Whether physical verification of inventory, whether the physical verification of inventory is conducted by management at reasonable interval. If any discrepancy is there for each class of inventory more than 10%, 10% or more difference in physical verification noticed, how they have been dealt in the books. If excess inventory is noticed on physical verification, they will record. If shortage is noticed, they will eliminate from the books of accounts after taking some approval, all that. See whether it is done or not. Suppose working capital loan has been obtained by the company by showing stock statement, debtors statement. By showing current assets, company got loan. Hypothecation of current assets, company got working capital loan. Suppose if the company has sanctioned working capital loan in excess of 5 crore rupee, then this point is applicable. If the company is sanctioned with working capital limit of more than 5 crore, this point is applicable. Now, what auditor has to check? Whether during any point of time the company has been sanctioned with working capital limit in excess of 5 crore in aggregate from banks on the basis of security of current assets. If so, actually one point is missing here. If so, I will open the direct, I think here it is missing. So, there is another point inside this, refer main material. Getting it? Refer main material, that is important thing. That is an important thing. What's the page? Yeah. Just I'll reopen this file. The second part is most important part. Actually, the second part is most important part. You see here, whether company has availed any working capital loan in excess of 5 crores. If so, the quarterly returns, quarterly statements filed by the company with the banks and financial institutions, are they matching with the books of accounts of the company? If not, give details. This is most important point. If the company has sanctioned with more than 5 crore working capital limit by hypothecation of current assets as a security, auditor has to check whether quarterly statements filed with the banks are they agreement with books of accounts. See, in banks, no. You will be sanctioned with 5 crore, okay. But how much you can withdraw, it depends upon drawing power. It depends upon drawing power. Drawing power is fixed based on the value of the security given by you. What is the value of the stock and value of the current assets? You give me quarterly statements, no. Based on that, I will give you drawing power. What some companies do, as per books of accounts, current assets are 100 crore only. But when they are giving statement to the bank, they will say current assets are 130 crore. When they are giving statement to the bank, what they'll do? The current assets are 130 crore. Is it a material misstatement in the financial statement? How come? Bank statement, whatever statement I'm giving to bank, I'm giving mistake. Stock statement I sent it to bank, there it contains mistake. How come it is a mistake in financials? In my books value correct only. But the statement which I am filing with the bank, there is a mistake. Now these kinds of frauds people are doing. Getting it and getting higher loan, and at the end when the default, when the bank is going and selling the fixed current assets, no. Because they have lien, they have security. They are realizing that current assets are very less. All these days companies manipulating by giving false statements. That statements are certified by CS also. Getting the point? So to curb that kind of practice, this CARO point has been implemented. So the stat auditor has to check what statements company is submitting to bank, what is actually as per the books of accounts. Auditor has to check. Able to understand. Now you see what Tata Motors have reported. So physical verification is done. That is positive comment they have given. You see how many differences they have given. According to the information explanation, the company has been sanctioned with working capital limit in excess of 5 crore. Okay. In our opinion, the quarterly return statements filed by the company with the banks and financial institutions are in agreement with the books of accounts of the company. They are saying positive, except statements for the quarter ended 30th June, 30th September, 31st December filed with all the banks in India were listed. All the banks in India were listed. Except statements filed with these banks for 3 quarters, there is a difference of how much? 689 crore, 490 crore, 758 crore, some 30, some like 38 crore. So like this there is a difference. Okay, here again 44 crore, so much. Now, these statements were subsequently rectified after 31st March and submitted to respective statements. Auditor would have scolded the company, hey, what is this? Okay, management said, that's our business practice. Auditor will say, no, I have to report in CARO. What to do? You only tell. Company would have asked auditor. So you at least now give revised statement saying that past time statements filed was incorrect. Company gave. Now I need to qualify. If you qualify next year, you are not my auditor. Okay, what should I do? I'll put everything under exception. All the banks covered, no? Statements filed with State Bank of India, Bank of America, Citibank, HDFC Bank, ICICI Bank, Standard Chartered Bank, Union Bank, Kotak Mahindra Bank, Bank of Baroda. What else left? With these many banks, all the quarters related statements were containing mistakes, deviations. Should auditor say they are matching or not matching? You should say negative comment, not matching. But auditor said agreement, except everything kept under exception. Is the bike in good condition? Yes, excellent. Only thing, tires is to be replaced. Wheels were broken. Engine is it's noisy. Okay. And light is not working. Signal lights are not at all there. But bike isn't working in good condition. Yes or no? Next. Understood the point or not? Next. Investments, guarantees, security, loans and advances. This point is little lengthy. So what we need to cover is, first of all, the auditor has to check whether the company has given loans, advances, investments, guarantees to any other person. If so, how much aggregate amount given during the year? How much aggregate amount given during the year to subsidiary, joint venture, associates and to other than subsidiary, joint venture and associate? If company has given loans and advances to subsidiary, associate, joint venture, how much you gave? To others, how much you gave? Same way, what is balance outstanding at balance sheet date? And what is outstanding at balance sheet date? Subsidiary, associate, joint venture, I shortcut called it as related party. Remaining are called as unrelated party only for reference sake, but it is not related party definition. They clearly used the word subsidiary, joint venture, associate. How much loan you gave during the year? And tell me what is outstanding at the end of the year. To other persons, how much you gave during the year? What is outstanding as on 31st March? You see, like what Tata Motors have replied. You see what Tata Motors have replied? They have given aggregate amount during the year 110 crores given to subsidiaries, associates, joint ventures, and to others how much it is given? 18 crore. What is outstanding as on balance sheet date? Subsidiary, associate, joint venture, total outstanding 620 crore. And for with respect to others, total outstanding 32 crore. And to suppliers, how much is total outstanding? 61 crore. So this is the loans and this is advance in the nature of loan. What is advance in the nature of loan? What is advance in the nature of loan? Sometimes we give advance to supplier. Generally, advance given to supplier will be adjusted against subsequent purchase. But when amount is given to supplier, how come it is treated as nature of loan? It is something a kind of deposit. So it's an advance given to supplier, but it has a nature of loan. Able to understand? It's something kind of security deposit. Who knows? But you gave to supplier, no? It is not treated as deposit. It is treated as loan. Now, next. So, related party, unrelated. Now, what auditor has to check in the next? How the terms and conditions of this loan? How the terms and conditions? Are they prejudicial to the company interest? If they are something affecting the company interest, auditor has to be very careful. Now, auditor has to check whether repayment is made regularly or not. You are giving loan. A company gave loan. Check whether the other parties are repaying the company on time or not. If they are paying on due date, regular. If at all always delay, irregular. Suppose if somebody is liable to pay for more than 90 days overdue, what recovery steps company has taken, auditor has to check. You see, Tata Motors have given that. According to the information explanation given, in our opinion, repayment of principal were regular, except in case of two subsidiaries which are there outside India, 600 crore, interest 140 crore was due for payment in earlier years, means overdue for more than 90 days. They were not collected because they are not recoverable as these subsidiaries are in losses and amounts have been provided for, means what? Provision is created in books of accounts. Now, the company has converted the loans given to subsidiaries into investments. Loan given, no, it is turned into equity capital. And have you understood? You might have done this in internal reconstruction. Creditors will be given shares. Something like that. Next. Now, they are asking one more. The company gives loans, right? Now, they are liable for due, right? Suppose the other party is not repaying regularly. We will call them and ask, why are you not repaying regularly? He said, I'm having severe financial difficulty. What we will do? We will reschedule the loan. Okay, fine, I understand your situation. Take 6 months time. After 6 months you pay me. That's called reschedulement or extension. Getting it? I extended credit period and loan schedule of repayment have been changed completely. Or I have given some fresh loan. Do one thing, take this loan, repay that, and let's start a new agreement on this. I'll give a fresh loan to repay original loan. Specify aggregate amount of such loans which are renewed, which are extended, which are settled by fresh loans. How much of the total loans given by the company were in the form of rescheduling, renewal and fresh loan? What is the percentage of aggregate up to the total loans and advances out of total loans given by the company during the year? How much percentage of loans were given for reschedulement, renewal and extension, all that, fresh loans? Auditor has to specify the percentage. In Tata Motors, there is no such thing. Now, another question. Whether company given loans to anybody which is repayable on demand. I gave a loan, when the other party has to pay. Whenever I ask, they have to pay. So auditor has to check, did the company that you are doing audit, did they give any loan to anybody which is repayable on demand, or where without specifying repayment, or you didn't mention repayment time? If so, how much aggregate amount, percentage you give as part of loans? Company during the year gave 100 crore, out of which 3 crores were given on demand loan. 3 crore is demand loan, 3%. And aggregate amount of the loans granted to promoters, related parties. How much demand loans you gave to promoters and related parties? Are you clear? Then other loans point is not required. Deposits point is not required. It's very simple. Cost records is very easy. Next, statutory dues. I'm only covering important points. Okay. Statutory dues. Now, statutory dues have been broadly divided into 2 parts. One is undisputed statutory due. See, in smart notes, when I'm taking, I discovered in the previous class, I discovered rotation, one spelling mistake. Now, in this one, working capital second point is missing. I will change it. That's why I'm telling you, after the end of the marathon, I will give entire smart notes. Only when I'm taking revision class, I will check it much more focused. Getting it? The intensity of checking is much more higher than normal checking. Okay, so that's why I will upload after all the corrections. That time you take. So then only we will also finalize for printout. So by this month end, the printout will be available, hard copy. Let's make it month end, not now. Getting it? Let's make it by month end. You can book on this rest application for the material. I will announce through a video all that. Okay, don't be hurry. So that if we check everything properly, at least until this we need to check. Remaining parts, it's okay. Part 1 of the main material up to CARO, whatever is there, that only we need to check because this is law. Remaining points are normal. Very rare it will miss. Are you clear? You see the sample of mistakes. In 100 pages, we discovered two mistakes. Okay, next. What else? Where am I? Statutory dues, sorry. So statutory dues. Statutory dues. The statutory dues shall be broadly divided by CARO into 2 parts. The statutory dues will be divided into 2 parts. Undisputed statutory dues. Disputed statutory dues. Disputed statutory dues. Undisputed dues. Disputed dues. Now, undisputed statutory due. What is disputed statutory due? Suppose, first of all, what is a statutory due? If any amount that I am liable to pay because of the law. Any amount I am liable to pay because of the compulsion under law. Then that is called as statutory due. Electricity bill. Is it a statutory due? Is it a statutory due? Electricity bill. No. It's a good. Electricity is goods. You are purchasing and using the electricity, so you are paying. If I don't take electricity connection, why should I pay? Or if I have electricity connection, I don't use electricity, why should I pay? Is it compulsory under law? It is not tax, income tax, electricity income tax madriya, GST madriya, no, right? It's not something like GST, income tax, provident fund, ESI, profession tax, municipal tax, property tax. Correct? It's not something like taxes and duties. Electricity is a goods. You can touch and feel. Yes or no? Getting it? So, it is movable from one place to another place. You can store it. All the characteristics of goods were there. It's a commodity. It is not a statutory due. Now, these statutory dues are broadly divided into two types. Undisputed, disputed. Now, suppose I am doing business and I am paying GST to the government every month. Now, GST department sent a notice to me mentioning that the rate of GST applicable on my product is this much, not whatever that you are paying 5%, but 18% applies on your product, and they calculated entire amount and asking me to pay finally some 15 lakhs. Able to understand? They straight away passed a demand order. Now will I pay? Okay sir, thank you sir, will I pay? No. I will go to higher authority. I will go to appeal authority above them. Whoever passed me order, I will not go to him. I will go to his superior authority. I will file a complaint on him. Getting it? Why should I pay? I will give my explanation. Now will the case settle immediately? Now the due is there, no. Department raised a demand on me. Now there is a due. Is it under dispute or not? Yes. Now that's called disputed due. So auditor has to ask the company where and all the company is having disputed statutory dues. First ask the list. Now give report. What you need to report? Forum where the dispute is pending and how much amount is pending in the dispute. My amount is pending in GST appellate tribunal. GST appellate tribunal. Amount is 15 lakhs. I will also give much more information related to 21-22. And it is due under GST law. You see, Tata Motors auditors have given that information. You see, Income Tax Act, income tax due 2 crore related to these years. 1995. Okay, forum where the dispute is pending, High Court. Getting it? So where the dispute is pending, you see, these many disputed dues were there. Central Excise Service Tax, STAT, we call it as. Appellate authority at commissioner level. Even under GST also they have. GST appellate tribunal. These many pending dues were there. Auditor has to take this information from company and paste it here. That's it. Will the company win the case or lose the case? No need to tell. Getting it? All of you. So that is the reporting requirement for disputed. So in case if the dues were not deposited because of dispute, auditor shall indicate how much amount forum. But you see, Tata Motors is giving much more information to which year it belongs to, under which act it belongs to. Everything they are giving even more clear picture. Next. Now, undisputed means what? Every month I am paying tax voluntary, Every month Provident Fund I am paying voluntarily, ESI I am paying voluntarily, TDS I am paying, advance tax I am paying, GST every month I am paying voluntarily. Now, is it I am paying voluntarily, Are they because of any dispute? No, I am paying voluntarily. These are called as voluntary payments. Voluntary is different from free. I am not giving freely to the government. Because I am using government resources, I am paying taxes. Getting it? Voluntary doesn't mean optional. Every month I will only compute how much GST collected from customer. I will pay honestly to the department next month 20th. These kinds of payments are called as undisputed due. Now what auditor has to report? You have to check in the company whether the company regularly depositing undisputed dues. Company has to pay every month voluntarily some taxes and duties. Are they paying voluntarily? On time. Regular means what? On time, due date. Check it out. If not, extent of arrears outstanding for more than 6 months, which are still existing on the last day of the financial year. As on 31st March, the tax was still outstanding. That was outstanding by before how many months? More than 6 months it is outstanding. Auditor has to give the list of it. Are you getting the point? So this is the undisputed due. So they'll ask a question like this. Write about a reporting requirement under CARO 2020 for the auditor regarding undisputed statutory due, 2 mark. Write about audit reporting requirement for working capital loan under CARO 2020, 2 marks. Like this, a 4 marks question will come. Understood? Next. 8th point is not required. Default in repayment of due, you can understand easily. Okay, I'll cover that as well. Default in repayment of dues. Dues means what? For the company it is due, means what? Liability. Company has taken loans from FIs, bank, debenture holder, governments. The company has taken loans. Now what auditor has to check? Is there any default? Is there any default? What is default? EMI I have to pay on 10th. I did not pay. 11th, 12th, 13th, 14th. No. I defaulted. Sir, I paid late. Still default is there? No. Late payment is a default? No. So auditor has to check whether there is any default. If so, suppose if there is a default, for how many days there is a default, how much amount is defaulted, mention the following format, name of the borrowing, okay, like a motor vehicle loan for the company director, name of the lender, HDFC Limited, amount not paid on due date, 1,50,000 EMI was not paid on so and so dates, principal or interest or both, EMI, principal, delay in days, some 40 days, remarks, company paid later and rectified. Able to understand? Auditor has to give a report like this. Next. Is the company which you are auditing, is that company was declared as a willful defaulter by any bank? Check it out. Ask a CIBIL report of the company. They'll generate and give you. See the CIBIL report. Is this company declared as a willful defaulter? Who is a willful defaulter? You're having money, but you're not paying. He is called as willful defaulter. Vijay Mallya, Nirav Modi, all these people were treated as what? Willful defaulter. Suppose bank gave you loan, you invested, you started business, big restaurant chain you opened across India. Almost 15,000 crore invested across India, you opened a big restaurant. Lockdown came. Continuously 5 months. Complete, entire assets was destroyed. Getting it? Completely gone. Now tell me, are you a willful defaulter? Here I didn't pay banks. I defaulted. I became insolvent. I didn't pay. But this caused because of the misfortune. It's not that I intentionally defaulted. So in this case, you are not treated as defaulted. If a person don't pay loan to bank, he is willful defaulter. No. Ungalaketa cash irundittu. Still you didn't repay. Then you are treated as what? Willful defaulter. Same way. Next auditor has to check. Did company got any loan? Yes. For what purpose they got? Some purpose. Working capital loan. Building loan they got. For what purpose they used it? It is used for payment of director remuneration. Getting it? They got a loan for construction of building but used it for director salary payment. Auditor has to report. If not, amount of loan diverted shall be reported. Diversion of amount. Did the company got any short-term loan? Yes, working capital loan. But used it for construction of building. Again danger. It will affect company default solvency. Same way. Did the company take any loan? Yes. This loan is used for what purpose? For subsidiary company needs. For meeting subsidiary company needs. Okay, you have taken loan for meeting subsidiary company needs. Yes. If so, details you have to give. Have you taken any loan? Yes. What security you gave? I have shares in my subsidiary company, no? That shares I kept as security to the bank. And I took a loan. And I defaulted. What will happen? Bank will take ownership in the subsidiary company. Yes or no? I have ownership in the company. That ownership I kept as encumbrance and I took a loan and I defaulted. Who will become owner? Bank will become owner. Whether the company has raised any loan on pledge of securities held in subsidiary, associate, joint venture. If so, details you have to give. And report, is there any default in repayment of such loan? If you default in repayment of loan taken on security of shares held in joint venture, associate and subsidiaries, and if you default in that, you will lose that ownership. You will lose that subsidiary relationship. Are you clear? That's it. Then end use of IPO. This is same like old CARO. You can understand, no change. Next, reporting of fraud. Whether any fraud by the company, whether any fraud on the company, has been noticed or reported. Check it out. Now, whether any frauds by the company, on the company, by officer or employee, earlier it is there, now it is removed. On the company, even an outsider do a fraud. Company identified the fraud. Please report it. Company committed a fraud. There is a history. Please report it. And all these frauds are identified by whom? Management. The company itself identified. Auditor did not identify. Whether any frauds by the company or on the company has been noticed or reported. If company management noticed and reported, take a list of it and report it. See, Tata Motors have reported. You see, during the course of our audit, no material frauds by the company or on the company have been noticed or reported, except we have been informed about 3 incidents where aggregate 15 crore involving 3 employees in collusion with vendors processed payments without proper documents. The services of these employees are terminated. Auditors gave no nature of fraud, amount involved, mentioned the nature of fraud is what? Purchases, vendor related fraud. Amount involved is what? Aggregate, 15 crore. That's what CARO is asking, no? If so, nature and amount involved. Clear? Next, 143.12. This is regarding if auditor identified, here auditor identifying the fraud. If auditor identifies a fraud newly, which company did not identify, for an amount involving more than 1 crore, he shall inform to central government no within 60 days. ADT 4 form he will file. Whether such form has been filed, you have to mention here. Tata Motors said nothing has been found. Next. Now, company is receiving whistleblower complaints. Whistleblower mechanism will be there in a company. If at all any employee of the company or management of the company came across something suspicious, fraudulent, they will put a complaint to the, directors of the company. Whistleblower complaints, we call it as. Auditor has to check. Tata Motors, did they receive whistleblower complaints? Check it out. Yes, they have received so many. Have they been considered in your audit? Yes, I have considered. That's it. No need to mention what complaint they received. Getting the point? You see what Tata Motors have commented. We have taken into consideration the whistleblower complaints received by the company during the year while determining our audit procedure, while planning our audit, while deciding nature of audit. All the complaints received by the company we considered, and accordingly our risk assessment procedure was impacted. Able to understand? Next. Nidhi company point not required, related party point not required, internal audit system. This point may be required for you. Important. Now they are asking, section 138. Some companies should have compulsory internal audit department. Some companies should have compulsory internal audit department. Whether the company is having internal audit system which is proportionate, commensurate with the size and nature of the business. Suppose company is having so many operations, so many transactions, so many. Namesake, one internal auditor is appointed. Is it sufficient? Auditor has to say. Say now, okay, suppose company is having proportionately good number of internal auditors. There is a department itself, super. Now they'll give reports, no? Will you check those reports or not? For your audit. I will check internal audit reports so that I will know much more things better. So whether the reports of internal auditors, are these considered by you statutory auditor? Check it out. Are you clear? Non-cash not required, NBFC point also not required for you. That is important at final. Cash losses. Here they are asking whether the company incurred cash loss in the financial year and in the immediately preceding financial year. If so, amount of cash loss. Right now, suppose this is 21-22 audit report. So current year means 21-22. Previous year is 20-21. Now in this year, is there any cash loss? Check it out. Last year also, is there any cash loss? Check it out. Report it here. What is cash loss? Now in P&L, profit after tax, there is a loss. For that, you add back non-cash expenditure which is debited to P&L. What are non-cash expenditures? Provisions, depreciations, all that. Add back, you will arrive cash loss exactly. Suppose after adding back non-cash items, loss is turning into profit. Is there any cash loss for the company? No. Able to understand. Next, they are asking one more question. During the year, did any auditor resign from the company? Sir, if auditor resigned, why will he report, sir? Another auditor came, no. I am the auditor appointed under casual vacancy. I am not the original auditor. I was appointed now temporarily until next AGM conclusion. Previously, one auditor is there, he resigned. Have you taken the issues? Why he resigned? Objections, concerns raised by outgoing auditor. Have you considered them? You know, in CA Act, you will get at CA final. There is a clause called clause number 8, part number 1, schedule number 1 of Chartered Accountants Act. Whenever we are accepting an audit, previously if somebody else did the audit of the company, we should first get NOC from them. We should get from them NOC. Only then we can accept the audit. So this auditor previously resigned, no, he has communicated with him, previous auditor. Now he raised some issues and objections. How did you dealt with it? They are asking. First of all, is there any resignation? Check it out. If so, then you need to verify this. Are you all clear? Next, material uncertainty. Material uncertainty. Just 2 minutes gap. Next one. CARO is asking you to check, is there any material uncertainty? They are asking you to check, is there any material uncertainty? So, whether you follow SCA 570 procedure properly or not, this point you need to check compulsorily. What they are asking you, you know, on the basis of company financial ratios, aging analysis, realization of assets, payment of liabilities, other information, knowledge of directors and management plans. You saw so many things, you interacted with so many. Whether the auditor is of the opinion that, first one they are asking, whether the auditor is of the opinion that no material uncertainty exists as on the date of auditor's report. As on the date of auditor's report. On the date when you are giving audit report, you should check this point. That the company is capable of meeting its liabilities existing at the date of balance sheet. I am signing balance sheet now. On a particular date I am signing now. Balance sheet date is 31st March, but I will be signing it on some other date. That date is called as audit report date. On the date on which you are signing the audit report or the balance sheet. As on 31st March balance sheet date, there are some liabilities, right? And you are signing the audit report and balance sheet after 2 months. You have seen 2 months post balance sheet. In the balance sheet, there are so many liabilities. Do you still feel the company will repay all the liabilities on time? Check it out. So auditor has to do cash flow analysis, funds flow analysis here. Auditor has to see, is there a possibility of default by the company to any creditor, debtor, any creditor, supplier, or any other loans or advances taken from bank? Yes or no? It is not only talking about past defaults, it is also talking about next defaults, yes or no, which will fall due within 1 year from balance sheet date. As on 31st March, there are so and so loans and advances liabilities. All these due dates were there within next 1 year. Do the company has ability to repay them within next 1 year? Now people are awake. Now the authorities are awake. Now they are asking auditors, hey, okay, past data, everything is true and fair, fine. You first tell me, company has liabilities, no. Next to 12 months, they are falling due, right? Will the company repay? Is there any material uncertainty? You are saying no material uncertainty. Specifically, give here your comment. Tomorrow if company default, first I will come and ask you why company defaulted, how it is defaulted. Suppose in between company did some manipulation and then defaulted, okay. Otherwise you didn't verify properly earlier. If you did not verify this point properly earlier, you did not apply audit procedure earlier, you are liable for Schedule 2 offense under Ethics, CA Act. Your certificate will be cancelled. 5 lakhs up to penalty will be levied. Able to understand? Next, CSR. Corporate Social Responsibility Fund. Now this is regarding See, in CSR, no, every year you have to spend some 2% of average net profit. Companies, no, especially big companies like Reliance, Tata, you take 2% of net profit will come somewhere to 500, 600, 700 crore. One of the approved project for CSR is rural development. Rural development means what? Laying of roads, water tanks, pipeline connections, drainage, sewerage, all that. Yes or no? Can this happen within single year? So these projects will be taken up by the company, which will range over 1.5 to 3 years. Max 3 years generally. Now the CSR point is saying what? You should spend 2% of the profits within the same year. How come when I am taking rural development project? So CSR rules permitted. If at all there is a project you are undertaking, suppose you are spending CSR money on a project mode and the project duration goes more than 1 year. Whatever money you unspent, right? Within 31st March you have some money, no, which is not yet spent, right? That money, keep it in a separate bank account. Within what time you should keep it in a separate bank account? It shall be transferred to special account. See whether that money has been transferred or not. Auditor, they're asking. Are you getting the point? And still there is some other amount which I thought originally to spend on normal projects within this year. 31st March I want to spend on normal projects, not more longer projects. I want to spend on all, like midday meals program, education programs like that I want to spend. I spent as much as possible, still some 10 crore left. Unspent. Is it related to ongoing project? No. Now what should I do this? This I should transfer within 6 months to the fund given under Schedule 7. Prime Minister National Relief Fund, CARES Fund. Like that there are so many funds. So if it is something other than ongoing project, see the funds have been transferred within 6 months from the end of the financial year as per Schedule 7. Check it out. That's it. Understood or not? If you understand CSR provision, then only you understand this. In CSR, if you understand unspent means what, spent means what, ongoing means what, other than ongoing, I gave you an example, yes or no. If you understand like this, you understand. All of you clear. That's it. Next. Whether there have been any qualification adverse remark by the respective auditors in CARO reports of companies included in consolidated. If yes, indicate details of companies, paragraphs, where and all qualified or adverse remarks were given. I'll show you Tata Motors consolidated financial statements report. Tata Motors consolidated financial statements report. You see, this is consolidated financial statements. And inside this, you see CARO point. Actually, consolidated financials will CARO come? No. But only 21st clause will apply. Yes or no? You see here. Consolidated financial statements. In our opinion, according to the information explanation, the following companies incorporated in India and are included in consolidated financial statements have adverse remarks, qualifications given by respective auditors. All these companies were consolidated as part of Tata Motors. Now, shareholder want to know, what about remaining companies' CARO point qualifications? In Tata Motors CARO report, auditors have qualified under point 2B, working capital qualification there. And 3C, loans and advances, company, subsidiary company did not pay 600 crore. 6-4, this is 4D, some investments guarantees that condition like that. Some 6A, this is regarding cost record, something like that. So under these clauses, they have some qualifications. So Tata Motors holding company. So this company financials, these are the paras in their standalone financials related audit report, CARO report, where there are qualifications. And Tata Motors Finance Solution, Tata Motors Finance, these are all subsidiary joint venture associates under which clauses the respective statutory auditors gave negative remark. We just gave a list. So I am a shareholder. I want to see all the qualifications of all the Tata company related. Which one? Tata company means Tata Motors related companies. I will see this. Okay, I'll directly open that audit report, open that clause to be, I'll see what qualification he made. Understood or not? To best of my knowledge, so 2B will come many places. 2B here is there, 2B here is there. Getting a 2B is what? Working capital. Many will violate that. That's it. With this, CARO is completed. All of you understood main provisions we discussed. You know now how to understand the CARO? Okay. That's it. Then we will have to discuss 143 subsection 1. We have to discuss 143 subsection 3. Sorry, checklist items. 143 subsection 3 we have to discuss. So the next one is regarding audit of cooperative societies. See, the cooperative societies are multiple types. There are multiple cooperative societies. The law governing the cooperative societies is, there are two laws. There are two laws and regulations. There is a third law, Cooperative Societies Act 1912, which is actually called as Central Act. Which is actually called as Central Act in this chapter. There is another law, Multi-State Cooperative Societies Act 2002. If a society is operating from more than one state, two or more than two states, then Multi-State Cooperative Societies Act is applicable. Now this is also actually called as Central Act because this is also an act governed by central government. So you can also call this as Central Act. But in the Cooperative Societies Act, in this Cooperative Societies chapter, Central Act generally means what? Original Cooperative Societies Act 1912. Apart from this, we have state cooperative society laws in various state governments. If a society is established in one state, if that state government has a society law, then naturally that society is governed by the state society law. Tamil Nadu Cooperative Societies Act is there. AP Cooperative Societies Act is there. Maharashtra Cooperative Societies Act is there. So West Bengal Societies law. So almost in many states, state level laws were there. So they will govern all the societies that were established in that particular state. Suppose if the society is operating in more than one state, respective state law you may have to comply, plus multi-state society law will also have to be complied. Now, if a society is operating in more than one state, which law will prevail? It is clarified in multi-state societies law. So they have given some guidelines on that, not there in our syllabus. Getting it? Now, what is the level of expectation from the student on this chapter? Low level of clarity. You need not have absolute clarity because we are not discussing entire society law. We are only discussing society law related to audit provisions. We are not discussing about operations of the cooperative society. We are not discussing about managing of the cooperative society, bylaws of the society. We are not discussing about all that. We are only discussing what elements? Audit elements in the society. Only audit related element, if you understand, that's enough. Are you clear? So, the level of knowledge expected from you on societies is only restricted to audit. That's it. Now you see. So what is a cooperative society? First of all, it's an independent autonomous association. It's independent, united voluntarily to meet common economic, social, cultural needs and aspirationals through a jointly owned enterprise. Getting it? Now, the law that is applicable is Central Cooperative Societies Act 1912. So cooperative society is nothing but a business entity where we pulling together all means of production cooperatively, elimination of middlemen and exploitation from outside forces. People form as a union and then work. And they register under society's law. Getting it? For every member's mutual benefit, for everyone's benefit, the society will be formed. Now they'll ask you a question on this. Cooperative society definition they'll give. So it's nothing but a mutual organization where resources are pooled together, like that they'll give you. And audit of societies is very important. Apart from audit, what other services the chartered accountants can render to societies? What other services a chartered accountant can render to cooperative societies? 4 marks question was asked earlier on this. So what services you can give him? You can do writing accounts. You can install softwares, accounting softwares and systems. You can do internal audit. You can do management accounting services. You can do taxation. You can do due diligence. There are many other services which you can do, but you need to write these points compulsorily. So a chartered accountant plays significant role in development of society's organization. Apart from audit, there are some professional services which can be rendered. They are as below. A slight 3 marks or 4 marks question might come. Understood or not? Next. Now, how to do audit of cooperative societies. Now we are discussing audit of cooperative societies as per original Act 1912. We are also discussing audit of cooperative societies under multi-state law. Which means in this chapter, you will find appointment procedure 2 times. Rights and duties of auditors 2 times. Able to understand? Apart from this, you will also find some provision called special audit, inquiry, inspection. That's it. This is the syllabus in this chapter. Nothing else. Getting it? Now, who will do the audit of cooperative society? Who will appoint? Registrar of the cooperative society. Like ROC is there in company, here also ROC there. But here it is Registrar of Cooperative Societies. He shall audit. He will only audit. Or he will cause by some person authorized by him in writing in this behalf for every society once at least in every year. Either the registrar can directly audit or the registrar will appoint somebody else to do audit. Getting it? What in audit? Auditor will mainly focus on overdue dates, valuation of assets and liabilities. What are the special aspects to be covered in societies? We have a separate question. There we will discuss. Understood or not? Next. Now, the registrar, the collector. Collector means district collectors will be there, no IAS officers. They will be appointed as generally registrars. For registrars of, who are the registrars of cooperative societies? Generally the collectors. Getting it? Or any person authorized. Tell at all time access to books, access to every officer who will furnish information in regarding transactions and workings of the society. So these are the powers of the registrar, nothing but powers of registrar of cooperative society. What are the powers of registrar of cooperative society? They may ask you a 3 marks question. The registrar, the collector or any other person authorized by his general or special order in writing have right to inspect books, papers, securities, cash, whatever. Or has the right to ask every officer to give that information regarding transactions and working of the society and may inspect in whatever the way he want. So registrar means what? Whoever is appointed to perform the duties of registrar of cooperative society. In many states, collectors were appointed. District level, regulatory mechanism is there. District level regulation is there. So wherever district level cooperative societies, they will be managed by collectors. Next, what is the form of audit report? The audit report format in prescribed form specified by registrar, or he will give the rules. What should be the format of audit report? If nothing is there, we follow SA 700 format. Getting it? So on completion of audit, the auditor has to submit the report to society, and copies also shall be forwarded to respective authorities like state special auditor, deputy registrar, district level deputy registrar, like that. What matters he will mention in the report? You see, all these matters, all these matters we have similar to 143.3 checklist. Whether he has obtained all information, explanation necessary, whether the accounts give information required by the Act, whether balance sheet P&L is giving true and fair view, yes or no, whether balance sheet, are they showing true state of affairs, proper books of accounts have been properly maintained, whether balance sheet P&L are in agreement with the books and returns. Same points, Same points we have seen in company audit. Audit reporting 143.3. Yes or no? Same, exactly same points. There the word is company, here the word is society. And if at all any point you are talking negatively, you need to give reasons, So the auditor has to give observations if any answer is negative. Now this is important. In addition to audit report and contents inside that, you have to give 4 schedules. You have to give mainly 4 schedules. You have to give 4 schedules to the audit report. What schedule number 1? If you find any transaction which is contrary to the provisions of the Act, rules and bylaws of the society, When you're doing audit, you discover some transaction, unauthorized transaction. It is not in the power of the managing person of the society. The managing person withdrawn money for personal use. That is unauthorized. It is against bylaws. Able to understand? Or if society has entered into any transaction that is against act, provisions, please list out all the transactions you identified in schedule 1. Able to understand? Second, all sums which ought to have been but not have been brought into accounts of the society, nothing but omission of receipts, nothing but omission of receipts or sales or incomes. Actually, there are some transactions which have to be entered in books but not entered. You discovered the omissions. You should give them in schedule 2. Any material, any property belonging to the society which is actually bad and doubtful, some asset of the society appears doubtful, give list of all doubtful properties and materials, assets in schedule 3. And material irregularity, impropriety in expenditure. Companies incurring expenditure without rules and regulations. Companies are incurring expenditure without taking proper care. 100 rupees items they are buying for 200. Unreasonable prices. Able to understand? That is called what? Impropriety. Propriety means reasonable. Impropriety means unreasonable. Or when money is due to the society, company is not collecting properly. All irregular, impropriety in expenditure, in realization, money is due to the society. If you find impropriety, irregularity in this, given schedule 4. Any other matter specified in schedule 5. So these are the schedules which auditor has to attach to audit report on the corporate society while presenting the report to the central registrar. Are you clear? Now, note, if you don't have any of the above points, you will give nil report. Clear? How many of you, honestly tell me, studied this chapter? This is a very simple chapter. You can easily score 5 marks. You should not read this chapter at last. You should read along with audit report. Because most of the points are similar to audit report and company audit. People don't understand. If you understand company audit and audit report, this chapter do not require explanation at all. You just give a plain readings conceptually, clearly if you understand, that's enough. Then, auditor has to fill audit memos. Auditor has to fill audit memos. And regarding what is audit memo, you refer later. Getting it? So, in addition to the audit certificate in prescribed form, various schedules, whatever we have discussed above, the auditor has to fill 2 sets of questionnaires. First set of questionnaire, he will fill, this is applicable for all types of transactions, getting all types of societies. So this is about general information about the society he has to give. The second set is applicable for specific type of society. What questions will be there inside that registrar will decide. Registrar will give you a questionnaire. You did audit, no? Now answer me all these questions. So the questionnaire will have 2 sets. Set A, first set and second set. First set is applicable generally for everyone. Every auditor has to fill that. Second set, depending upon your which society auditor. Are you society auditor of credit society, milk cooperative society, consumer society? Which auditor? Depending upon that second set you have to answer. And auditor will give audit report in narrative format. So the auditor report in a narrative format is submitted by auditor, will be addressed to the society chairman. Generally, narrative audit report is divided into 2 parts. Part 1 of the audit report, part 1 of the narrative audit report. They may ask you a question straight away on this. Write about narrative audit report of cooperative society. Part 1, it will give you information on financial position, capital structure, solvency position, profitability, and comments on the working of the society. And it must be suitably divided into paragraphs. Mistakes having an impact on the profitability of society shall also be mentioned in the part 1. Whereas part 2, if you have any observations on transactions, getting it, which are finished products of routine, vouch, post-audit, missing vouchers, loan bonds, inadequacy of documentation, like general points we will discuss. First point, you talk about the society position, capital structure, solvency position, financial position, and how the society is working as a whole. Generally, you will talk. Second point, you will talk. Some, in records were not maintained for inventory. some purchase invoices are missing, some bills authorization was missing, all clerical issues and all you will talk in part 2 of the audit report. This itself they can ask you as a question. Write about narrative audit report in case of cooperative societies. Then we have multi-state cooperative society. This is important, even more important. In this entire society law, this is even more important. Multi-state cooperative society is even more important. What it says? The Multi-State Cooperative Societies Act, getting it? This applies to every society whose objects are not confined to one state. Their objective is spread over multiple states, not one state. So this act contains detailed provision regarding registration, how to become a member in that society, management, like Companies Act, no. It contains how to form the company, who can enter as a member, how to manage the company. Everything is there in Companies Act. Multi-State Corporate Societies Act is very big, has around 100 sections. The funds of multi-state society cannot be used for any political purpose. They'll give you a true or false question on this. A multi-state corporate society has given a donation which is 2% of the average net profit. What is your answer? It is not 2, it is 3%. No, you should write incorrect. A multi-state corporate society is prohibited to give any donation to political party. And Multi-State Societies Act, no, it contains conditions regarding investments, restrictions on loans, borrowings, similar to company law. Next, every society shall maintain books of accounts for all sums of money received and expended, for all sale and purchase of goods, all assets and liabilities, particulars related to material, labor, items of cost in case the society engaged in production, manufacturing, all that. This is exactly books of accounts definition under Companies Act. Same definition, books of accounts definition. Next, auditors. Who can do the audit of a multi-state cooperative society? General cooperative society, who can do auditor? Normal as per Central Act. Registrar himself will do, or any other person authorized by him. Whereas multi-state society, only a chartered accountant who is having practice within the meaning of CA Act means who, you know, only the person having COP, who are not eligible to become auditor of a multi-state society, body corporate disqualified, officer or employee disqualified, member of the society is disqualified, who is in employment of an officer or employee is also disqualified. Actually, here there are two disqualifications. A person who is in employment of an officer or employee, he is also disqualified. A person who is a member is disqualified. Or a person who is indebted to the society, has given guarantee, provided any security on behalf of the third person exceeding 1,000. Exceeding 1,000. Actually, it's a continuation. I split it as ABC. Whether it is indebtedness, whether it is guarantee, whether it is surety, whatever, if it is exceeding 1,000 rupees, you are disqualified to become auditor of the society. Suppose after you are appointed, you are disqualified, then you are subsequently disqualified, no? You shall immediately vacate the office. That's it. So that is regarding qualification, disqualification. Now, what is the appointment procedure for multi-state cooperative societies? How to appoint first auditor? How to appoint subsequent auditor? Similar to Companies Act, yes or no? The authority, the board of directors of multi-state cooperative society within 1 month from the date of registration shall appoint. If board of directors fails, then society, multi-state society will conduct general meeting, no? There the members will appoint the first auditor. What is the time limit? They have not given. Next, until when first auditor appointment is valid? Till the conclusion of first AGM. Multi-state cooperative society, the law is similar to company law. Subsequent auditor. Members of multi-state society at each AGM, they will appoint subsequent auditor. His appointment is valid till the conclusion of, similar to company law. Now, previously they have asked this question. What is the procedure for appointment of auditors for multi-state cooperative society? The first auditor by board of directors within 1 month, if they fail to do so, then the members will appoint at the general meeting. His appointment is valid up to conclusion of first AGM. Subsequent auditor shall be appointed only by members at AGM. His appointment is valid up to conclusion of next AGM. Casual vacancy shall be filled by board of directors. That point is not given, but who will fill that? Board of directors. Understood or not? What are the powers of auditors of cooperative society? right to inspect to books, documents, right to get information, explanation from officers and employees. Same rights, no company law. This itself can be given as 2 marks question. Understood or not? What are the duties? He has duty to make inquiry. We have inquiries, under Companies Act 6 inquiries we have. So he has duty to inquire. Suppose if the society gave loans and advances by taking security, secured loans they gave. Now what you have to check? Are they properly secured? And what are the terms of the loan? Are they given? Are they prejudicial to the society? Are they unfavorable to the society? Auditor has to check out. Now whether transactions which are merely book entries, not prejudicial to the society. Book entries means depreciation provision, book adjustments. If any entries were passed only in the books of accounts, there is no proof for the invoice, nothing like that. No invoice, no proof, nothing. Are they reasonable transactions or not? You have to check out. Whether board of directors of the society incurred any personal expenditure, but charged to society profit and loss account, society revenue account. Auditor has to comment. Society, they have issued shares for cash. During the year, society issued shares for cash. Shares allotted for cash consideration. Now you need to check, is the cash actually received? If not, if no cash is received, position stated in the accounts is correct, regular and not misleading. Suppose if cash is not received, amount called up, but the other party have not paid, if shareholder did not pay, call scenarios, company showed properly or not, you have to check out. That's it. Now auditor shall give duty to give audit report. This is similar to duty to give report under Companies Act 143 subsection 2. Getting it? The auditor shall make a report to the members on the accounts given examined by him on every balance sheet and P&L. He should comment about true and fair view of state of affairs, profit or loss. Understood? Duty to state some matters. This is like checklist again. First 143 subsection 3. At the beginning of this session we discussed 4 items. First 4 points. First point, have you got information explanation? According to you, proper books of accounts maintained. Have you received the summary from branches not visited by you? Have you received the branch audit report? Whether balance sheet P&L are tallying with the books of accounts? Same 4 points copy pasted. But there it is company, here it is society. Suppose if any of the answer to the above is negative, auditor should mention reason. Understood or not? Now, next. This special audit has been asked as a question. They asked about applicability of special audit. Some 3 marks or 4 marks question they asked in past examination, in the previous exams. Now, this multi-state corporate society is normally every year subjected to audit. Every year, some auditor will be appointed who is a chartered accountant. In addition to this, government may order special audit. The government may order for special audit. So what is the criteria? The government may order for special audit. When a government can pass an order for special audit in a society, first condition is in that if the government is holding minimum 51% paid up capital, getting it? Either the central government or state government or both together. If the ownership of the government is minimum 51% in the society, then only they can think about special audit. Understood or not? Now, okay, government is having ownership, nothing but that society is now which society? Government owned multi-state cooperative society. It's a public sector multi-state cooperative society. Then government when will order special audit? If these 3 circumstances prevail. What? Affairs of the society are not managed as per the principles, practices. Prudently they are not doing the business. The society is doing very aggressively unethical practices. Getting it? Or society is managed in a manner which is causing serious injury, serious damage to the interest of the trade. They are taking anti-competitive practices. They are against anti-competitive law. Or the financial position of the society is, the financial position is endangering its solvency. The society's solvency is very badly affected. Government want to know why, what happened exactly. then the government can order special audit. First of all, if it is not owned by government, government will not worry. But since the society is owned by government, if these circumstances prevail, then the government will order for special audit. They'll ask you a correct or incorrect question. The government can order for special audit in case of any cooperative society where the society affairs are managed in such a way that is bringing injury or damage to the interest of the trade industry. Incorrect. A society, government can order for a special audit only if the paid up capital of not less than 51% is held by central government or state government or both, and society is being managed in such a way it is bringing injury or damage to the society. Are you clear? Now, what is the procedure for conducting special audit? First, special auditor must be appointed. Special auditor can be some other chartered accountant, or why to appoint another CA? Already society has a CA who is independent person. I will ask him, take these parameters, check the society once again as per these parameters. I will give him the clue how to do the special audit. I will give him the work. So the special audit, the government may direct special audit and shall be conducted and appoint either a CA separately or multi-state society auditor himself to conduct a special audit. Powers, same powers, whatever powers were there to normal auditor, same power special auditor also there. Now after doing the audit, special auditor will make a report to central government, and all the matters given under 73, 4 points were there here, checklist points. Every matter is covered in the special audit report. Now finally, after taking the report, government will take an action. Suppose government there is no action is taken within 4 months. Government within 4 months, if nothing is taken, which means society is completely fine, working fine. Government will just send the report to society for getting comments of the society. Okay, and the multi-state society will circulate the reports to members in the next general meeting. Now, special audit expenditure who will bear? Government decide and society will pay. Suppose if the society do not pay, it is recovered as land revenue arrear by the collector. How land revenue arrears are recovered by collectors? If you are not paying revenue properly, property tax, they will seize your home. So like that, collector has power to recover the revenue related to auditor's remuneration. Understood or not? Now, there is some inquiry inspection that is not required now. Now, special features of society. Like what are the special points while doing audit of society we must consider? The most important element in society is overdue debts. What is a overdue debt? Especially this is important for credit societies. Credit societies means what? They will give loans to their members. Now, overdue means what? Member we have given loan, but it is more than crossed due date. Now auditor has to check overdue debts for a period more than 6 months to 5 years. Overdue debt for more than 5 years. See that they are classified properly, and the same shall be reported by auditor. And see, compare with previous year. Previous year, how much is the overdue debt, and current year, what is the overdue debt to the ratio of working capital. Last year overdue debt totally how much divided by working capital how much. This year overdue debt how much divided by working capital how much. Look at the ratio analysis. Is there any improvement or or any deflation, like like non-performance? Next, see the recovery chances. Accordingly we need to make a provision for doubtful debts. So auditor has to check these 4 points related to overdue debts. They'll ask you a question, 3 marks question. Write about audit of overdue debts in case of cooperative society or multi-state cooperative society. Anyway they can ask. 3 marks. Understood or not? Now, what is overdue interest? You might have seen in bank, once an asset becomes NPA, interest on that NPA which is accruing shall not be recognized on accrual basis, but shall be recognized only on cash basis. Yes or no? Now, NPA interest here it is called as what? Overdue interest. Suppose a debt become overdue. On that interest will be accruing, no, so society following accrual system. Don't recognize that interest because principal itself is not coming. Okay, so overdue interest is an interest accrued or arising in the accounts where the principal is. What is accounting treatment? It should be excluded from interest income. Means don't treat it as income. That overdue interest shall be credited to overdue reserve account. We will credit that interest to what? Reserve. Whatever interest that we need to receive, no, we will credit to reserve and will be transferred to P&L whenever realized. In banks, no, whenever interest is overdue, on NPA interest, no, we will not recognize in P&L, but we will recognize it in memorandum account. We will recognize it in memorandum account. And once it is received, it will then be transferred to P&L. Next, classification of bad debts. Certification of bad debts. In some societies, no, in some societies law, getting it, auditor has to certify. Auditor has to approve. Only then society can treat it as bad debt. Now, if there is no auditor requirement, if there is no such kind of auditor condition, then managing committee will write off as bad debt. Auditor has to check who has authorized the bad debt. Then valuation of assets, all these are very normal. They are common for everybody. Then auditor has to give a special report to registrar. They may ask you a 3 marks or 4 marks question. Write about special report to registrar by auditor of a corporate society. If auditor identified irregularities like personal profiteering by members of managing committee, society directors, no, they are getting some profits out of the activities of the society. Personally, they are minting money from the society resources. Or frauds you identified, or mismanagement of the society, you need to make a special report to registrar. Everyone understood or not? And in credit societies, no, auditor has to check members' passbook regarding the loan given to members. It is something like external confirmation. Especially members' passbook and all you must do in case of rural societies. Because in rural area, members are not educated. They will take loan and lifetime they will be paying interest. They don't understand. Able to understand. That's it. Now after auditor do the audit, no, after auditor completes the audit, auditor has to give a classification to the society. Rating. This is something like rating. How the rating? Society overall, maintenance of accounts records, overall rating from auditor point of view. The judgment is based on criteria given by registrar. If society is not satisfied, no, about the audit class, it can make an appeal to registrar. Then registrar may review audit classification. So auditor should be very careful while making decision about audit class of the society. That's it. So now for a normal society, who can act as an auditor? The society, the registrar himself can act, or any other person. Any other person means whom? He is a person holding government diploma in cooperative accounts. Or he is a person who served as an auditor in cooperative department of government. They can act as an auditor. Or they may appoint chartered accountant happily. Understood or not? The appointment of auditor is made by whom? Registrar. And the auditor so appointed shall submit the report to whom? Registrar. Audit fees is paid by the society as per the fee prescribed by registrar. Now, books of accounts, all that. Getting it? Same. Books of accounts record society. Society, what books and all they need to maintain? They need to maintain all the books of accounts that fall under the definition. Can society maintain additional books? Can the society maintain additional books for their convenience? Yes, no. What problem? Society is at liberty to maintain additional records. Ultimately, transactions and results must be presented clearly. Able to understand. Now, in case of large societies, different books and registers shall be maintained. Daily summary totals, loan dispersal register, loan repayment register. Likewise, they will maintain many records. Understood or not? Then restrictions on shareholding, all this give a single reading. With this, society audit is completed. We only not covered 2 aspects. inquiry inspection by registrar, restrictions on share capital, restrictions on charitable purpose donations. These are all we have not covered. Hardly 2 topics we have not covered. They are not that important. But remember, sometimes it may come in exam. Getting it? So give a reading. First of all, I gave you a brief idea about entire society's audit. So it is exactly similar to company audit and auditor's report. Understood, all of you? That's it. So we have we have completed almost fundamentals, nature, objective and scope, company audit, audit report and society's audit. All this together will occupy a minimum weightage of 30 to 40 marks. 30, minimum is 30 from entire this topic to maximum 40. Getting it? Now we still have to discuss various other chapters. In that, the next one is audit documentation and evidence. In this chapter, we are actually discussing 230, 500 and 330. These 3 standards related content we are actually going to discuss. Getting it? Now first of all, how we do an audit? How we will do an audit? If you look at how we will do an audit is like, you see, we will have an audit plan like this. We will have an audit plan like this. Getting it? This is an example which I drafted in my regular class. Getting it? First we will plan. We will draw the audit plan. First what we do, first we will do risk assessment process. First we will do risk assessment process. Like how auditor will do audit in real life is, once a client appointed me. What is the steps in audit, First, the client board of directors might have felt some auditor is required. Then they'll delegate the responsibility to audit committee. Then audit committee will find auditors residing in that locality or maybe outside. Who knows? Auditor can be from anywhere, no? Yes or no? So audit committee will identify, trace out the auditor, finalize few firm names and pick out one. Suppose my firm is picked and that firm has been recommended to board of directors. The firm has been recommended to board of directors. Now the board of directors felt very comfortable with the profile I have. Getting it? With the previous experience our firm has, the staff numbers that we have, they felt we can handle the company audit very well. They recommended to members. Before recommending to members, they asked me few declarations. I gave free consent. I gave declaration that I am not disqualified. I gave declaration that audit ceiling I satisfied. I gave declaration about my pending cases, all that. I gave declarations. Then they recommended to members. Members appointed me. They sent me appointment letter. Then I sent my acceptance letter. That entire stuff is filed with ROC by filing ADT 1. Now before I start with any other work, first I gave an engagement letter. Making them understand what is an audit exactly. They also signed it and sent back. Now I am appointed. First I need to do audit of 21-22 financial year. Getting it? I was appointed somewhere in September 2021 when the AGM was conducted. So I will do audit of 21-22. Now I was appointed in 21 September itself. Year also not yet closed. I may do audit after 31st March or I may do audit immediately. I will start immediately the audit. Maybe balance sheet P&L is not ready, but books of accounts are being made, no. Every day books of accounts are being prepared, no. I will first verify first 6 months transactions. Then I will wait up to 31st March, then verify balance 6 months. Then I will verify balance sheet P&L. Anyway, I can do audit. Suppose, first what I will do in audit. First of all, doing audit means you are doing some process, correct? You are executing some process. Verification process, audit process, audit procedures. What is it actually called as? Audit procedures. Verification procedures. First I need to apply verification. What is audit? I need to verify something. So whatever procedure I am following, that is called audit procedure. SA 330, 315 and 330, both these standards cumulatively talk about audit procedures. Audit procedures will consist of risk assessment procedure. That is what SA 315 is covering. And audit procedure will consist of further audit procedure, which is SA 330. Further audit procedure is discussed under SA 330. So what is risk assessment? Risk assessment means first I will understand the company. First I need to understand what business they are doing. How are their processes? In the previous session also somewhere I clarified, if I don't understand the business, I don't understand how they are selling the goods. If I understand how they are selling the goods, how they are storing the inventory, based on that I can understand what method of inventory valuation the company has to adopt. So knowledge of client business is important in order to do a proper audit. Correct? Huh? So I need to understand the entity first and the environment, the law and regulation applicable to the entity. I will go through a walkthrough test. What is it called as? Walkthrough test. Getting it? I'll go to the factory. I'll observe how the factory premises is, how the factory surrounding is, how to enter into the factory, what controls they have. So what factory consists of? How much is the acres? Where and all warehouses were there? How the controls in the warehouse? How goods are taken out of the warehouse? What is the protocol to be followed? Able to understand. I do all this analysis. That analysis is called as what? Risk analysis. Risk assessment. When I am observing something, what am I trying to figure out? I am trying to figure out what can go wrong. What is it? What can go wrong? I entered into the factory. Getting it? I just went little bit ahead and I discovered the moment I entered into the inside factory plant, I discovered people are wearing multiple color uniforms. People are wearing multiple color uniforms. Some are wearing, orange t-shirts. Some are wearing green color t-shirts. Some are wearing some brown color coats. Getting it? Some workers are not wearing like any uniform kind of thing. Getting it? They are wearing in casual dresses. The moment I saw this, I felt a doubt. I got a doubt. Like, what is this coding? Uniform coding. What is this code? But somebody, there is no uniform code at all. I got a doubt. See, I have not yet started audit. I have not yet verified books of accounts. Nothing. No, nothing. First, I want to understand what the company is doing. What product they are dealing with. So I immediately called the production manager. The factory head is there, no? I asked him, so what is this color coding? He told me, sir, whoever is wearing this orange coat, whoever is wearing, they are our permanent employees. We recruited them. They are our employees, permanent. Whenever they retire, they'll leave the company, or when they want to resign, they'll resign. Otherwise, we don't. As long as they are working good, we will keep them, permanent employees. We will pay them salary, provident fund, ESI, everything we have. Okay, fine. So company has a HR policy. As per that, they are recruited. Something I understood. Then I asked, those who are wearing green dress, who are they? Sir, we don't require more than 200 permanent employees, sir. But every month we will get some project. Whenever we get a project, we want some extra 100 people at that time. Only project time we want. So that time we can't keep them idle every time. So what we do? Contract labor. They are what? Contract labor. So there is a supplier, sir, who will supply us additional people whenever we want. So those people will come for 20 days, will work, and we will settle the money to the contractor. He will pay wages to them. Contract labor. Then what about the people who are not wearing uniforms, who are wearing casual dresses? So what about them? They are daily laborers. They are daily laborers, casual laborers. So they are appointed for supportive works, not for the main works. Getting it? Whatever the permanent employee is doing, for them they will just put a support. Now every day outside the factory we will put a board. Today we want 25 workers. Today we want 48 workers. Like that we will put board. And they will enter. Now I have a problem here. Okay, these people are casual laborers, no? Daily laborers, right? How do you pay wages? Sir, again in that there is a classification, sir. Out of these daily laborers, some people are skilled, some people are semi-skilled, some people are unskilled. They don't know any work. If at all I ask him to bring glass of water, he'll go and bring glass of water. That's it. This is the kind of laborers, unskilled. Okay, what is the wage structure? For skilled labor, we will pay some 750 per day. Semi-skilled labor, we will pay 500. Unskilled labor, we will pay 300. Some amounts. I am just taking example. Don't check it with Industrial Dispute Act. Minimum payment of Minimum Wages Act. Getting it? I'm just giving an idea. So we will pay like this. How will you pay them? I asked. Sir, we pay them by cash, sir, at the end of the day. Morning they'll come, evening they'll go. Our cashier or somebody will come. So they all stand in the queue. We will pay that and then they'll leave. Have you seen Narasimha movie? In that there is a song, no? Ekkutto limit to that song. Yes or no? So that he becomes rich, no? After blasting that hill. Getting it? There you will see that cash payment when all the laborers visualize, they are nothing but whom? Daily laborers. In Telugu I know that song. Okay, in Tamil I don't know. Getting it? Padayappa movie. Sorry. In Tamil it is Padayappa movie, right? Padayappa. Okay. So they'll pay this money daily. So I got this doubt. Okay, understood the wage structure also. Now my problem here is, the moment he told me, I found a risk here. Suppose on a particular day, 100 daily laborers came. 100 daily laborers entered. 100 daily laborers entered. Out of these 100 daily laborers, management said 40 skilled labor. On the day when I visited, no? On the day how many were there? I asked. 100, sir. 40 skilled, 30 semi-skilled, and remaining 30 were unskilled. This is the composition they told. Now for them, 40 people we will pay 750, 500, 350. Okay, today I am seeing live. They are showing me how it is exactly. Okay. But in past, I was not there, no. Every day I will not go to the company, no. Every day I will not go to the factory, no. In past, they may do this kind of fraud. What? Suppose skilled people only 40 came, unskilled 30 came. But they may write skilled 60, unskilled 10. They may write like this, yes or no. And they can manipulate the wages, no. Because moreover it is paid in cash. The production manager, factory head, cashier, if they collude, can they do easily fraud like this or not every day? So this is a fraud risk factor. This is an opportunity, a fraud risk factor. Able to understand. Now I identified the first day when I went to the factory, I identified this risk. What should I do? If this is very big transaction during the year, if this occupies totally during the year huge amount, then this is a significant risk. Then it is a significant risk. I need to address this in my audit. I need to specifically focus this in my audit. I may decide this as key audit matter if possible. Are you getting the point? I will see what is the control behind it. I will see how management is ensuring only right number of skilled laborers were paid at the skilled rate. Right number of semi-skilled were paid at the semi-skilled rate. There is no manipulation in the records by the management. How management is taking controls here? I will check. I will check controls surrounding this transaction. How management is ensuring it is paid correctly. The production manager cannot manipulate semi-skilled into skilled and take higher wages, differentiation amount, yes or no. So auditor has to, this is a risk. Fine. Still they showed me little more. Okay. I'm telling you where we generally find risks. Getting it? Then we moved. Then we went to production. Then we went to warehouse. The warehouse was so big. 5 acres approx or 2-3 acres warehouse. Very big warehouse. Getting it? Inside the warehouse, they employed automatic roboting system for movement of goods from one place to another place within the warehouse. Getting it? You see, there is a video on Flipkart warehouse. The YouTube, you can find Flipkart warehouse. Getting it? Now in this warehouse, there are some compartments. Now there is one compartment is the room. A very big compartment. I asked him, what is this? He is just telling me, in this we store these goods, in this we store raw material, in this we store this one, in this we store this one. And one room they showed me. And they told me they will store scrap in that room. What they will store? Scrap. In the production, whatever scrap is generated, that scrap will be stored in that room. Getting it? Now, I asked him, like, what are the records for scrap that you will maintain? What records that you will maintain? Sir, we don't measure how much is entered into the room, sir, but whenever we are selling, we will measure how much is sold. Whenever we sell the scrap, whatever scrap was outward from that room, we will record it. But don't you record input? I asked them, no sir, we don't have any input scrap register. Like how much scrap generated on a particular day, how much is entered into the room, inflow is not recorded properly. Now this is a risk. This is a risk. what will happen if inflow is not recorded properly? They may sell 1 crore, 1 ton of scrap. As per the books, they sold 1 ton, but in reality, they might have sold 1.5 ton. That 0.5 ton they would have manipulated. Now, how do I know scrap sold is showing some deficit? If I have input, first of all, in my stock, how much I have? 10 tons I have. Then why only 8 tons sold? I can question. If I don't have the 10 tons register, if at all they sold for 8 tons, who knows how much it is? Possibility there or not? Another risk factor I found. If this is also material to the financials, I will have to focus on this more. Another risk I identified. This is how we do risk assessment. Every area, how assets are maintained, what records are maintained, how salaries are paid, what controls they have, how people are recruited, what controls they have. Able to understand. How goods are purchased, what controls they have. All this analysis I do. Risk analysis, risk assessment, what can go wrong, what can go wrong. This is called risk assessment process. Now you see what is SA 315 heading. Identifying and assessing risk of MMS. Now when I see this casual laborer, I identified a risk. I assessed that it is important, significant risk. Now, fraudulent financial fraud, some frauds will happen, misappropriation of cash will happen. No. Is it resulting in a misstatement in the financial statements or not? So, I am identifying the risk and assessing the risk of MMS. How did I identify and assess this? Through understanding the entity and the environment, how they are working, including internal controls. Yes or no? This is risk assessment procedure definition. Understood how it is done, all of you? Now once I do this risk assessment, what should I do now? I understood entire factory, entire company. Now I came back my office. Okay, now I need to plan my audit. I'll call my all the team members. Getting it? I will develop an audit plan. I will develop an audit plan like this. Getting it? I will develop an audit plan like this. Getting it? Like, this is the audit program, audit plan. What is the audit that we are taking actually? Statutory audit. Some company. Getting it? Some starting date of the audit is some May. And audit is expected to close by 30th, but actual closing date was 5th July. So the team. So I am the engagement partner. There is an audit manager, two senior articles I took, one junior article I took, and 2 paid assistants. Paid assistants can be CA or non-CA. Anybody. Getting it? Next. First, who will do risk assessment? I will do, and my CA, who is an employee, we both will go and do risk assessment. 7 days it took for us to understand about the company. What company is doing, what exactly their processes. 7 days it took. So understanding the business and processes. Then first we come back and prepare this entire plan. We will prepare this entire plan. There are purchases, sales, payments, receipts, others. C will do this work, D will do this work, E will do this work. This is the days allocated and how much they need to check. Extent of sampling. What should be the sample size? Have you heard of nature, timing, extent? Nature means what? I do opening balance, verification, cross verification. Getting it? Timing means what? 1 day. Extent means what? Coverage, 100%. Are you getting the point? So, when I'm verifying, purchases, I asked about, when I'm verifying sales, scrap is the point which require major consideration. Auditor's instructions. I instructed Mr. D, focus mainly on scrap. What controls were there around the scrap? Then inventory, scrap registers were not maintained. Focus on that. Yes or no? Others, employee expenses, daily laborers, no controls. Check it out. So these are the assets. Then statutory areas, I will allocate the work. Then overall reviews, I will allocate work to these people. They'll do 5 days. Then overall, I will do a review of the entire audit. The engagement partner is liable to review the entire audit. All of whoever performed. So what I will do, review every team member's work. Because if something goes wrong, ultimately people will ask me, not my article. Finally, I will hold audit summary meeting with the client, where I will discuss audit summary memorandum. You have a question, what is audit summary memorandum? Yes or no? So I will discuss a summary with the client, with client meeting. All our team members will be there. CEO, CFO, accountant, general manager, all of them will come. a big meeting. It may be 1 day or 2 days, who knows? Are you getting the point? Then finally, we will prepare audit report. Now at first we will give engagement letter. We will have to give letter of weakness also. Now when I'm doing audit, I found so many places where risks are there. No, I will tell the management, see, in these areas you don't have control properly. Risk is a risk, whatever risk I identified, where control is not there, where I feel control is deficient, I will give letter of weakness. Understood or not? Then finally audit report, everything is over. Then I'll go back my office. Now I have gathered so much of workings, I must have gathered soft copies, so many. Company gave me purchase register, sales register, all Excel sheets. I applied sampling in the Excel only. And we saw physical copies, so many. Some copies we have taken Xerox copies. And we kept in physical hard copy files. Some data is in soft copy. Entire files, they were in zigzag manner. What my people have to do? They need to assemble. You have a question. Assembly of audit file. Yes or no? Now after we came back to our office, in fact we will not assemble after coming. We will assemble in the client premises itself. I will tell all my articles, hey, don't just come and keep the paper inside the file. Keep it in a structure. Getting the point? First bottom opening balance should come. Then purchases working should come. Then sales workings should come. Then above that order, you maintain order. When you're writing notes, you're directly opening notes and writing. You're opening to the what is the last page where you written. The next page onwards you're writing. Correct? So you open in a structured way when you're writing notes. Same way, when you're keeping files in the papers, you keep in a particular order. Are you getting the point? And that is called assembly of the audit file. You have a question, write about assembly of audit file. Now after audit file is assembled, what everyone? Every of my members will sign. Every of my members will sign here. Getting it? We will take this printout, keep it in the working paper file, and we will save this entire workings. This paper, entire this working, I will retain it for 7 years. After completion of the audit, from the date of auditor's report or group audit report, I will retain this working paper still completion of 7 years. Understood? This is the basic introduction to this chapter. Okay, so now based on risk assessment, I have to do further audit procedure. Now, what is further audit procedure? I need to test controls. I need to test controls. I need to test substantive procedures. This is compliance procedure. In compliance procedure, only one procedure, that is testing the internal controls. Substantive procedure, we have two. Testing of details, substantive analytical procedure. Are you getting the point? All of you? Yes, sir. Now, next. Now you might have heard, books of accounts and all. You might have heard books of accounts. How client will maintain books of accounts, how auditors will maintain documentation, all that. Getting it? Suppose you open auditor's office, auditor office. Like if you're working in any audit office, you will understand that once you start articles. So like in office, we will have some server. Like everyone, whoever work, that will be stored on the server, main computer. You're all using computers, they are client servers. They are clients actually. They are actually client. Like my computer is connected with one main server. Whatever I'm working, it will be stored on the server. If you open server in computer, it will give you two files. Example, I'm only giving example. Clients, others. Getting it? I'm showing you documentation, how in real life looks like in files. This is looking like files in systems, files, folders. Clients folder is there. Inside that we have complete company clients. We have some individuals who are for whom we are filing IT returns. We are having partnership from clients also. I am thinking about which client? Company client. Okay. Now company client is open. Now inside company client we have statutory audit. The companies where we did statutory audit, then others. Getting it? Suppose if at all I accepted a client only for preparing his books of accounts, then it is not audit client, he is non-audit client. Now, statutory audit, inside that we have so many clients, A limited, B limited, C limited, D limited, E limited, likewise. Now, I opened C limited. When I opened C limited, we are doing for C limited audit from 1819, 1920, 2021, 2122. These are the folders. Now we are discussing audit of 21-22. It's over. Audit is over. I opened this folder in the computer. This folder opens. Immediately it shows the following. Okay. Risk assessment procedures. Risk assessment like preliminary work. Field work. What is it actually? Field work or workings or you can also call it as a transaction audit. Getting it? Now it will show summary meetings. Then it will show summary meetings or summary reports, all that. Then finally it will show deliverables. What is it? Deliverables. What are all we should give? Now risk assessment we opened. In that company MOA, AOA, company controls, internal control policies, procedures. We visited photos and all we have taken so many. That entire records were there. Now in this file itself we have audit plan. Now I showed my Excel sheet audit plan. That is also there in this only folder. Then field work I opened. Inside this field work we have again multiple folders. Transaction audit folder, balance sheet items folder, statutory areas, ledger reviews. Like this there are some folders. Transaction audit folder I opened. Purchases audit, sales audit, receipts audit, payments audit, like that there are some folders. Purchases folder I opened. Getting it? Population data, total purchases data, samples selected, sample verification. Getting it? My observations and other purchase related records and all were there inside this. Tomorrow, see why you have to maintain all this? Tomorrow somebody came and questioned you. You did not do audit properly. Okay, you are liable for arrest. I will show my working papers. Getting it? How can you arrest me? Based on how can you prove that? See, if I am negligent, okay, you can arrest me because I did a civil fraud. Getting it? Being an auditor, I did not discharge my duty. Now, here, I will show all this entire my computer. Not only this, wait, I will come and show you my hard copy. I will call my article, ask him to bring C limited files. C limited files they have brought immediately into the office. Getting it? I showed him, I opened each and every file, papers. See, these are the works we perform. This work is performed by him. This work is performed by him. Getting it? These are the workings. We did not simply give opinion. We checked all this. And finally only we gave opinion. This is documentation. What is the purpose of documentation? What is the purpose of documentation? Tell me. It's an evidence for auditor's basis for a conclusion about achievement of overall objective. Whatever opinion you give, this is a evidence. The soft copy which I showed, hard copy which I have, it's an evidence. That too, this audit documentation evidence that we planned the audit, performed the audit as per legal and regulatory standards requirements. Understood? How this documentation helps? It will help my engagement team to plan and perform the audit. Actually, it will help my future teams. Getting it? So current year when I do audit, my current year documentation will help in the next year. Next year articles may not be same. Some other will come. So they'll come and ask me, sir, how to do audit of this company? I will tell him, go and see the last year working papers. You will understand. Next. It will help members of the team to direct and supervise the work. So as a partner, I will not go every day to the client premises. 30 days we did audit. I will go only 4 or 5 days only. So first day I will go, I will allocate work to all my articles and all. They are working. Every day whenever they work, they gather some papers and keep in the file, no? Yes or no? I will review them. So it will help for me. It will help for me to direct and supervise. And whoever is working, no, they will keep documentation, right? Will it make accountable? For my staff, no, they will make them accountable. Maybe they are not accountable for outsiders, but for me they are accountable. So it is relevant for future audits. And with working papers, I can do quality control reviews. I can do quality control review once audit is completed. How I did audit? I want to verify. Did I conducted audit as per standards? I will see quality control review. I will apply quality control review. And the working papers, whatever I am maintaining, documentation, whatever I am maintaining, it will help me for external inspection. Like what? Tomorrow NFRA is coming and want to review. So some fraud happened in a big company. I am the auditor. They want to see how I performed audit. Did I colluded with them? They want to see. Or did I acted negligently? They want to see. My working papers will help, will protect me if at all I did proper audit. If at all you didn't do proper audit, your working papers also will not be enough for you. So whenever you're doing something, whatever you are verifying, whatever you are checking, document it, save it. Able to understand? Are you getting the point? Next. So now tell me, what is documentation? It's nothing but recording. It's a record of audit procedures performed, evidence obtained, conclusions the auditor reached. Whatever procedure I performed, it is showed in my working paper, soft copy, hard copy, computer files, all that. And these are called as working papers, also called as work papers. Now this working paper is whose property? My property. Understood? Next. What is the objective? It is a sufficient and appropriate record for the opinion. It's an evidence that audit was planned and performed as per the standards. So nature of documentation, objective of documentation, both you can write a similar answer. Next. Now, how should I prepare my documentation? What should be the manner? How should I prepare my documentation? You should prepare documentation in such a way, an experienced auditor, but he is not part of your audit team. He didn't work on your audit, but he is having experience in audit. By looking at your working papers, he should understand how you planned, how you performed, how you reached to conclusion, how you take an opinion. Everything an outsider should understand. So the auditor shall prepare documentation that is sufficient to enable an experienced auditor. Actually here the word is experienced auditor. Actual word is what? Experienced auditor. Here it is not simple auditor. Here it is experienced auditor, having no connection with the audit. But he should understand nature, timing, extent, results of the procedures, significant matters arising, and significant conclusions you have taken, opinion you have given. Everything he should understand. In such a way you should maintain documentation. Which means if the documentation is understandable for you, that is not enough. It should be understandable for any person who has knowledge of audit. Now, who is an experienced auditor? Who is an experienced auditor? He is an auditor who has he is a person, maybe insider of the audit firm or outsider, but he has knowledge of accounting standards, knowledge of auditing standards, knowledge of law and regulation. He also know about the company and knowledge of the business. Who can understand all this? We call him as what? Experienced auditor. This is called independent third party test. What is this also called as? Independent third party test. That's it. So what auditor shall document? You have to document whatever the test that you performed. Getting it? What are the matters you tested? Purchases you tested, sales you tested, payments you verified. Document it. Who performed this work? Document it. Who verified this work? Document it. We are documenting an audit plan. Yes or no? And what are the significant matters? What are the important matters discussed with the people with whom you discussed in the top management of the company? Document it. Suppose you identified information inconsistent with the final conclusion. Please document how you addressed. If at all you got some evidence where it is not matching with something else. Suppose very simple, scrap and all you verified. Getting it? Later you got some other evidence that scrap generated by the organization is this much, not this much. Getting it? If at all you identified such kind of multiple evidences mentioning multiple details, different details, then how you resolved it? Which is correct? Are you getting the point? Suppose books of accounts debtors balance shows 10 lakhs. You asked for third party confirmation. He replied 8 lakhs. Which is correct? How you resolved it? You need to document. Understood or not? Now, in what form I will document? Should I document in electronic form or should I document in physical form? Depends. It depends upon the, nature of procedure I performed. If I go and physically verify, I will not have documentation at all. If I do a video recording of the entire physical verification, I can document it. Getting it? So, the form of the documentation, what content you should document, how much you should document, depends upon size and complexity. If it is very big organization, documentation content will be high. If it is more complex, generally more documentation I will get. Nature of procedures performed, risk, if at all there are more risk, more audit work I will do, more documentation. Significance of information I got. If I feel some information I got is very important, I will retain it. some points, suppose purchases I will do, right? 100 samples I am verifying. 100 samples I am verifying means every purchase, related goods received note, related order copy, all that I will verify. But do I document everything? Do I save everything? I will just verify and leave it. I will tick and then leave it. I will put tick and then leave it. Suppose I saw one voucher, one purchase invoice, huge transaction. Generally organization purchases 10 lakhs, 15 lakhs, 12 lakhs like that. But this is 1.5 crore, exceptional item. 1.5 crore value is an exceptional item in this company. Because this company generally purchases for 10 lakhs, 12 lakhs, 10 lakhs, 12 lakhs, around that. Only one transaction was entered into with 1.5 crore. At a time they purchased in bulk. I asked management what? There is a bulk discount announced by supplier. So we purchased and retained the raw material. It's an exceptional transaction. So exceptions identified. So if you identify more unusual things, we will document more of them. Able to understand. And the need, this point is not required. Audit methodology and tools you used. Vouching. How you verified Excel sheet. What tools that you are using. Inquiry, inspection. There's so many stuff. Getting it? These are the factors that you affect documentation. Next. Tell me, you have to prepare documentation in a timely manner, right? Is it better to prepare documentation after 30 days or every day whenever the work is completed it is better? Exactly. The auditor shall prepare documentation on a timely basis. Preparing sufficient documentation on a timely basis helps to enhance the quality of audit. It facilitates effective review, evaluation of audit evidence. Documentation prepared after work is performed is less accurate than documentation prepared at the time when the work is performed. Clear? This chapter, no, many don't understand this. Many don't understand this chapter. They just read like something they're reading. They feel like something they're reading. But you see, for every point, we are able to see with a real situation. Correct? Now, so audit file means what? Whatever you're documenting, no, in a computer or in physical file, that file is called as what? Audit file. This file may be a folder in a computer, in a storage media. It may be in electronic form or it may be physical form that contains records that comprise documentation for a specific engagement. What do you mean by that? I should maintain separate audit file for each client. I should maintain separate audit file for every year audit separately. Understood or not? Now, auditor should assemble the file, no? You are documenting timely. Now, you should assemble also, right, neatly. You should assemble it. You should give reference numbers. Later, when you see this paper, you should understand. Not just you. Another experienced auditor also should understand. If NFRA person is coming for quality review, he should understand. So, the auditor shall assemble the documentation in an audit file and complete the administrative process. Audit as an assembly of audit file is an administrative process. Is it an audit procedure? I completed audit. I am just audit to papers and on a zigzag manner. They are just adjusting this. Is it an audit procedure? It's an administrative process. So this has to be completed on timely basis. The SQC, there is an SQC requirement. The SQC standard says, firm shall establish policies and procedures for timely completion of documentation. This assembly shall complete within 60 days from the date of audit report. Once you give audit report, within next 60 days, make it neatly ready and keep it in the bureau or keep it in the locker. Retain it for how many years? 7 years. How many years you have to retain it for? No shorter than 7 years from date of audit report or date of group audit report. What is group audit report? Suppose I am a branch auditor. My audit report is 10th June. Principal audit report is 20th July. Not from this date. 20th July onwards, 7 years. Whichever is later. Able to understand? Next. What is audit documentation? Audit documentation. They'll give you this question in exam. Audit assembly of audit documentation involves a new audit procedure or additional audit procedure. False. Assembly of audit documentation is not an audit procedure. It's an administrative process. What is there in administrative process? Deleting the documents which are superseded. Some workings 1 are there, workings 2 is there, workings 3 is there. Workings 3 is final workings. Why are you retaining working 1 and 2? Delete them. Then sorting, collating, cross-referencing, coloring. That is called assembly processes. Are you getting the point? So the completion of assembly of final audit file after the date of audit report, like final audit file you're assembling, right? It's an administrative process. It does not involve new procedures or new conclusions. Now to the documentation, whatever I've collected, now can I make changes? Yes, you can make changes, which are administrative nature. Like what? Some one page, some 4 or 5 Xerox copies were there. Delete them. Keep it only one. Superseded, duplicate documents and all, deleting it, rearranging it. They were not in order. Rearranging it, sorting, we call it as. So this and all you can do. Once you finalize, after the assembly has been completed, you should not delete any paper. You should not throw any documentation before the end of retention period. So firm should have policy for retention of documentation, how they should retain, where they should keep it, so that they can keep it for 7 years. So minimum how many years? 7 years. Ownership. Whose property? Audit documentation. Auditor's own property. Nobody can demand. Can principal auditor ask for documentation of branch auditor? No. Because branch auditor's documentation is his own property. Understood or not? If at all branch auditor is willing to give, you take it. Otherwise you can't demand. Understood or not? Next. Now, not only this, auditor should also document. Auditor should also document significant matters. The auditor should document significant matters. What is a significant matter? Wherever there is a significant risk is involved, that is significant, or wherever you feel financial statements are materially misstated, that might be a significant matter, or where there is some difficulty in applying audit procedure. You want to verify whether company paid GST properly or not. And company has not maintained any GST reconciliation sheets. You have done the entire reconciliation. So much time you kept. That's a significant matter. That's a significant. Whatever you feel it is important issue, you have to document. Findings that could result in modification. You found something where you felt modified opinion should be given. That is also a significant matter. Significant matter includes what and all. You need to document all these. They'll ask you in exam straight away, 4 marks question, write about documentation of significant matters. Understood or not? Documentation related to professional judgment is little difficult topic which requires major time to discuss. It will take more time to discuss, cannot be covered in revision class. Okay. Then audit summary memorandum. What is it? Audit summary. Now once you completed the audit, now you have to discuss with the management, right? Especially in large audits, no? Observations are too many. I will go with the 20 team members. 20 team members I will go. Example, for doing big company audits. Everyone has his own observations. Like suppose one team member did audit of purchases of, goods A, audit of purchase of good number C. Another team member made audit of purchase of some reserves, audit of purchase of some other raw materials like that. Getting it? Now both of them are having, each of them are having 40-50 observations. 20 team members worked on different works. Every one of them is having observation. Now management is asking, sir, what are the issues you found, sir? All 20 members of us going there and then informing management what are all the issues. Will it become clumsy or not? So what should we do? We should find a summary. So the auditor may consider it is helpful to prepare and retain as part of documentation a summary. So if you look at summary, it will be easy. So where significant matters will be, recorded and how they were resolved by auditor. This summary will facilitate effective and efficient review, inspection of documentation, especially for large entities. Because of this summary, I can easily review what happened in audit. It also helps the auditor to consider whether there is any individual essay objective that auditor cannot achieve, which would prevent the, like in summary, we will also record what are all the auditing standards where I did not follow properly any requirement. If a particular standard requirement I did not follow, I will have to record it in audit summary. That's what that point meaning. Able to understand? So that's about audit summary. Okay. So with this, SA 230 is completed. This is nothing but which standard we discuss now? 230. We originally discussed what is risk assessment overview, what is further audit procedure overview, Then we entered into 230 discussion. Understood or not? Then we will go and discuss. Maybe in the next session, I will be discussing this 330 audit procedure. Then I will come to evidence. We'll see. Getting it? All of you fine? In regular, no, we discuss this approximately chapter for 8 to 9 hours. Approximately. Here we can only cover within 2 hours. Understood? This is not that easy. Whatever you think, it is not. Audit is not what you think. There are so much stuff. You see my regular material, you will find even more, little more content. Getting it? They will ask you an exam. Okay, I'll show you. I'll show you. I will explain you how in different ways questions will come in the evidence discussion. Yes. So the next topic is audit sampling. So I told that I'm not covering risk assessment chapter because that is again a lengthy chapter. That's again a very lengthy chapter. But mainly we are covering main topics. But risk assessment brief idea I'll give you maybe at the end. Getting it? Now let's focus on sampling. See, instead of risk assessment, what I'll tell is you can study 3 chapters easily. Sampling, analytical, strategy. All these 3 together, minimum 15 to 20 marks. Minimum. Only risk assessment, if you study, it will have maximum 8 marks. Is it better to study these 3 and secure 20 or 8 studying that? But if both take same time. Risk assessment, internal control, how much amount time it takes. These 3 chapters together takes the same time. Getting it? So be strategical in your preparation. So fine. So sampling, here nothing but we are going to discuss about SA 530. We are actually discussing about SA 530. So what is this audit sampling exactly? Now what is this audit sample exactly? Just 1 minute. Now let's look at how in reality practically the sample works. First, if you understand this, like how exactly the sampling works, you might have seen in the sampling there are various topics called stratification, value weighted selection. You have seen all that, yes or no? And haphazard sampling, random sampling, simple random. What exactly the difference between them? All that we will see this with this practical illustration. This is a sales report given by the MS Excel itself. In the MS Excel itself, the sales report is there. The Excel itself, its own sales report. Now you see here, this is the total which I have calculated. Getting it? Now I'll just, this is the product which the company is actually dealing. And these are the customers who actually purchased. And this is the total value for which customer has bought the goods. Getting it? So in this Excel sheet, we will apply the sampling technique. Getting it? Now I'll copy this entire data. This is the raw data. This is the raw data. I'll copy this entire data onto another one. Another sheet I'll copy. And you see, this is the data and which I'm copying to another sheet. I'll zoom it. And in the column, I'll just remove it. So this is the total sale value and the customer and product. Getting it? Now what is the population value? 1,54,491. Getting it? A dollar or rupiah vitrunga. Just understand the concept. So serial number. How many transactions we have? Not 78. 277 transactions we have. So how many we have here the transactions? 277. Getting it? So what is the total transaction value? 1,54,491. So this is the status. This is a population. Correct? Now here my objective is to select 20 samples. Have you heard of random number tables? All of you? Now, how do I apply random number tables? This is population, filtered population, correct? This is population. I hope here it is visible to everybody. Here also, right? Yes. Now, from this, I apply simple random sampling. I apply simple random sampling. Getting it? Now, I want to select invoices. Totally how many invoices I want? 20. What is the invoice number? 1 to 277. 1 to 277 totally. And how many samples I want? 20. So, random between, okay, 1 to 277. Correct? So, 81. That sample we are selecting. Totally how many we want? 20 samples we want. So, yes. So these are the samples which I am going to select for audit. These are the samples which I am going to select for the audit. 141 voucher, 211 voucher, 136 voucher, 163 voucher. Likewise up to 37. Understood or not? Now, so this voucher value, how much I will apply? This voucher value, how much I will check? So 141 voucher value is how much? 42. Getting it? Likewise, I'll apply. So this is the total vouchers which I have selected. What is the total voucher value which I have selected for sample? 11,614. Have you understood? 211 voucher value 60 rupees they said. We'll see 211 voucher value 60 rupees or not. Yeah, exactly. Correct? And here 163 voucher value they have selected. We'll see 163 voucher value. How much it is? 68. Here also it is 68. Correctly arrived or not? Now you tell me, these vouchers I have selected. No, these are the vouchers which I have selected. Numbers. Did I apply any my personal bias? They were randomly selected by using random number tables. What is random number table? Did I use any table book? Earlier we have table book. Now we have Excel sheet. So is there any number that came out of my choice? This is simple random sampling. Able to understand, all of you. Now you see, now let us apply. So what is the total value? Now what is the percentage of the total value to the total value of the population divided by what is the population total? So approximately it is 8%. Correct? Approximately 7.518%. So this is the sample value which I have selected in simple random selection. Correct? Now I will apply haphazard sampling. I'll apply haphazard sampling. Haphazard sampling means I am selecting randomly, but I am not using random number tables. Now haphazard selection. Have you heard of haphazard selection? Now I want how many samples? 20. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So some last one, okay, 20. This is haphazard selection. Haphazard means what? I don't follow any technique. In haphazard selection, the auditor will not follow any structure technique. On the other hand, he will avoid personal bias. Have you seen this sentence? Is there any personal bias I used here? But randomly I selected. What is the difference between simple random sampling and haphazard? Both are random. But in simple random sampling, numbers also I will not use. I will use random number tables or computer scientific I'll select. Haphazard I will manually select. Both are random. Which is more scientific? Simple random sampling. Have you heard? Saw no simple random sampling. Now we'll see what are the samples that we filtered. What are the samples that we filtered in haphazard? I will filter to next, So these are the haphazard selections, right? Which I did. This is the sample which I selected in haphazard sampling. Correct? What is the sample which I have selected? 10,265. Now I'll apply. What is this total to population? Now what is the population here? So this is the population, yes or no? So this divided by population. Now it is approximately 6.65 percentage. Correct? Now this is simple random sampling, haphazard sampling. Correct? Everyone? Now, if I go to the again population, I'll apply block sampling. Block sampling means what? Selecting items of contiguous, like continuous items. Getting it? First number. In simple random sampling, first number is what? 141. This is randomly selected, right? I will take 141 as starting point. I will select next 20 items continuously. I will select 141 as starting point. Next 20 items. 141, 142, 143, 144, 145, 146 up to 20 items. I will select all 20 items at a stretch. This is what? Block sampling. Or I may have multiple starting items. Let me select block of 5 samples. Suppose 141 is one block. 141, 142, 143, 144, 145. These invoices I will select. Then what is my next random number? 211. From there again 5 samples I'll select. What is my next number? 136. From there again 5 samples I'll select. What is the next invoice? 210. From there again 5 samples. Like that totally 20 I'll select. This is block sampling. Able to understand. Next, what is systematic sampling? Have you heard of systematic sampling? Interval sampling. Systematic interval. Now what is the total sampling units in the population? 277. There are totally 277 sampling units were there. From these 277 sampling units, I have to select 20 samples. I have to select how many? 20 samples. 277 divided by 20 is equal to how much? 14. Approximately it will come to 14. So, first item I will select. From there again 14th item I will select. From there 28th item I will select. From there again 42nd item I will select. Next 15th, 6th item I will select. Simply 14th table. So I will select, I will apply that. Those invoice numbers are my sample. This is systematic sampling or interval sampling, where between two invoices the interval is 14. Now if I apply 14 interval and select no entire population, how many samples I will end up with? 20. Understood? So this is systematic sampling. Now the most another thing is stratified random sampling. What is the leftover method? Stratified random sampling. Now you see here, let me apply stratified. Stratified will be selected here, okay? Stratified random sampling. Now you see, if you observe the population, is filter value you've seen? Filter. The value inside the table is visible slightly here. Here it is visible. What is the first number? 12.5. What is the first number? What is the last number? What is the last number? 4,700 approximately. The last number is 4,700 approximately. Correct? Are these both values similar values or extreme values? Very good. Are they homogeneous or heterogeneous? Heterogeneous means completely different. Now you see, when I see the population, now tell me, now I applied simple random, right? Random number tables I used, right? Can I say in this 4,700 rupees value has been damn sure selected? Can I say that? May or may not. Who knows? It's 277th invoice value. That is some invoice value 4,700. Can I say in the simple random sampling for sure 4,700 is selected? Can I say in haphazard 4,700 is for sure selected? I don't know. I just selected randomly. It may come, may not come. Correct? It may come or it may not come. Now tell me, when I study this population, when I observe this population, when I interpret this population, I discovered that there is an item which is 12 rupee. There is a sale value which is 100 rupee. There is a sale value which is 300. There is sale value which is 1000, 1500, 2000, 3000, 4000, 4700. Now the company is selling goods at various levels. Correct? To various customers. Now tell me, generally in any company, for selling small quantity and for selling high quantity, the process is same or slightly different? Differs. Correct? Now tell me, if I do not pay attention, If I do not observe this point and simply select 20, I may be ignoring high value items, or I may be selecting mostly low value items. Can I treat high value items, low value items equally? See, in simple random sampling, I applied random number formula and I selected 20 samples. Any number might come, correct? Which means all invoices were given equal chance or not. In haphazard also all invoices were having chance or not. Correct? But when I studied this population, I discovered high value items. According to me, anything more than 2,500 rupees is high value in this company. In this company, sales more than 2,500 rupees is high value for me. 1,000 to 2,500 is medium value. Less than 1,000, low value. Can I select sample randomly from low value and randomly from medium value and also high value? If I select sample from all the three, can I cover all the parts of the population? Is my sample more representative? In population there are extreme values, in my sample also extremes are there. My sample is more representative. Able to understand? Now let me apply that technique. So I will filter samples having greater than 2,500. How many were there? Sorry. 2,500. How many came? Only 6 items were there. Big items are only 6. Why should I apply sample? I will select all the 6. Can I? I will select. What happens? What's wrong in this? So I will select all these items. Yes or no? All high value items. Getting it? I will select. You might have seen this. In value weighted selection, auditors focus mainly goes towards high value items. Have you seen that? Getting it? Now, then I will select medium value. Greater than 1,000, but less than 2,500. Sir, no. Oh my God. Here approximately 37 invoices were there. Between 1,000 to 2,500, only 37 were there. More than 2,500, 6 only were there. Totally 43. Small value items are approximately 230. Small value items are approximately 234 items were there. But as a whole, how many samples I want to test? 20 only. Already how many selected? I will select from this another 8. Yes or no? 1, 2. Here I apply again haphazard technique. Yes or no? So how many it is coming like here? How many? 7 I selected. So another number I will select. Randomly. Randomly I selected. What is stratified sampling? Dividing the population into subgroups and selecting sample from each group. That's what I am doing. Yes or no? First I divided the population into 3 parts. Items value more than 2,500. Items between 1,000 and 2,500. Items less than 1,000. From each part I am selecting sample randomly. That is called stratification random. Stratified random. Correct? Now, next, what is left over? Small value items we should select, no? So, less than 1,000. So, less than 1,000, I will select randomly. How many? Already 8 plus 6, 14 were selected. Just another 6 items I will select. Yes or no? Just another 6 items I will select. Vandarcha? Yes. So, these 3 I will hide. So, what I have selected ultimately is this. These are the samples which I have selected. Hey, what happened? Did I select it in wrong column? Oh, sorry. Now, totally how many I have selected? 20. Correct? Now, I will filter these 20 into another place. This is what? Stratified. Yes or no? This is what? Stratified. Now, I will see the total. Now, you see in this my stratified sampling, small value items are selected, medium value items are selected, large value items are selected. Yes or no? Now, you see the total. 34,000. Now, you see the formula with the population. With the population if I check. With population if I check. Approximately how much value it gained? 23%. You see, Here also I have selected 20 samples only. Haphazard I selected 20 only. Simple random I selected 20 only. But I am selecting with the same 20. I am verifying more value. In which method? Stratified sampling. And I can say confidently, if someone asks me, have you verified material items? I verified. Have you verified medium items? I verified. If I focus only on these two, management may do frauds in low value items. I verified them as well sampling. My sample is more representative. Through this methods, we understood now what is haphazard, what is simple random, what is stratified random, what is interval sampling, what is block sampling. Understood or not? This is called statistical approach. What is non-statistical approach? Non-statistical approach means where I don't use all this scientific methods, probability methods, random methods. I don't apply. My favorite number, let us assume 1. I will select all the vouchers which will have 1 number. Able to understand? This is personal bias. What is this called as? Personal bias. Bias cannot be avoided. But tell me, whatever method of sample I am using, tell me what is the purpose of sample? What is the purpose of sample? I'll give 2 options. In order to draw conclusion on the sample, or in order to draw conclusion on the population. Exactly. The objective of sampling is not to select the sample, not to form an opinion on the sample, but to form an opinion on the. Yes, very good. That's it. So now we apply the sampling technique in test of controls. We apply the sampling technique in test of details. Now in the sample selection, is there a risk again? Sampling risk, we call it as. What is it called as? Sampling risk. What is sampling risk? What kind of wrong conclusions that we may end up because of the sampling risk? How to use the sampling technique? How to project the mistakes? All that we have in our syllabus. Are you getting it? So with this we understood scientifically how we apply sampling. Now we just have to look at the book. Just a minute. Yes. So now let's look at how, what are the concepts that we need to discuss. So in the previous exam, they gave a question, something related to this introduction. At the last there is another para which you will find in main book. Getting it? So non-routine checking, routine checking, that is the wordings which they used. So they indirectly asked you about the sampling. What is audit sampling? First of all, we apply our audit procedure. We verify. What do we verify? In a sampling method, we verify entire population or sample. Sample means less than 100% data. That's it. Audit sampling refers to application of verification procedure to less than 100% items within a. So that is called auditor sampling, based on which auditor draws conclusion about the static. Getting it? All of you. Now, just a minute. Now, what is the objective of auditor? The objective of auditor in sampling is to provide a reasonable basis to draw conclusion about the population from which the sample is selected. See, in the population in our example, 277 bills were there totally. Each item is called as sampling unit. Whatever is selected is called as sample. Are you getting the point? Next. This standard applies when the auditor decided to use either statistical or non-statistical sampling. Getting it? And when designing a testing sample, when performing test of controls and test of details, and how to evaluate the results based on sample. The moment you decided to adopt sampling technique, this standard SA 530 applies. SA 530 heading is audit sampling. The chapter heading is also audit sampling. Now, what do you mean by population? Population is nothing but entire set of data from where sample is selected, based upon which auditor will draw conclusions on the population. First, a population must be appropriate. Getting it? Appropriate population it should be. Appropriate means what? Relevant. What is the, from wherever, see what samples you want to select. See what you want to verify. Purchases I want to verify. What is, in order to verify purchases, what is appropriate population? purchase register, DRN register, purchase order register. These are the appropriate population. Yes or no? Not only that, before you select the sample, you must ensure that the population is complete. If the population is incomplete, your conclusion on that incomplete population from where you drawn the sample will also be wrong. If you want to audit purchases, make sure entire purchases were populated first. From that you have to select. Suppose tell me in our example, out of 277, if 30 bills I removed and then selected sample, the result, will it be reliable? Exactly. And population from where you're drawing sample should be reliable. It should be generated independently. It should be generated by right person. Getting it? What is sampling unit? It is nothing but individual item in each and every individual item in the population. Total of sampling units is equal to population. Are you getting it? Now audit procedures are applied on these units which are selected, and conclusions will be drawn on the populations by using a projection, by using a technique called projection. By using a technique called projection, which is also called as extrapolation. Able to understand? Whatever conclusions we are drawing on sample, that conclusion becomes on the population. You see example of rice cooking. This we say. This quotation also we say. Getting it? So whether the rice has been cooked properly or not, cooked up. We don't check the entire each and every grain. We only check sample. Correct? If the sample is too wet, we say that the rice was not yet cooked up properly. Yes or no? It's not boiled properly. Now, what is the approach to sampling? We have two approaches. One is non-statistical approach, another one statistical. What is statistical approach? Where selection will happen on a random basis, where we use probability theory to evaluate the sample results. What is probability theory to evaluate sample results? Suppose out of 20 samples I have selected, out of 277, if I discover one mistake, it's 5%. It's 5%. 1 by 20 means 5. I naturally feel that in 277 also 5% mistakes were there. This is called probability application. But it is not as straight or as simple as what I told. First, whenever you discover a mistake in sample, first you should assess the nature and characteristics of the mistake. Is it anomaly or is it non-anomaly? You need to first understand that and accordingly apply. Able to understand? Now, sample is chosen by applying some mathematical and statistical methods. I use random tables, no? Yes. What is non-statistical? Which do not have the above features. Ultimately, what is the objective of sample? Selecting representative sample. Tell me, when the sample is representing the population correctly, only then my decision on the sample I can apply on population. Correct? Only if I select sample correctly, which will have all the characteristics of the population. Getting it? Then only my sample is representative. So whatever approach you follow, ultimately the sample selection objective should be representative sample. Correct? And so the sample characteristics must be close, similar to whole population. Although not exactly same, but similarity should be there. Able to understand? Now, sampling process is performed on test of controls to identify deviation from the control. Whereas in details to identify misstatement. The word deviation is used in the context of control. Misstatement is used in the context of details. Remember. Able to understand, all of you. Next. So balance, we will discuss in the next session. The balance continuation and all, we will discuss in the next session. Clear? Hardly another 30 to 40 minutes, we'll close up this chapter. I'll give you a clear-cut idea of how to understand this chapter, then you can go and understand later easily. So, government audit. So first of all, from this chapter again, the level of expertise from us is again below moderate. Because in government audit, we chartered accountants don't involve at all. Getting it? No, not about C&AG. Only in government companies, CS will involve and do audit. But rest of the entire governmental departments audits are not given generally to chartered accountants. They are completely taken care by C&AG audit department. There is an audit department called IAAD, Indian Accounts and Audit Department, which is headed by IAAS officers, Group 1 cadre, IAAS officers. So, Indian Audit and Accounts Services, like Indian Administrative Services is there, no? Similarly, here there is another service which is through UPSC exams only. So, these people will head this department. This department is answerable to C&AG. This department is answerable to C&AG. In government, we will have three wings. First of all, executive wing, legislative wing, judiciary. There are totally three wings in the government. Legislative wing means parliament. Executive means ministers, like entire prime minister and his cabinet, entire together we call them as executive council. Judiciary to monitor all these affairs. Getting it? Now, the supreme audit institution in India is C&AG. For government, the supreme audit authority is what? C&AG. And this C&AG will be appointed by the President of India. He can only be removed by President of India. Through this, C&AG was given independence that he cannot be influenced by any other executive ministers or any other legislative members. Only President will interfere with respect to C&AG powers, duties, everything. Now, for C&AG, there is an act called C&AG Act. So, through this, he has been given certain powers, all that. Now, so this is the actual working methodology of, C&AG. So, they will be heading the department of the government called IAAD. In that department inside, they'll have IAS officers. Below them, some audit boards will be there. That and all you will get at final level. In final also, we have something called PSU audit. Government audit or PSU audit, both are actually same. Both are similar. Getting it? Next. So, here we are discussing brief principles of government audit. What are the principles of government audit we are discussing? Just you can observe C&AG. So, there is a website for C&AG. So, there is a C&AG website, and here so this is C&AG website. There are many audit reports. There are many audit reports in C&AG website. You will see here audit reports. You might have heard, no? Performance audit, propriety audit. Yes or no? Only these two terms you heard. Actually, propriety audit is not a type of audit. Propriety audit is a principle in audit. Performance audit is a type of audit. Performance audit is a type of audit. Where in performance audit, what we focus on? We focus on operational aspects. And we will try to find out improvements in that. We will find out what are all the defects in that system. What are all the improvements that we can take up? That is what the objective of performance audit. Efficiency, effectiveness and economy. These three principles only focused. Are you getting the point? So here you see performance audit of air pollution control by Government of Gujarat. Audit report on PSU of Government of Assam. This is compliance audit. The C&AG will do three types of audits. Financial audit, compliance audit, performance audit or combination. Or it is called as a combination. In our syllabus, we only have slight introduction on performance audit, a slight introduction on compliance audit. You might have seen in this government audit chapter, audit against rules and regulations. What is that? Compliance audit. Nothing but compliance audit. So compliance audit means what? You see here. Audit report on Assam. State finance audit report, government of Assam. You will find here government type, central government, department, civil department, commercial department. These are the departments of government. Railways, getting it? Suppose railways I took. In that railways, report type, which one you want? Financial audit report I want. Year of report I don't select. Directly I'll select search. So you will find all union government railways financial audit reports. Suppose 2021 financial audit report is there. We'll see. We'll download and see what is exactly covered. So this is, government's audit report, central government audit report. The audit was performed by C&AG on railways. They'll give you brief overview. First, summary is given, executive summary. What is the ultimate audit findings in this? What the C&AG has found in this government, in this union. You see here, this is actually the summary. First of all, what is Indian Railways? Is a departmental commercial undertaking. You might have seen what government audit comprises. Government department audit, government companies audit. Have you seen? Government corporations. Have you seen that word? So, whereas railways is what? It's a department. Getting it? It's a department. So here we focus on performance of the Indian Railways with reference to last year. There is another chapter which focuses on financial overview of the financial performance of railway PSUs. The railway department has a certain companies again. Okay, Indian Railway Financial Corporation, like that there are some institutions. So conclusions. Audit observed during 1920, total receipts decreased by 8.3% because of the COVID issues, whatever. Okay, compared to 6.47% as increase in 1819. And here there was a heavy dependence on coal transportation, which constituted 48% of the total freight earnings. They are giving entire observations here. What is the surplus? What is the target of the, what is the targeted revenue? Targeted expenditure. So they have given complete their analysis, what they observed in audit. What they observed in audit. See, what the C&AG has recommended to the Ministry of Railways. They need to take steps to diversify their freight basket to enhance freight earnings. You see, in a normal audit, until now whatever we discussed, traditional audit, normal whatever audit that we discussed, we only focus on regularity aspect. We do not focus on where company can increase the revenue. Do we focus on that? Whereas C&AG will do all that. C&AG will not only verify books of accounts. In fact, first of all understand, these entities may or may not prepare financial statements. Getting the point? They prepare accounts for every income, for every expenditure, they maintain accounts. These accounts will be audited. And C&AG not only audit from detection point of view, they also audit how to increase the organization, how to help the organization, which we statutory auditors in case of company will not do. It is not our duty. Whereas C&AG objective is to give government various advisors. Able to understand. You see, government auditing definition, you see. Government auditing is an objective, systematic, professional, independent verification of financial, administrative, other operations of a public entity made subsequently to their execution for the purpose of evaluating and verifying them and presenting a report containing comments, recommendations for future actions by responsible officials. Whereas in audit definition, you see, it is to give opinion. There is a basic difference between audit and government audit. In government audit, we are not only concerned about giving opinion on the affairs. We give opinion on, we give recommendations for further improvements, all that. Yes or no? So, they need to take steps to augment their internal revenue so that dependencies on so and so is contained. They need to revisit the passenger and other coaching tariffs as to recover the cost of operations. Nothing but C&AG is recommending to increase railway fare, charges and all. Getting it? Need to ensure that surplus and operating ratio presents true picture of the performance. Need to address backlog of renewal old age assets for safe running of trains. Almost in all parameters they covered audit. They covered the audit in operating parameters. They covered the audit in revenue parameters. They covered audit in compliance parameters. So many. Understood. Financial audit conducted by C&AG comprises everything. They consider performance aspects, efficiency, effectiveness, economy. They check bylaws. They check with compliance with rules and regulations, compliance. And as a whole, they check propriety. That is called financial audit. In government, financial audit is also termed as comprehensive audit. Financial audit is also termed as comprehensive audit. Able to understand? Next. So, what is the objective? Accounting for public funds. One of the objective of government audit is, government audit serves as a mechanism or process for public accounting of government funds. Appraisal of government policies. We question how far government policies are useful for the public. Appraisal means what? Questioning, evaluating. And this government audit is based for taking corrective actions. The objective of the government audit is a combination of ensuring accountability of administration to the legislature and functioning as an aid to administration. In India, the function of government audit is discharged by independent state authority called C&AG through agency department called Indian Accounts and Audit Department. Understood or not? So what C&AG do? C&AG do audit expenses. How we do audit of expenses? We first see whether the expenditure was incurred as per rules and order. Any expenditure incurred by public official, government official, is it incurred? First of all, there is a rule for that or not? First of all, is permitted or not, we will check. Not only rule, we will also check propriety. Okay, as per rule he spent. Did he spend reasonably or carelessly he spent? That also we will check. Able to understand? So that is called propriety audit. Now performance audit. Whenever he is incurring expenditure on procuring resources, do they procure at best price? And are they using the resources efficiently? After construction of a particular project, is that project ultimately useful to the public effectively? That is called performance audit. We check sanctions. Who sanctioned the expenditure? Okay, you are incurring as per the rule, but somebody should sanction. Who has sanctioned? Is he having authority or not? And before the sanction, we need to first budget it. We need to allocate the funds for that provision, for that particular purpose. Are you getting it? Suppose if provisioning of funds was not there for certain expenditure, who sanctioned that? Able to understand? See, generally how it happens is, budget is there, no? Union level budget, state level budget, municipality level budget. We are only familiar with central budget and state level budget. State level budget is what? Assembly discussions and all. State level budgets. But we are mainly concerned about central level budget. That especially CS students concerned only regarding amendments, which we will clarify. But students out of hurry, they'll ask it first. Getting it? Suddenly if an amendment came, student comes and asks me, sir, is it applicable for me? You don't worry. It will not apply. If it apply, we will tell you first. Getting it? For all of you, I am giving instruction. Many faculties will be receiving this kind of stupid queries. For you, amendments before exams, 6 months before. 6 months before exams. Whatever amendments were there, they will only apply for you. 1st May is the criteria for you. May, June, July, August, September, October. Exactly 6 months. After that, your exam. May 1st. 1st May before, whatever amendments were there, they will apply for you. Otherwise, they won't apply. Are you getting the point? Suppose yesterday government passed a notification regarding some companies act or whatever. Don't come and ask again immediately, sir, is it applicable to me? No, not applicable. Institute is not expecting you to be that much dynamic. Okay. If you are moderately dynamic, that's enough. Next. So what is this propriety audit? What is this propriety audit? Propriety audit means what? Propriety means what? Ownership. In government, we should not only check whether the authority has spent expenditure as per the rule, as per the sanction. We should also check how much quantum is required, how much is spent. Is it necessary first of all incurring that money? That we need to question. In a normal private sector, the big listed companies, private sector, there we generally don't focus on propriety. It's not our duty also. Why, Mr. Mukesh Ambani, you are traveling on chartered flight every day, you are wasting so many shareholders' funds? What he'll reply? That's a power given to me by shareholder, you shut mouth and do your duty. Correct? Huh? You can't question. But if it is done by a public sector undertaking director, if at all he is using chartered flights for, official trips, whatever it may be, we can question. Because here it is public money, there it is private people money. Understand? Public money means government money. So here we need to check propriety principle. Is it necessary? We will ask this question. Okay, you spent. You have given the power to spend. There is a rule. You spent as per the rule. I'm not talking about all that. Is it necessary first of all to spend? This is a question which we have to ask. Are you getting it? So, regularity audit alone was not sufficient to protect properly the public interest. Correct? Even though expenditure has been incurred in conformity with the rules. Even though expenditure is incurred with the rules, auditor should look into financial propriety in respect of reasonableness, faithfulness, economy. Auditor has to check how far this expenditure is required. Can we avoid this expenditure? Is it improper? You need to try to identify this kind of incidents in, C&H report identifies all this. There is a huge wastage of expenditure on so and so. Companies unnecessarily paying, the railways is unnecessarily incurring on so and so where the output is ultimately zero. So what are the principles on propriety? First of all, what is reasonable, what is not reasonable? We can't give precise guidelines. It is common sense. Yes or no? It is something common sense. How do we check whether it is propriety or not? Whether the particular government department official incurring money, spending government money, public money, is it required or not? How do we check? See that expenditure is not more than occasion demands. Every public officer is expected to exercise same prudence. Like how he would exercise when he is spending his own money. When I am spending my own money out of my pocket, what kind of care, diligence I take. When I am spending my own money, we will go to 2 or 3 shops now before you buy some particular article. You check where you are getting the best quality, where you are getting at the best possible price, yes or no? Same way, government official, when he is spending money, will it be useful for long term? Will it be helpful for me? All the points you have to check, yes or no? No authority should pass an order for sanctioning expenditure for their own advantage. All these points you will find violations in government departments. And I told you, these points not only there in government. Corruption is not just there in government. It's there in private sector as well. Corruption means what? Anything illicitly you are getting. Unauthorizedly if you are getting something, that is called as corruption. You are not eligible for that, but you are getting it. So that's called corruption. Corruption is there everywhere, not just government. What we see is only government. What is happening in this private sector, listed companies and all, nobody knows. Because doctrine of indoor management. What is happening inside the company, nobody is aware of. Correct? Next. Public money should not be used for the benefit of a particular person or section of a society. However, if it is very small amount or if it is because of a recognized policy or custom, getting it, so then you can spend. Or if it is something that can be enforceable in a law, then that can be spent. Suppose we have some reservations where we spend some particular money for reservations, people and all, that is enforced, given, that's a power given under constitution, that can be done, no problem. Next. The expenditure ultimately should pass down to the beneficiary. It should bring optimum benefits instead of mere spending public money on day-to-day needs. Very simple. Some road was damaged, a road was laid on that. 10 times in this 1 year itself on the same road repair was made. Instead of repairing, if they give a quality to, if they give to a contractor who will qualitatively lay the road, the cost of laying the road is less than the repair cost. If that is the kind of situation, you need to comment it. Government officials are spending waste public money. Yes or no? 10 times, 15 times road was repaired. Instead of that, they can relay the road once again freshly. Able to understand? The expenditure should not exceed benefit derived therefrom. Cost benefit analysis you must do. And it should not become profit. It is only compensatory in nature. What is that like that? Example, government officials, no? Suppose I'm an RTA inspector, road transport inspector. What I can do is, as an inspector, I can inspect vehicles that are going on the road, whether they are having proper documentation, all that. So every day I will go to one area and I will inspect. Now government rule, no. What is the rule? No, inside for me. Every day whenever I am going, 1,000 rupees per day allowance they are giving me. 1,000 rupees per day travel allowance they are giving me. And I am always using government car. Now what is the use of the traveling expenses? Tell me, allowance. Are you getting it? For every visit 1,000. Daily I will just take the car and go for 5 visits. Some chumma, like no objective. Every day I will be getting 5,000 rupees allowance. Is it becoming a source of profit for him? How the allowance should be compensatory? It should not be profit. Are you getting it? Auditor has to check all this. I'm telling you, this audit we will not do. These types of audits were completely done by C&AG. You know, C&AG has their own auditing standards. They don't follow our standards on auditing 700 series, 800, 500 series. No, they don't follow. C&AG auditing principles, auditing standards are completely different. Entire audit is governed by C&AG rules. Understood or not? In a path. Have you all read this? Now, what is performance audit? Performance audit is what? It's an audit of various programs that government is taking up. It's an audit of various projects. Suppose Tamil Nadu government is implementing some midday meals program. Yes or no? Midday meals program. In Telugu, Madhyana Bhojana Padakam. In Tamil also it is scheme means Padakama. Another scheme means what in Tamil? Sorry? Madhya? Apdiya. Okay, fine. Sorry. Okay. So, that kind of scheme is their midday meals program. Now I will do a performance audit of how that scheme is performing. Getting it? First I will check. Now in order to deliver this food to all the people, how the raw material is procured. The rice bags, the dal, whatever. It's all the ingredients for making sambar, chutney, whatever. First we will see how far that, this equipment, this entire raw material, the ingredients are procured for. Okay, they are procuring 100 tons in one particular school in a year. Now, how many were there inside the school? First of all, analytical procedure I will apply. How much they will eat in a year I will check. I will see input-output ratio, that's called efficiency. First of all, how many students were there inside that? By procuring 100 tons, how many were fed? There are hardly 50 students. 50 students, will they eat 100 tons in a year? Definitely not. Correct? So, effectiveness is completely gone. It's useless. Able to understand? Or the food quality was very poor. It is not eatable. It is not at all edible. So, if that is the case, how effective is this project? So, midday meal scheme, whatever program, that can be audited. Remember, here in government audit, no, it is not about financial statements. It is not about giving opinion. It's not about the government audit has a wider coverage. Suppose in this particular temple nearby, they laid a big road, cement road or some tar road they laid. On that I will do audit. That's a performance audit. Or on that I will do a financial audit. On that I will do compliance audit. For government audit, what is the scope of government audit? We can't define precisely. Understood? If I open Tamil Nadu itself, you see, I'll select Tamil Nadu state. And here I'll see, social infrastructure. Performance audit report I'll see. So I selected Tamil Nadu government related. Okay, just a minute. I think let me not select anything here. All sector I'll select. Performance audit report. Okay, so here it is regarding Tamil Nadu Generation and Distribution Corporation Limited. This is regarding, electricity. This is regarding electricity. This is regarding PSU audit report of C&AG of India, Government of Tamil Nadu. This is regarding some constitutional amendment related one. This is regarding general and social sector of government of Tamil Nadu. Revenue sector, government of Tamil Nadu. Almost similar reports. Similar reports are only, appearing. So almost we are going to 2017. General and social sector, we'll see once. What is there in that? Here they have given overview. Even you can download municipality level audit reports. You see, here it is regarding government lands. So they have many sub reports inside this. Understood? So here audit is not not like precisely like how we discussed in the other chapters. In other chapters, we do audit of general purpose financial statements in order to give opinion. This chapter alone is completely different. This is not general discussion like any other chapter. Are you clear? So first you need to understand how this chapter will work. Now what performance audit we focus on? We focus on efficiency. Efficiency means nothing but usage of resources. Economy is nothing but procurement of resources. Effectiveness, outcome of the project. How far it is useful. So the procedure is identification of the topic, preliminary study, planning and execution, and reporting. So some topic they'll identify. Road laid at so and so locality. Preliminary study. Plan the audit and execute the audit. And finally report. Now same way how we do audit of expenses, we do audit of receipts as well. So in audit of receipts, what we will cover, whether there is a proper assessment and realization. Is government assessing properly and taking measures to recover the revenue? What are the rules and procedures for recovering the revenue, like property taxes, municipal taxes, SGST, state level GST, and see whether there are proper controls. Getting it? Like sometimes we collect and refund. There is a possibility of double refunds. See that there is a proper control. See that all the rules and regulations are actually implemented. And municipal taxes, SGST, in all these cases, if somebody is not paying well or not paying properly, we will select sample cases and pass an assessment order. We see how the assessment orders were passed. Now whether the orders were passed by department officer, is it on a valid basis or not, we will check. Then government, they will have some stores, inventories in their government godowns, government warehouses. So what are the aspects to be covered in audit of stores and inventories? This itself can be asked as a separate question. Example, Food Corporation of India. They have godowns across India. Getting it? In India it is said that approximately next 5 years, 8 years, even if you don't do agricultural activity, we have enough food. Food safety, we have enough food. Wheat and all will have long gestation period. Rice, wheat. So in the government godowns, we have food, this is called food reserves. Ahara nilvalu in Telugu. Getting it? So we have so much of reserve which can feed approximately 5 years even without doing any activity. So that much food is there in India. Getting it? All this happened after Green Revolution. Getting it? Now we are all in data revolution. Next. So aspects to be covered in stores. Look at the regulations which are related to purchases, receiving the food, issue of food, custody of food, and sale and inventory for stores. So whether controls are properly implemented, whether prices paid for procuring these food items, inventory, whatever, are in agreement with those shown in the contract. Is there any uneconomical purchase of stores and losses attributed because of defective or inferior quality? Whatever stores, it may be food stuff, it may be medical equipment, it may be medicines, whatever. Next. Receipts, issues, balances are checked regarding accuracy, completeness and reasonableness. Any idle inventory shall be specifically mentioned in the report. Periodical inventory verification is done or not, we need to check. And valuation has to be seen carefully. Adjustment to profit or loss due to revaluation, everything shall be taken into verification. Any 4 points. They'll ask you straight question. What are the write about audit of stores and inventories in the context of government audit. They'll ask you. Now, audit of commercial accounts. Like government will be doing activities through three entities: departmental entities, statutory corporations, government entities. Departmental entities, the audit will be directly done by C&AG. Statutory corporation, audit will be conducted by the person as per the statute. LIC Act may say CA may do audit or some other may do audit. Government companies Act says only CA shall do. That's why who will appoint the CA? C&AG will appoint. But only CA will do ultimately the government company audit. All the aforesaid entities have to maintain accounts on commercial basis, nothing but accrual basis. Understood or not? The audit of departmental entities is done like any other government departments by C&AG. Statutory or corporation audit depends upon the statute. In respect of government companies, provisions are given under Companies Act. The last year straight question, write about audit of commercial accounts. Are you all clear? Now, what are the powers of C&AG? Important question. Inspect any accounts of any central government or state government department. It may require any accounts books, as to be sent to C&AG places. They may ask so many questions and observations as he may consider necessary for the person in charge of the department. Or he may do, instead of detailed audit, he may dispense detailed audit and go by test checking. That is his power. Whether he will do full audit or sampling audit, that is his choice, C&AG's choice. These are the powers of C&AG. MCQs might come. Next, what are the duties? First of all, he is the one who is responsible to compile, prepare accounts of central and state. In case of central, he will present it to president. State, he will present to governor. UT president, he will present it to administrator. He is also responsible to provide any additional information asked by them. And he is responsible for audit. He has to audit all expenditure, all the transactions related to consolidated fund and contingency fund. Able to understand? What is consolidated fund? What is contingency fund? Suppose Prime Minister National Relief Fund. It may be a contingency fund. Prime Minister Cares Fund. It may be contingency fund or consolidated fund. Simply speaking, you are paying taxes, no? You are paying direct taxes. You are paying GST. Yes or no? Government is recovering so many other. All this will go to different funds. That is entirely a consolidated from where government will spend for the project. Are you getting the point? Various public schemes. C&AG has to do audit of receipts and expenditure. Whenever government is giving any grant to somebody, whenever government is giving any loan to somebody, C&AG will do audit. Audit of central government and state government they'll do. Audit of stores and inventory they'll check. Audit of government companies and corporations, C&AG will participate. These are the duties of C&AG. They'll ask you a straight question. What are the duties of C&AG? Write any 4 duties. 4 marks. Clear? What is the role played by C&AG in government companies under Companies Act? Simple. They are the one who are appointing the auditor. After auditor is appointed, after he do the audit, they will do supplementary audit. Supplementary audit means what? In addition to whatever you did, I will also come and verify some additional aspects. If needed, I will also do test audit. Test audit is not supplementary audit. Supplementary audit will happen almost in every case of government company. But test audit will not happen frequently. Test audit can be conducted by C&AG separate person. Getting the point? He need not be chartered accountant. Clear? So write about supplementary audit. This can be asked as a question. The C&AG within 60 days of receiving the original audit report has a right to conduct supplementary audit of financial statements of the company by any person authorized by him. He can ask additional information. Now C&AG can comment on supplementary audit report, and if any comments given by C&AG upon or supplement to audit report shall be sent by the company to every person entitled, like every member, every trustee, or persons other than members but are entitled to receive the notice of general meeting. And the comments made by C&AG on supplementary audit shall be placed in the general meeting. Supplementary audit is not a separate audit but an extension to original audit carried out. This is a note given by me. Understood or not? Test audit means what? If at all it may consider necessary, by order conduct a test audit. So how to do test audit? C&H rules will apply. It is not done as per company audit, C&H Act. Performance audit they may do. Propriety audit they may do. Compliance audit they may do. Test audit means what? Performance audit, compliance audit, test audit. Like many a times CPSC, Central Public Sector Enterprises. What is this? Central Public Sector Enterprises. Compliance audit will be done by C&H. What is compliance audit? There are in India approximately 500 plus central public sector enterprises. Means 500 plus government owned entities were there. Out of which 40 plus were listed on stock market. BPCL, HPCL, IOCL, ITC. Yes or no? All these are what? Government companies listed on stock market. For all these companies, they do governance audit. Governance audit means what? Are they complying with CSR rules? Are they complying with audit committee provisions? Are they complying with SEBI provisions? C&H will check all laws and regulations compliances. That's called compliance audit. That is nothing but test audit. Are you getting the point? So that's a power given under Companies Act. So through this test audit, Companies Act is giving power to C&H to conduct 2-layer audit. One by stat auditor and supplementary audit. 2 test audit if required. Clear? So that's it. Then how to do audit against rules and orders. How to do audit against rules and orders. Little bit detailed information is given. With this, the chapter is over. Almost every topic I touched. I didn't ignore even a single topic in government audit. So understood now an idea about what government audit is mainly aimed at. It is not about giving opinion on financial statements. Government audit is completely what government audit comprises. In that, government company audit is only a very small limited element. Understood? So the audit of government is completely different context. And that is not something performed by chartered accountants. That is something performed by IAS officers and their team members, audit boards. You know, once audit report of governments is completed, this report will be submitted in the parliament. And there will be financial standing committees in the parliament. Like Committee on Estimates Committee, Committee on Public Undertakings, Public Accountants Committee. Like this, 3 committees were there in financial standing committees. These committees will consist of member of parliaments from Lok Sabha and Rajya Sabha. These people will evaluate C&H reports and give recommendations to C&H what plan of action they have to take. So this is the next process after audit of C&H. This you have in CA final slightly. So there you can discuss, there you can understand little more in depth. Understood or not? Easy? That's it. So almost we spent 40 minutes on government audit. I hope you might have got a different idea on what this exactly the chapter deals with. So let's start with items of financial statements. This chapter weightage is approximately 12 to 18 marks. 12 is minimum. Up to 18 it may come. Getting it? Remember, this chapter I suggest you to directly read from ICA material. Of course, my material is there. But in that, I have not covered disclosure requirements topic. Almost in every item, disclosure requirement I have not covered. But from important exam point of view, that is enough. But this notes is something which is added recently. This notes I did not cover, but I mentioned reference in the main book. In my main book, I clearly mentioned for these topics, please refer so and so page. I clearly mentioned as a reference in my main book, which I released in July 2022. Okay. So what auditor has to items of financial statements? You see, any standards you take, a documentation chapter you take, all the standards, what are they saying actually? They are only saying conceptually that auditor has to obtain evidence. How to obtain evidence? In what are the ways that he can obtain evidence? Only regarding that the standard actually explains. Suppose Taking a real example, how to do audit of insurance policy taken by the company. Suppose company purchased insurance policy on stock. How to do the audit? That point none of the standard explains. How to verify debtors? How to verify sales? How to get sufficient appropriate evidence on taxes paid by the company? Nothing is explained in the standards. What the standards standards conceptually speak what you have to do. They generalizedly will say that in respect of all important assertions in the financial statements, the auditor must get sufficient appropriate evidence. This is what the standards says, correct? They don't say anything beyond that. Now in this chapter, we are practically understanding, getting it, how we verify purchases, how we verify sales, how we verify employee benefit expenses, how do we verify depreciation, how we verify fixed assets, how we verify creditors, debtors, everything. Able to understand? Now, this is newly added notes. This is something the financial statements has to disclose. These are the disclosure requirements to the financial statements. Notes. So, the company has to disclose in the financial statements the following. In the recent exam, this point has been asked for 4 marks, and even this point has been asked for 4 marks. 4 or 5, something it was asked for. 2 points have been asked for 4 plus 4, 8 or 10. Many students, when they asked about this Binami, they straight away wrote CARO point. But I showed in my paper analysis video also, that is regarding this. Items of financial statements notes. I showed after the exam was over, May attempt 22. I made a video on paper analysis. In that I clearly showed this. It's not CARO, it is items of financial statements. Are you getting it? So anyhow, I'm just telling you, this is something, a disclosure requirement. This is something, a disclosure requirements to be made by company in the financial statements regarding CSR. What disclosures company shall make? Very simple. How much amount company has to spend during the year? That is something 2% of average net profits. How much of it is actually incurred? What is the shortfall? And what is the shortfall in the last year? What is the reason why the company has spent lesser amount? What are the activities the company spent? CSR activities. What are the related party transaction, like contribution to a trust, which is related to the company? Where a provision is made with respect to liability incurred by entering into obligation, the movements in the provision during the year should be separately shown. CSR related provisions. If any provision has been created, you need to check what is opening, what is closing, what happened during the year to the provision, all that. Any 5 points you have to write in this. Next. Second point is talking about how to round it off. How to round off the financial statements numbers. That is easy. If the financial statement total income of the company is less than 100 crore, nearest million the company can round off. Nearest million. Getting it? 100 crore means maximum how many millions? Approximately 1000 millions. Means 1 billion. Getting it? So if the financial statements are in billions, you can round it off up to million. Suppose if it is more than 100 crore or 100 crore, you can round it off even to the nearest crore, or you can present the financial statements in lakhs, or you can present it in millions, you can present it in crores. You look at Air India, they present financial statements in millions. Their profit and loss account writes a revenue from operation 10,000 will be there. Actually 10,000 millions it is. Able to understand? State Bank of India has presented in lakhs. Able to understand? So when company is presenting, which means, now tell me, if a company has an income more than 100 crore, can they present actual number of the actual value of the transaction, actual revenue from operation? No, it is not suggestible, because the number appears very big. The moment it crosses 100 crore, the number approximately goes to 10 digits. More than that. So 10 digit means it occupies the reading space so much. It is sometimes confusing. Able to understand? Next. company has to disclose the following relating to Binami proceedings, Binami property, whether any proceedings has been initiated or pending against the company for holding Binami property. This is exactly CARO reporting also the same. Getting it? Rules made as the company has to disclose what is the property, amount, details of beneficiaries. Actually, you can even refer CARO point also. Here, one advantage everyone has. Even in CARO also, details thereof has to be given is what mentioned. But these points listed in CARO, it will not there. The points, what points you have to disclose, that is not there in CARO. Even if you write as per CARO 2020 Binami, it will not be treated as a wrong answer. Why? I'll tell you. The person valuing the paper, he doesn't know that much knowledge. First point. If you do not write a point which is there in suggested answer, he will identify that you didn't write. If you write an additional point beyond what is there in the suggested answer, he cannot decide is it right or wrong. Logically correct or not? If you give me costing paper, if you write one additional note, how do I know it's right or wrong? I will see here some 5 points, you wrote only 4, 1 point missing, I can tell you. But if you write one extra point, I don't know is it right or wrong. That one advantage is there for everyone. Okay. So, if the property is in books, reference to the item in the balance sheet. So, if at all you mentioned that Binami property, getting it, details in respect of which Binami proceedings have been initiated, it is shown under fixed assets or current assets or somewhere. So, you need to disclose that property reference, refer to fixed asset, 9th item, like that. If property is not in the books, fact must be stated. Where there are proceedings against the company under this law as an abettor of the transaction, means the company who did the transaction as the transferor, then the details shall be provided. If the company is the original transferor, details shall be provided. What is the nature of proceedings, status of the same, and company's view on the same? What company's argument? What is the status right now? So what is the status of proceeding right now? Company has to disclose. This is something disclosure requirement by company, not auditor. First understand. We are talking about financial statements. How to audit them we are talking about. Which means the financial statements, disclosures therein is responsibility of whom? Management. So this is a question. What are the disclosures relating to Binami property held by the company shall be made in the financial statements is the question. Correct? So these are the disclosures. Got my point? Everyone. Same way, we have some other disclosure. Every company shall disclose any transactions that were entered with the companies whose name was struck off under section 248. Whose name was struck off. Nothing but registrar of the company will strike off the name. You might have seen this point in company law. If the company has obtained permission, if the company has incorporated by giving false information, the registrar can strike off the name. You might have seen this. Incorporation chapter. Strike off the name means what? Binding means what? Strike off means once the company name has been stricken off, it cannot do business. Means it's nothing but indirectly a prohibition on the company to do further business. Correct? Winding up means what? Shutting down the company. If a company name is striked off, auditor can again remove the strike. In reality, they will open the membership register of companies and strike off. No, that's not that strike off. Strike off means what? They'll put full stop to this company operations. That's what strike off means. During strike off, if company renders any activity, further punishments and all were there. Now, if you are company, you are the director in a company. Did your company entered into any transaction with the companies whose name was struck off? The company shall disclose following details. Name of the company whose is struck off, what transactions you did. You invested in them. You sold goods to them on credit. You purchased goods from them on credit. What is the outstanding? What is the relationship, if at all you have any relationship, like holding, subsidiary, associate? If you have, you need to disclose that. So if the company has entered into any transaction with a company whose name is struck off, the company has to disclose the following data. Understood or not? All of you? Now, shares held by the struck off company, outstanding balances to be specified. Now, in the financial statements, these are the important ratios which every company shall disclose as per Schedule 3. Like current ratio, debt equity ratio, debt service coverage ratio, ROE, inventory turnover, trade receivable turnover, trade payable turnover, net capital turnover, net profit, return on capital, return on investments. These are the approximately some 11 or 12 ratios which company has to disclose in their notes to accounts. Understood? The company shall explain the items included in numerator and denominator for computing the above ratios. Further explanation shall be provided for any change in ratio by more than 25% compared to the preceding year. Means analytical procedure also company has to do. Last year debtor turnover ratio 4. This year debtor turnover ratio 3. What is the percentage of change? 4 minus 3, 1 divided by 4 is equal to 25. Company has to show the reason why there is a huge change in ratio. So important ratios company has to disclose. And not only ratio, percentage or number if you disclose enough. You need to mention numerator and denominator, how the numerator arrived, how the denominator arrived. You need to mention that. Further, company has to disclose reason why there is a substantial change compared to previous ratio. What do you mean by substantial change in this? 25% or more. Understood or not? Okay, what happened? Have you seen all this? That's why I'm taking you directly from study material. Next. Whether company has traded or invested in cryptocurrency or virtual currency during the year, the following shall be disclosed. What is the profit or loss on the transaction involving crypto? What is the amount of cryptocurrency held as on 31st March reporting date? Deposits or advances from any person for the purpose of trading or investing crypto or virtual. This is nothing but margin money we maintain with the crypto broker. Very simple. You want to transact in Paytm. First what you need to do, you need to add money to the Paytm wallet. Then only you can transact in Paytm. Now whatever money you added to Paytm wallet is a deposit with Paytm, nothing but. Same way, if you want to buy shares and securities of any company, first you must have Demat. You need to transfer funds from your bank account to Demat account. Same way in crypto also, if you want to buy cryptocurrency, you have to transfer funds from bank to crypto account. There are so many now coins which, there are so many coins which is very famous. Now crypto is banned. Now it is not legally valid. RBI clearly says crypto is not valid legally. They didn't prohibit, but they boycotted. Getting the point? Trading is not prohibited yet. Able to understand? Next. So the company has to disclose all these. Understood or not? These are the 6 important disclosures which company shall disclose in the notes to accounts. Understood all of you? From this, in the last exam, 2 points were asked. This time also there is a possibility one item may come. 4 marks to 5 marks question. Easy to understand all of them? That's it. Next. Next we will straight away go to the first page. So introduction. First of all, companies prepare financial statements using GAAP principles and accounting standard. What is a financial statement audit? It comprises verifying financial statements and disclosures by independent auditor. The result will be reported by auditor attesting to the true and fairness of the financial statements and disclosures. First of all, preparation of financials is the responsibility of management. That's it. What is an assertion? We have seen already in documentation chapter. Assertion is nothing but representation made by management. Whatever management is giving the information, whatever management is putting the data, explicit or otherwise, which are embodied, which are as part of financial statements. Getting it? They are treated as assertion. But assertion do not include financial statement itself. I cannot say financial statement as assertion, but inside financials, whatever is there, we can call it as assertion. In preparing financial statements, company management makes implicit or explicit claims regarding completeness, cutoff, existence, valuation, rights and obligation, presentation and disclosure. What are they? When a company is saying 10 crore as trade receivable, it is indirectly saying total trade receivable is how much? 10 crore. entire debtors, entire receivable from customers up to 31st March is 10 crore. And all these 10 crore worth of customers are existed. All the transactions of them are occurred during that year. And the value is 10 crore after provision. And this is a right of the company. These are the goods which we sold to them. So it is we who are having right. And we are presenting and disclosing breakup for more than 6 months, less than 6 months, all that. For one item, see how these many assertions apply. These many assertions are claimed by the company. Able to understand. Example, they have given one example. You read it, you will simply understand. Next. Income statement captions comprising revenue and expenditure balance. So in income generally, what assertions we will look into? Occurrence. Whenever they showed as an income in P&L, they are simply saying the transaction is recognized financial statements. Whatever transaction we recognize, it may be expenditure or income. It is occurred during the year and it is related to the organization. Example they have given, employee benefit expenses has been incurred during the period in respect of personnel employed by the entity. Employee benefit expenses does not include unauthorized personnel. Example, employee benefit expenses. Suppose you say in profit and loss account, employee benefit expenses some 100 crore. What does it mean? What that assertion explicitly saying? It is saying this is an expenditure incurred in respect of employee benefits who are employed in the organization by the company. Employee benefit does not include amount paid for unauthorized staff. Unauthorized means what? Those who are not working in the company or those who are working in the company but not recruited formally. Whatever salary debited in P&L, there is only a salary paid to the company who is recruited. That's what the assertion says. Able to understand? Now, completeness. All P&L items, when I say purchases 55 crore, sales 6,50,000 crore, Reliance, it says total sales that were happened during the year is 6,50,000 crore. See, when we say sales 6,50,000 crore, we are indirectly saying it is recognized during the year, it is related to our organization, and total sales are only 6,50,000. And the total sales up to 31st March are 6,50,000. Able to understand? You see, profit and loss account for the year ended 31st March 2022. When I say like that, inside that below statement, when I say revenue 3 lakh crore, the 3 lakh crore is earned up to 31st March. And 3 lakh crore only earned, completeness. An entire 3 lakh crore is belonging to our organization. That's why we showed in our P&L. So that is what? All transactions which were to be recorded have been recorded. And none of the transactions have been omitted. Cut off. All expenditure relating to this accounting period is correctly accounted. So that is what this point says. So regarding employee benefit expenses, they took an example and how occurrence is to be interpreted, completeness is to be interpreted, cut off is to be interpreted. They are given example. Understood. Next. Can you switch on the fan? Next. Measurement. Measurement. Transactions have been recorded at right amount, accurately at the right amount, and no errors were occurred when we are recognizing the expenditure or income. Measurement is a word which we use for P&L items. Valuation is a word which we use for balance sheet items. Balances only can be valued. Transactions cannot be valued. Transactions can only be measured. Understood? Then transactions, presentation and disclosure. What is this regarding? How employee benefit expenses has to be presented, operating expenses in production, administrative, cost of personnel, sale of products how much, sale of services how much, other operating revenue how much. Revenue shall be disclosed like this. Getting it? Employee benefit expenses shall be allocated like this. That is called presentation and disclosure. Transactions have been properly classified and presented. Transactions events are properly segregated or desegregated. Presentation, disclosure are considered during the course of audit. All this you have to consider. How they were classified, how they are presenting, is it misleading? You need to check it out. Understood? Next. Same way, for balance sheet, what assertions we will check? Mainly, generally, we check existence, whether the asset physically existing, which a completeness, all the assets, company showing plant and machinery worth of 100 crore. Really complete 100 crore worth of plant and machinery there physically or not? Our company is indirectly claiming we are having totally 100 crore of plant and machinery. Cut off. Whatever amount shown under plant and machinery, that is plant and machinery installed and is being used by company. It is not capital work in progress. Cut off means valuation, whatever value we are showing, that is after providing depreciation, after providing provisions, all that only. It is the right value, fair value that can be recovered. Correct? So rights and obligation in respect of assets, entity has ownership. In respect of liability, entity has obligation. And presentation and disclosure, they have given various examples. These are the assertions. These are all called as what? Assertions. Now, so we need to verify all these assertions. We need to verify all these assertions when we are conducting audit. See, literally speaking, we don't read this and do in our audit. We by default do that audit. Suppose company, they purchased goods. Now, first I understand how the company will make a purchase. Best example, Reliance Trends you take. Reliance Digital you take. How Reliance Digital store will get a TV inside their store first of all. Before they have to sell, they need to get inside the store, right? Correct? Huh? So, first, these Reliance Digital, these are all branches actually. These are the branches which are meant for sales. Showrooms, nothing but. Yes or no? Now this Reliance Digital is having right now in their store some 55 TVs which are under display. You went to store, right? Reliance store, some TVs will be under display, no? Purvika, any appliance shop if you go. Yes or no? Now, in their actual warehouse, they are having some 180 TVs. 180 TVs in the stock. How did they get this stock? They have placed order to the warehouse, the Reliance warehouse. Maybe in the Chennai they will have one big warehouse. Entire Reliance Digital will have one big warehouse. How warehouse have got this? There is some administrative office getting it who has placed order with vendor. Who has placed order with the vendor? So vendors are so many. Samsung, Sony, LG, all these, MI, there are so many vendors. From all of them, the central warehouse of Reliance Digital will place an order. And first and this vendor will directly distribute that goods to the respective warehouse. And the warehouse, it will send the TV to one Reliance Digital store that is there in Albarpet. Then they will send to Annanagar. They will send to some whatever local areas. They will distribute. Now, how the purchase happened? Now here, Reliance Digital store will, based upon their stock, once the stock value reaches to reorder level, they will place an order with the warehouse. Dear warehouse, we want TV, we are running shortage. Now customers are asking. Now, what this warehouse will do? They will send the TVs to the Reliance Digital. They will sell it. Later, they will again send the amount to the warehouse. Or then they will send the amount to the head office later. It might happen like this, or they may directly, head office will collect the sale amount. Who knows? Depends on the structure. Now, the warehouse will place an order with the, head office that we want these many TVs totally. This is a breakup of a TV ordered by various showrooms. These many TVs we want of particular model. They will place an order with head office. Head office will first raise a purchase order with the Sony or LG. After they raise the order, LG will send the goods right to the warehouse. Warehouse people will not accept directly. They need to accept the goods and they need to give GRN. GRN means what? It's an acknowledgement that I received goods. Yes or no? Goods received? Note. So before I give acknowledgement, first I want PO. Who ordered? I will see whether there is a valid PO or not. Then against that I will map it and then receive it and keep it in the warehouse. Now you see how much process is involved here. Now what auditor has to check? First I need to understand what process happens. Yes, I understood the process. Then I will test some controls in this. Is warehouse receiving any TV from any vendor? Without a PO, I will have to check. Now during the year they received 150 times totally goods. From vendors, 150 inflows were there. I will take randomly 3 or 4 inflows and see whether purchase order date is more than the before inflow date or not. I will see. Before inflow date only purchase order was raised, then it is correct. Suppose goods I received today, next day I made a purchase order, which means it's a weakness in internal control. So I will check like this controls. Then I will take some transactions, I will check all the transactions. So what are all I will have to check? Whether there is a valid purchase order, whether goods have been received by the warehouse, and whether goods received note has been issued, whether GRN has been issued only against a valid purchase order. Verify the purchase invoice. What is purchase invoice? Seller will give me bill, no, that he sold goods, that invoice. And verify the invoice quantity with the stock register. Correct? And see whether physically that many items were there available or not as per the stock register, surprisingly. This is purchase audit. Do you think you need to read this chapter and then we need to do the audit? No. I just took this example and told you. So in this chapter, they are giving you an idea about how to verify purchases, how to verify sales, an idea they are giving you. In reality, that process we may follow, or there might be a different process. Understood or not? All of you. Now the first thing that we need to discuss is share capital. Regarding share capital, company law provisions only covered here. Regarding share capital, company law provisions covered. What you have to do, we have given company law marathon in my YouTube channel. In that, share capital chapter is there. In that, which chapter is there? Share capital. In that, share securities issued at premium, sweat equity shares, buyback, all the concepts we have clearly explained. Are you getting the point? Dividend, accounts of companies, all that we have clearly explained. Please watch them. That is what here it is covered. What is covered here is exactly how to verify shares issued at premium. How security premium account can be utilized. This is completely company law matter. What auditor has to verify? What you will verify securities premium? In order to verify securities premium, first of all, what is securities premium? For what purpose it can use? Again, it's a company law question. Understood? Next. So, this entire capital related thing, first you need to watch company law provision and then you have to come to this. Getting it? Without watching company law funds, please don't read this. This is regarding, if you see, this is regarding utilization of borrowed funds and share premium. Exactly 143 subsection 3 checklist item is there, no? Inside that last one, foreign entity, mediator, funding party, and that exactly that is given here. That is given. So whenever a company has provided any guarantee, or the company has lent directly or indirectly, getting it to a mediator, and the mediator is directly or indirectly investing in another party or giving guarantee to another party, company shall disclose the following. When our company is funding party, the funding party means our client, they have transferred some money to a mediator, it may be foreign entity, that mediator is ultimately lending to another person, whoever identified by the funding party. So who is that other person? Ultimate beneficiary. Or the mediator given guarantee to some third party on behalf of the ultimate beneficiary. If any of these transactions were there, the company shall disclose the following: date, amount of fund loaned or invested in intermediary, with complete details of each intermediary to whom you gave as an intermediary. What do you mean by intermediary? I gave money to them, but that money is not for them. That money they need to give to somebody. Then only we call it as intermediary. Date and amount of fund loaned or advanced invested by such intermediary to the beneficiary. Date and amount of guarantee in case if an intermediary is giving guarantee. Declaration that relevant provisions of FEMA Companies Act has been complied, including non-violative declaration for Money Laundering Act. The company has to give a declaration like this in the notes to accounts. Now, auditor has to get a representation here. Apart from whatever disclosed in notes, no other transaction was entered. Apart from whatever disclosed in notes to accounts, we should get a declaration that no other transaction was entered by the company. And that point we should give as a comment in 143 subsection 3. Understood or not? Same way, if the company acted as intermediary, what points company shall disclose? If the company acted as intermediary, what points company shall disclose? So that is given. Understood or not? How to do audit of reserves and surplus? This is not that important. Now, borrowings. So borrowings means what? Nothing but it's a liability. Yes or no? So what audit procedure? Briefly, what audit procedure we will take up? What is a brief audit procedure? First, we will look at the board meetings. When a company is raising money as a loan, the company means nothing but directors only have to execute. No. A director will not be given power. Sometimes to borrow money, board resolution is required. Understood? Again, if a company want to borrow money beyond the paid up capital and reserves, shareholders approval is required. Likewise, under Companies Act, they have given some powers. They have given some duties as well. So, whenever a company has took a borrowing, the company has to, we have to see the meeting, getting it, board meeting minutes for approval of the loan. During the review, ensure that loan agreements or bond were authorized. Ensure that commitments were approved by directors. Agreements what? Tally. Details of loan recorded to the loan agreement. How much loan you received. Like how much you recorded in books. And look at the corresponding loan agreement. Verify the borrowing limits. How much company can borrow first of all. Roll out and obtain balance confirmation. Directly send a confirmation to lender. Tally details of leases and hire purchase to underlying agreement. Suppose if the borrower is under lease or hire purchase contract, through that a borrower has been created. Check with the agreements. In case of debentures, borrower, examine trust deed. When the debt is retired, is it discharged properly? The asset secured has been discharged from charges or not? Get a declaration that all liabilities have been recorded. All liabilities have been recorded by the company. Now, company has to obtain a schedule of short-term, long-term, auditor has to obtain a schedule of long-term and short-term borrowings, showing what is the outstanding at the beginning, ending balances, and how much is taken during the year and repaid during the year. See whether any other evidence is available like board minutes, contracts, cash ledgers, all that. Trace closing balances to the general ledgers. Nothing but simply speaking, how much is closing balance of the loan? What is the loan ledger account says? Closing balance. Something is shown in the balance sheet. Notes to accounts. Match it with the ledger, books of accounts. That's it. Actually, no, this requires a real understanding of audit, this chapter. A real life understanding is what required. Mostly this chapter is with common sense. Before you read a point in this chapter, first you visualize what you will verify in, if at all you were there. First always visualize it, then you read, you see how beautiful you will understand and remember as well. Suppose we'll do for next thing. Direct confirmation procedure with borrowings. What will you do? Like we told you, get a third party confirmation from lender. What will you do if you are in that place? Suppose if I am there, what I will do, First I will take list of borrowers. List of lenders. We borrowed, no? Who all lenders? I take a list of all the lenders. Out of them, banks will be there, FIs will be there. Correct? Or some related parties might be there. Correct? Now, I will design confirmation request. It may be positive or negative. Then I will send the confirmation request. Then, if at all they don't respond, I will send the follow-up request. Once the other party confirms, I will see whether the amount is matching or not. If amount is not matching, I will do additional work where it went wrong. Is it in our books which is wrong or in the other party which is wrong? And I will also see loan agreement and cross verify the terms and conditions. That's it. That's what given. Ascertain confirmation asks for all information which is necessary for loan, like what is the rate of interest, due date, security, whatever be given. When you are asking for confirmation, don't only ask what is outstanding amount. Ask whatever you want in the confirmation. Next, if at all there is no reply, send a reminder. Correct? Now, once you got reply, compare balances or as per confirmation balances with books of account. If there are any difference, do reconciliation. Test the supporting documents for reconciling. Correct? So imagine first, then look at here. Most little match. Next. Now, at what value we should record the liability? At what value we should record the liability? Whatever is outstanding. Whatever is outstanding. How do you check whether the amount outstanding is this much exactly? How do you check? First I will look at the loan agreement in order to know how much loan I received. Then I will look at the bank statement, how much is actually received. Then I will see how much is paid during the year. I will see the breakup of interest and principal. Then balance outstanding is shown in the balance sheet. And see, outstanding amount considers accrued interest but not paid. All these points I should check, right? Same will be there, you see. Determine first accounting policy and methods for recording the debt. By using what policy company is using for recording the borrowing. Here there will not be any policy generally. For borrowings, what policy? I borrowed a loan. I will record it as a non-current liability if the duration is more than 12 months. Tally loan balance and loan payable to loan agreement. Correct? Recompute interest and discount premium on redemption if any. Company said some discount is there, company said some premium is there, I will recompute. Check computation of amortization, premium or discount. Amortization where we will use? Not that. This is regarding loans. Interest can be either we can call it as amortization or we can also call it as discount in case of bills. Getting it? For foreign currency loan, check accounting standard 11 requirement satisfied or not. Then further, look at the loan agreement and read. Is the entity complying with loan provisions or not? If there is any provision which the entity is not in compliance, whether that should be classified as correct. See whether is there any waiver amount by lender. Lender did, if at all anything is waived, that should not be shown as liability. Examine due dates on loans for proper classification between long term and short term. That's what I told. If the loan duration is more than 12 months, non-current loan. Otherwise it's a current loan. Suppose if the installment of long-term loan falling due within next 12 months, it should be, has been disclosed in financial statements. You need to disclose what are all the loan installments that are falling due within the next 12 months. You need to disclose it as a footnote. These are all requirements of Schedule 3. What we are reading here is nothing but requirement of Schedule 3. And auditor has to verify Schedule 3. Schedule 3. Able to understand? All the requirements of Schedule 3 we have to verify. And how to audit them. For that, there is a guidance note on audit of assets, guidance note on audit of liabilities. So, that entire Schedule 3 content guidance note is copy pasted in this chapter. Understood? Look at the important terms in the loan agreement and document and see the charge has been created or not. And whether requirement of applicable statute regarding charges, company law provisions for charges have been satisfied or not, check it out. Suppose if the value of security falls below the amount of loan outstanding, that balance amount of loan where there is no security should be shown as unsecured loan. In case of hire purchase, look at the hire purchase agreement. And in case if the loan is borrowed from related parties, see AS 18 compliances. Verify liability towards banks, bills discounted or disclosed correctly in the financials. See that whatever loan borrowed is within the borrowing powers of the company. Companies Act provisions were there, 185, 186, all that. Directors powers, all that. Verify section 180, borrowing power under Companies Act. For what purpose the loan was borrowed, for what purpose it is used. If it is not used against the original purpose, why there is a diversion of fund. If at all, especially if it is a bank loan or financial instrument loan, debentures or term loan. Getting it? If there is a violation in purpose, it has to be mentioned in the CARO. And the company has to disclose loans in the following. Loans in the form of bonds, term loans from banks, from other parties. Any deferred payment liabilities, deposits, loans, advances from related parties, finance lease obligations, other loans. Borrowing shall be subclassified again into secured or unsecured. If at all any loan has been guaranteed by directors or others, the aggregate amount of such loan shall be disclosed. How much is guaranteed by others? So what is the disclosure for bonds, debentures? Have given additional matter. If any bonds have been redeemed, Okay, whether the company has power to reissue them. Redeemed bonds sometimes can be reissued. So almost entire these points are like, it is not something where we explain. Getting it? It is something you have to read and visualize. That's it. All these points are not required. Any 4 or 5 points only you may have to write. This is regarding Schedule 3 disclosure requirement. This is regarding Schedule 3 disclosure requirements. In our regular class, what we do, in audit, 5 hours Schedule 3 class first we will give. First watch that Schedule 3 video. By our accounts faculty, he will explain. So 4 to 5 hours purely Schedule 3. Complete Schedule 3 will be discussed. Then only we will ask them to watch this chapter. Understood? Items of financial statements is approximately 8 to 10 hours chapter, including Schedule 3. That too, we can't discuss in depth entirely. Because it is saying what? Check that, check this, check that, check this. Now you tell me whatever is there, I am just repeating it. Is there anything that I can add here? It is asking me, agree whether loan outstanding amount is matching with the agreement. What I can tell you in this? Instead of what I'm doing, I'm slightly simplifying. Tally loan outstanding amount with outstanding balance as per the statement or with the loan agreement. Check it out. That's what I'm telling. Understood? So this is disclosure requirement. This is completely disclosure. And you see here there is a another requirement where company has borrowed from banks FIs on the basis of security of current assets. It shall disclose, which means it's additional requirement under Schedule 3. Schedule 3 also should disclose. Even in CARO also we should disclose this point, working capital loan. Whether quarterly returns, statements filed by company with the banks are in agreement with the books. If not, summary of reconciliation and reasons has to be disclosed. Company has to disclose why there is a difference. Now whether the company has been declared as willful defaulter, date on which it was declared as willful defaulter, details of the default. Who is a willful defaulter? They will ask you a 3 marks question. They will give you a question on this. 3 marks question. Write about disclosure by the company if the company is declared as willful defaulter. That's it. Student will write CARO point. Correct? But this is not CARO point. This is a disclosure in Schedule 3 by the company in respect of borrowings. If the company was declared as willful defaulter by any bank or financial institution or other lender, the company shall give date on which it was declared as willful defaulter. What is the default? Amount and nature of debt. Who is a willful defaulter? He is a person or an issuer of debentures. Getting it? Which is categorized as willful defaulter by bank FI. Getting it? As defined under the Act, or consortium means consortium banks in accordance with guidelines on willful defaulters by RBI. Issuer means nothing but issuer of bonds. Issuer of bonds. Same way, company has to check, company has to disclose what are the charges that created by the company, out of which how many charges were satisfied, means charges were removed. Understood? Charges chapter, in the company law. Charge means what? Charge can be created in mortgage, pledge, hypothecation, anyway. Charge means I'm having charge over the asset. Getting it? Next. Same way, company has to disclose utilization of borrowed funds and share premium. This point again repeated. This point a company again repeated. When the company have not used borrowings from bank FI for specific purpose for which it was taken, the company shall disclose. Where they have used diversion shall also be disclosed. This is Schedule 3 requirements. Understood or not? Without reading all this, if you go to exam, if a question can come from any of this, whatever is highlighted in bold letters, no, important. Utilization of borrowed funds is again, same, that intermediary, foreign entity, the same point only given. Then, how to do audit of trade receivable? Tell me how to do audit of debtors. You just think of it. In the balance sheet, there is a debtors amount shown some 50 crore. company has to receive debtors 50 crore. The company showed debtors outstanding for more than 6 months some amount, remaining some amount. Understood? Now what I will verify? First I will take list of debtors. Then I will take sample. Then I will trace to the sale entries in the books of accounts. Then I will say, first of all, on what basis company sell goods to the customers on credit. I will look at the credit worthiness policy of the company. On what basis company will sell goods to customers on credit. Then I will check. I will send external confirmation. In this debtors verification, external confirmation is important. How do I send external confirmation? Same process. First select the debtors. Select the confirming party, nothing but. Then design the confirmation request. Send the request. Design the request in such a way it covers all the details. Like what is the outstanding amount? When he is expecting to pay. Getting the point. So all that full details we have to, maintain that. Now what auditor has to check with respect to debtors? Auditor has to check whether controls are in place to ensure that invoices cannot be recorded more than once. And receivable balance automatically recorded in the general ledger from original invoice. Company will not record the debtor separately. When sale entry has been passed on credit, naturally customer account will be credited. Sorry, customer account will be debited. That we need to receive from so and so customer this much. In a bank, no. When you withdraw money, do banker has to update your balance manually? It automatically comes from same. Ask for period end receivables aging report as on 31st March. Aging report you take. How many debtors were outstanding for more than 30 days? How many debtors were outstanding for less than 30? More than 60 but less than 90? More than 90 but less than 120? More than 120? More than 180? Get a aging report. And trace the balance as per the report to general ledger. So aging report says so and so customers are having outstanding for more than 180 days. List of the customers, look at the particular general ledger account, their ledger account. Check whether realization is recorded invoice wise or not. We generally debtors collection from debtor, no, we will account it on FIFO method. Suppose I sold goods to you from past 10 days, every day I am selling you 1 lakh. Today what is your outstanding amount? 10 lakhs. 11th day onwards you will pay me money. Tomorrow you paid me 1 lakh or tomorrow you paid me 3 lakhs. I should adjust it for first 3 bills. Yes or no? So whatever the amount you are giving me, first I should adjust it for the old invoice wise. Whenever we receive from customer, we should adjust it against a sale. So right now, as on today, if I open debtor's outstanding balance, which invoices related amount is pending, I can talk to the debtor. If not, check money received from debtor is adjusted chronologically. That is FIFO basis. இப்போ வரைக்கு FIFO na inventory la da கேக்குது. Yes or no? FIFO means what? It's not inventory valuation method. FIFO means first in first out. First whatever debtor I made a transaction, that I will adjust it. In case of large balance is due for long time, what is the reason? Justification. Especially here auditor has to check whether provision is required or not. Confirmation procedure. They'll ask a straight question. Write about direct confirmation from trade receivables. How auditor will execute, how auditor will apply direct confirmation for trade receivables. A significant and important activity is to contact customers directly and ask them to confirm amount for unpaid receivable as at 31st March. An important activity on 31st March is contact the customer and ask him what is outstanding balance. This is necessary for all big accounts. While certain random customers having small outstanding may also be selected, small balances also select. But for small balances, we send a negative format of request. Generally, we send what? Negative format. Now, external confirmation is of two types. Positive confirmation request, negative confirmation request. Positive confirmation request means, I will type the confirmation letter like this. We are the auditors of ABC Private Limited, were appointed for conducting audit for the financial year 21-22. And as part of our audit program, we found that your account is having outstanding balance as on 31st March and not yet paid today. On the date on which we are sending confirmation, within bracket we will mention the date also. On today it is still outstanding. The amount is 10,50,000 rupees. Kindly confirm within 3 days from the date of receiving this confirmation request. Okay. What is the outstanding balance in your books of accounts? Dash. They have to fill it and then send me. Now here reply is must know. Correct? Huh? He has to give reply, no? Because I am asking him to fill it. If at all within next 3 days he didn't reply, what will I do? I will send a follow-up mail or I will call him and remind him once again. Understood or not? Negative request, how it looks like. First pair I say, in our books of accounts, in the audit, in the client books of accounts, we found that your account is having an outstanding balance of 10,50,000 rupees. Full stop. Reply within 3 days if you disagree. Understood? If you disagree, please reply within 3 days. Otherwise, ignore. Within 3 days, if at all reply came, within 3 days, if reply came, what is the answer? No. See, some third parties, no, they will reply even if they agree. Suppose if at all, I told him only if you disagree, reply I told. Suppose he replied by saying everything is matching. Will you punish him? That is his choice. Suppose within 3 days if you didn't get reply, what will you assume? Amount is matching. That's why the third party did not reply. Yes or no? All of you, this is what you assume. Now tell me, in positive format and negative format, which is superior? Positive is only superior. I'll have evidence here. Negative, no, I sent a mail, he forgot to see. He didn't check the mail. 4 days over, 5 days over. What I assume? Everything is matching. But in reality, he didn't check. He didn't see that he got a mail. Yes or no? Now, actually balance is materially misstated. And the mistake is in our books only, not his books. Client is perfect. The third party is perfect. Our client only problem. Now tell me, I will misinterpret, no. So positive confirmation request is more persuasive than negative confirmation request. Now you may say, sir, in such a case, for everyone we can send positive. No. That's why standard gave a list of conditions where negative confirmation request can be used. Where negative confirmation request condition can be used. That format can be used. 4 or 5 conditions were given. 1. The confirmation in respect of the outstanding balance which you are sending is homogeneous, immaterial, small items, numerous were there. Second condition, all have to be satisfied. Low exception rate is expected. Have you seen SA 505? Everyone say SA 505 easy, I know very well. Tell me this answer. A low exception rate is expected. What is the sentence meaning? The possibility that the whatever our books, client books balance and the other party is confirming, no, both will match. Mismatch possibility is low. Mismatch means what? Misstatement, Exception. Exception, there is a definition for SA 505. This is also one more question. If at all anybody says, I know auditing very well, ask him, what is exception in SA 505? You ask him. 90% they can't tell. Tell me what is SA 505? SA 505 சொன்னோனே external confirmation. அவ்வளவு தெரியுமா உனக்கு? Exception என்ன? Only one definition is there. 3 definitions are there in the SA 505. Positive confirmation request, negative confirmation request, exception. What is exception? You know, it's a difference between amount requested to be confirmed by the auditor or amount contained in entity records and amount confirmed by third party. Whatever confirmation received, whatever there in our books, if there is a difference, we call it as exception. If you identify exception, what will you do? Will you scold the client? What will you do? First, you will resolve whose books of accounts it is wrong. Is my client made a mistake in financials or the other party? I will open entire ledger. I will ask him his ledger. In his books, my ledger is there, no? In my books, his ledger is there, no? I will cross verify. In his books, credit means, in my books, it is debit. I will cross verify. Whatever untallied amounts is there, what happened, I will inquire. I will see. If our accounting is correct, then our balance is correct. There's only wrong. Exception is not necessarily a misstatement. I'll give an MCQ or I'll give a correct or incorrect question. An exception in case of an external confirmation is to be treated as a material misstatement in the financials. பாதி பேர் இந்த கொஸ்டினே புரியாது. நான் சொல்றனால you are able to identify. Getting it? These kinds of questions will be asked. So, a low exception rate is expected. The possibility that the other party and my books, the possibility of difference is low. Then you send negative confirmation. A low non-response rate is expected. The third party always will respond. He is such a kind of disciplined person. To him, you send negative confirmation, no problem. If at all he read it, if at all he didn't reply within 3 days, I can happily assume he have definitely read it. Because he is such a kind of third party. Even if you send greetings, he'll reply, thank you. For every greeting you send, he'll reply. Such a kind of third party, nice party. The chances of non-response is very low. Understood or not? These are the conditions. If all these conditions are satisfied, then only you can use a negative confirmation request. Clear? Now, the auditor employs direct confirmation with the consent of the client. First of all, direct confirmation, if you want to ask, send to the other party, first take client consent. So that's why you see in SA 505, you have if management is refusing to you to get an external confirmation, ask for reasons. Try obtaining evidence alternatively. If management refusal is unreasonable, alternative evidence is also not possible, give modified opinion. Take appropriate action as per SA 705. That's what they say. What is action in 705? Modified opinion. Understood or not? So that entire procedure is given. Understood? Can you read this later? Suppose if you do not receive any reply, alternatively you should do like see whether cash is received subsequently. As on 31st March is outstanding means still I am doing audit in June month. Okay, I have not yet completed my audit. Audit report is not yet given. 31st March 10,50,000 outstanding means somewhere in April or May he would have paid. No, see whether is he paid or not. He paid. If he paid means it's a confirmation that he is outstanding to our organization, right? So all this, and with respect to related parties also get external confirmation, all that. This is cutoff completeness. This is cutoff, especially last 5 days in the reporting period. No, all last 5 days. All last 5 days. See, I'll give you one example. Stock in transit will arise in whose books of accounts? Buyer books of accounts or seller books of accounts? Stock in transit will appear in whose books of accounts? Ellaru tappuda. It depends upon the control is with whom. Purida? It depends upon. If at all you all told me depends on the situation, sir, na, I would have appreciated. எல்லாரும் ஃபிக்ஸ் ஆயிட்டா செல்லர் பையர்ல போத் யார் இப்ப சொல்றது? ஓகே, இட் டிபெண்ட்ஸ் அப்பான் த கண்ட்ரோல் இஸ் வித் whom the risk and reward is. Getting it? Very simple. I came to Chennai. I went to some manufacturer. I purchased 5 tons of some raw material. I paid money. I only contracted one lorry, big truck container. Loaded the goods into the container. Bye bye I told to manufacturer and I started leaving. Now if something happens to the truck, if something happens to the goods, whose responsibility? Buyer or seller? It's my truck, it's my authority, it's under my control. Now it is in my control, right? As on 31st March in my factory which is there somewhere in Rajasthan, I have not yet received the goods. 31st March it is on the highway. Now stock in transit. Seller, no, he sold goods, delivered goods also, risk and reward transferred. He will treat it as that cash account debtor to sales account. Over. Stock and all will not appear for him. In my books, purchase is over. Purchases account debtor to cash. Now goods are there, no. Stock I should show, no. Is it in hand? It is in transit. In whose books it came? Buyer. Understood. Situation different. I ordered, gave cash, and I asked him to deliver at my factory in Rajasthan. If at all something went wrong in between, he should only bear loss. I don't have any trouble. Only if I receive in my factory, I will give you balance payment. This is a condition. The buyer seller also agreed. Now as on 31st March, I paid money, some amount. Did I purchase goods? Did control came to me? Advance given to supplier, to cash account. Now the other person, did sale completed? Risk not transferred, no? Until delivery at my factory, risk not transferred. As on 31st March, so sale cannot be recorded. Whatever amount he received, how he will record? Advance received from customer. Now, in the stock, in the go down, is stock available? Not available. But where is it? It is in the transit. So, he will reduce from stock in hand that amount and put it under stock in transit. Now, in whose books it came? Seller. Depends upon risk and reward is with whom. Understood or not? All of you. Understanding accounts means this. How much to be debited, how much to be credited, not that. That system will take care. You need to understand this. Are you clear? These kinds of accounting. See, application of accounting principle means what? This only. Risk and reward transfer. Accounting standard application means this. Next. So we apply cutoff. Whatever I told right now, it is called as what? Cutoff technique. What we do is, all purchases and sales, we apply cutoff procedure. What we do in cutoff procedure, you know? Suppose last 1 week purchases which are debited in profit and loss account, I will take list. See whether control is received in our organization or not. Whether goods received inward in our control or not, I will check. Only in respect of goods that came into our control before 31st March or on or before 31st March, they shall only be recorded as purchases. Correct? Same way, whatever goods we sold, only risk is transferred by 31st March to others. Then only we should show it as a sale. Otherwise, how come it is sale? Company will do frauds in this. As on 31st March, they will create fake sales. See whether goods were delivered ultimately. Check it out. Understood or not? All of you. Ensure that all the goods are dispatched prior to year end. Sales no, debtors no. So we need to see whether every good has been dispatched. Okay, on a test check basis. Ensure that no goods are dispatched after year end have been invoiced and included in debtors under the audit period. If any goods were dispatched after reporting period, 31st March, and if that goods which are dispatched means delivered after 31st March, if at all they are recorded as sale in the current year, is it right? That's what they are saying. Understood or not? People ask me, sir, how to remember this chapter? How to remember this chapter? Eppadi remember panna mudiyudalla? Without understanding, how will you remember? So I am giving for trade receivables. Similar logic apply for? Exactly. Very good. Smart students. Next. So, same way, test check invoices which are listed in receivable report. Take few invoices from debtors aging report. Compare them with the supporting documents. See whether amount is correct or not. Correct customer creditor or debited or not. On which date it was entered into the books. All that you have to check. Match invoices, sales to shipping, dispatch log. Delivery challan will be there. GST e-way bill will be there. So check that. And if any customer was given discount, look at the discount process, incentive process, all that. Now, how to check whether trade receivables were valued properly? In exam, they will ask you all these questions separately. They may ask you only this question. Suggested answer will contain this. Your answer will be containing this. Understood? Observe what you are reading. Here, we are checking valuation. How to check debtors value. Here, how to check whether debtors are accounted completely. Cutoff means completeness provision. Whether whatever debtors were shown under this year, are they belonging to this year or not? That is what completeness means. Valuation means what? I am not worried about accounting of debtors. I am worried about recoverability. Valuation, I focus on what? Provision for bad and doubtful debts, all that. Aging report, I will check 30 days, 60 days. This is tally. List of debtors under litigation. Compare with previous year. Identify those debtors which appear doubtful. Discuss with management. When they will be coming, ask them. See whether provisions are made at appropriate percentages considering recoverability. See the movement of bad debts, provisions, all that. See if any write-offs were there, Is it written up by proper authority or not? Check it out. Are you clear? Now, disclosures related to trade receivables. What trade receivables shall be disclosed? Trade receivables shall be disclosed as below. Trade receivable shall be disclosed as below. Undisputed trade receivable considered good. Undisputed trade receivable considered doubtful. Disputed trade receivable but considered good. Disputed trade receivable considered doubtful. Ivulla classifications kamikno. Adula thiripi inside that how much is outstanding for less than 6 months, how much is outstanding between 1 year, 6 months to 1 to 2 years, 1 to 3 years, more than 3 years. This is something similar to banking norms. Purida, able to understand? Similar information shall be given where no due date on payment is specified. Suppose some goods were sold on credit but payment due date is not fixed. Unbilled due shall be disclosed separately. So trade receivable shall be subclassified again. Secured considered good, unsecured considered good, and doubtful. Understood how it is? Here undisputed disputed classification. Here it is secured unsecured classification. In both the cases, good or doubtful you have to show separately. Understood? Good and doubtful are different. Bad is different. Bad debtors means you write off. You should not show. Debtors treated as bad means bad debts. You will not show it in the balance sheet. Understood or not? Then how to do cash and cash equivalent? Special care is necessary here. Elladke special care irukum. Purida. In this row, this point, if there is more than one cash balance, in all the cash balances wherever company is maintaining shall be verified simultaneously. Very simple. Suppose if head office is maintaining separate cash ledger, branch is maintaining separate cash ledger, petty cashier is maintaining separate cash ledger, it's okay. I can verify independently. But there is only one cash ledger. In this cash ledger, 10,50,000 rupees is there or 10 lakhs is there cash as on 31st March. Where is this 10 lakhs? I asked accountant. Sir, 7 lakhs is with the cashier, 1.5 lakh with the production manager, 1.5 lakh is with the sales person. Now, I should physically verify cash whether really there or not. Surprise check I should do. Surprise means what? I will intimate them 2 days before and then go. Surprise means what? Without intimation I should check. Now when you are doing surprise check, total balance is matching or not, you should check no. Now total balance is with 3 persons. You should check 3 persons simultaneously or one by one. Simultaneously. So send your 2 team members to those 2 persons on the same time. And now also you go here and then check surprisingly. Understood or not? Next. In audits, no, surprise check is only on the paper. Neither the client feels surprised nor the auditor. In reality. Getting it? This again you can understand. Confirmation procedure. This is regarding bank balance available with the bank. Margin money available in demat. All that. Getting it? Now how cash and cash balances shall be disclosed in the balance sheet? Balances with banks, checks on hand, cash on hand. Earmarked balances with banks. For example, dividend declared account, unpaid account, CSR unspent money, all these are earmarked balances. Balances which are held as margin money, amount held in share demat account, repatriation money, bank deposits with more than 12 months maturity, fixed deposits, they shall be disclosed separately. Then inventory. Inventory is also important aspect. Inventory, debtors is important. Compared to cash and cash equivalent, inventory, debtors, borrowings. Borrowings you see below, so many disclosures were there. Yes or no? So borrowing should be disclosed. Now borrowings point is completely important. Debtors is important. Inventory is important. Understood? Next. So we'll take small break. Okay. Mostly I think Rumba heat edukle. I mean mind. We'll take break. I know. Because this chapter I think you might have understand. Now to understand this chapter you must understand so many other things. Correct? Hey, honestly tell me how many of you have gone through this chapter already? Once, Once or twice or whatever, have you gone through or not? Understood? அப்போ என்ன படிச்சாச்சு நீங்க? Okay, fine. Now you are able to read. After this class, will you be able to read? Now will you understand? So in the next whatever I am going to cover also, I will be covering in the same way. Totally 2.5 hours will be spending on this chapter. 2.5 to 3 hours. That's a revision. Getting it? So with this, you read once again this entire book slowly, one by one point. Understand what that point convey. All typical points I am covering. Getting it? Then only move to the next. If you see, after you read each and individual point, once you summarize what is there. Summarize means what? Once again, that entire points, what is there? Okay, first I should check this, I should check this. Why you should check this? Logically analyze. Understood? Yes. So come back, take break and come back in 15 minutes. So let's continue with the discussion on audit of inventory. Like just I spoke about one of the aspect in inventory, that is regarding inventory in transit. Yes or no? Like we'll see now. So they will ask you a question regarding what is the audit procedure that you will undertake or that you will perform in order to establish existence of inventory at period end. As on 31st March, the balance sheet is showing some value of inventory. What audit procedure, what procedure you perform to get an evidence that this much inventory is existing? Very simple. First I will look at organization plan for performing inventory count at 31st March and see that the goods have been segregated. If possible, participate in inventory counting with the management. That's what SA 501 also says. Audit evidence, specific considerations for selected items. SA 501 selected 3 items. What are they? Inventory, segment information, segment litigations and claims. Here I will tell you how to read in this. Inventory, what SA 501 deals. Option A, existence and valuation. Option B, existence and condition of inventory. Option C, existence, condition and valuation of inventory. Option D, condition and valuation of inventory. C, existence, condition and only existence and condition of inventory. SA 501 deals only with regard to existence and condition, not valuation. Understood or not? This is a question asked in MCQ, case based MCQ. So this is how questions will come. You need to understand clearly. Okay, SA 501 is talking about only existence and condition. It is not nowhere talking about valuation. What SA 501 says, auditor has to attend inventory counting performed by management at year end. If attending at year end is not possible, plan some other day. Or if management is not doing inventory counting as on 31st March, plan some other day. If that is also not possible, you fix particular day and you go and visit and count physically. If inventory counting is impracticable, consider the implications on auditor's opinion. If inventory is lying with third party, get external confirmation. If you have doubt over that confirmation, arrange another auditor to go and physically count and then come and then compare with the books. Understood? This is what SA 501 regarding existence and condition of inventory. Selected item is inventory. What consideration you should check here? Existence and condition. Litigations and claims, what you need to check? Completeness of disclosures. Segment information, what you should check? Disclosures as per applicable financial reporting framework. Are you getting it? Understood? Test count. Auditor, if possible, he has to do test count. What you will do, what you will do in this test counting of inventory by auditor should include what you will do. Observe how employees are counting. Ensure that all items are tagged. Tagged means what? Tags will be there, no? And assure that there is appropriate supervision on count procedure. Observe that amounts are shown properly on the tax. Determining the tax and summary sheets are collected and reconciled. Reconcile test counts with tax summary sheets and discrepancy notice, if any, you need to discuss with client personnel. Be alert at all times, specifically cautious about empty boxes and obsolete items. They may show you warehouse, these are the goods available. You don't just count the boxes. See whether any box is empty. Perform cutoff, like last 5 to 10 days. See when the goods are actually received, when the goods are actually delivered. Check it out. And please exclude inventory belonging to third party but held by you. Suppose third party send you goods to sell you on sale or return basis. Right now goods are with you, but you have not yet given acceptance. Is it your own inventory? That should be excluded from valuation. Ensure that accounting of all stock sheets, just check the stock sheets. If there are any differences between physical stock and stock record, investigate. Suppose if the organization is using periodic inventory system, please undertake at the end of the period inventory. If the entity uses perpetual system, anytime you can take physical inventory counting. If the inventory is with third party, get a confirmation and perform analytical procedures. Compute inventory turnover ratio, perform vertical analysis like inventory to assets analysis, compare budgetary expectations with actuals, examine non-financial information like weights, measurements, all that, perform cutoff test regarding shipping documents, all that. With regard to tagged inventory, perform test for omitted transactions and test for invalid transaction. Is there any transaction which are omitted, like some tag is there but it is not recorded in books? Verify clerical and arithmetical accuracy in the inventory listing. Here, what is the audit objectives? How do you verify that only inventories belonging to the entity have been recorded and do not include inventory belonging to third party, and does not include inventories but does include inventories owned by entity lying with third party? How do you verify? So all these points verify. The entity has a valid legal ownership rights over the inventories which are held by the entity and contained in the records. Look at the purchase documents. See whether any goods are consigned. Correspondence, sales, all that you check. Determine collateral agreements if any available. Consignment deeds you check. Material purchase commitment agreements you check. Auditor shall obtain confirmation if at all inventory is with third party as per SA 501. So all that. Now you need to check regarding valuation. How auditor should verify? What auditor should verify in inventory? Regarding getting evidence regarding whether inventory has been valued properly or not. First to look at what method they are using. Weighted average, FIFO, LIFO. For raw material, what components are included as part of cost? AS2. What is the valuation like principle? Getting it? What is forming part of cost of raw material? What is forming part of cost of work in progress? What you will form part of finished goods? All that you need to check. If standard cost technique is used, what is the basis for standards? What are the elements of cost that are included in the inventory? All that cost, purchase price plus all that cost that has been incurred up to bringing the inventory to the present location, all that cost has to be added, yes or no? See the cost prices used with purchase invoices. If any damaged inventory is there, that should be given provision for that. Work in progress, how the stage of production has been arrived. Finished goods and goods held for resale. So see whether the finished goods are determined based on the normal cost, whatever is incurred or not. Ensure that inventories are valued at NRV or cost, whichever is lower, especially if the finished good is about to sell at a price less than cost, then goods must be valued at NRV. And if items are absolutely damaged, slow moving, what is the possible realizable value? Carefully examine what is the valuation of damaged inventory. For this purpose, auditor may request the client to provide inventory aging. Inventory aging means what you know? Inventory is produced, finished good, but could not be sold. It was produced but not yet sold till today. The gap is more than 180, less than 180, less than 90, less than 60, less than 30. If the inventory manufactured is very latest, it's okay. The inventory is long outstanding, obsolete, old, outstanding inventory. Create provision for that. You observe, when you're reading, observe what I'm reading exactly, valuation. That's why these points are covered. Okay, if I'm reading these points, it's about valuation. And all these points you see, they're only talking about provisions and all, which means regarding value of the item they're talking about. Confirmation from creditor, confirmation from debtor. It is talking about the ownership of the inventory, physical existence of the inventory. Understood or not? Next. And see whether disclosures of inventory has been made as per schedule 3. Inventory should be classified as raw material, work in progress, finished goods, stock in trade. And stock in trade means, remember, stock in trade means the goods which I purchased and held for trade. That's called stock in trade. Where I am a trader, I will use the word stock in trade. If I am a manufacturer, I will use the word finished goods. Able to understand? And loose tools and others. Whether goods in transit have been disclosed separately under the subhead. Which goods in transit will come, I told clearly. If the goods are in transit and the goods which are under our control only should come in our books of accounts. And what should be the mode of valuation? FIFO, LIFO, weighted average shall be stated. These are the disclosure requirements regarding inventory. They'll ask you a question. They'll ask you a question on this. Write about analytical procedure on inventory. They'll ask you only this question. Write about analytical procedure in respect of inventory. Getting it? You need to write regarding this. Read this carefully and then look at the right side carefully. What is the nexus between these two? Understand. Clear? Next is regarding fixed assets. Fixed assets. So first, how do you verify whatever assets shown in the balance sheet? Are they existing or not? How to verify? Physical verification. Existence can be confirmed only by physical verification. See whether proper supervision were there on property, plant and equipment. See the physical verification report. Look at the worksheets which are performed by entity. If all items are properly tagged, physical assets also, the fixed assets will also be having tax. In organizations where number of assets are having very high, there will be fixed asset identification number. What is it? Fixed asset identification number. To go any big temples, you will find numbers on all the fans, chairs, numbers will be there. Getting it? So that is actually called asset tag, asset identification number. Getting it? Reconcile items of PPE as physically verified with the fixed asset register maintained by entity. Verify discrepancies noted and how they were dealt in the books of accounts. Suppose shortages not in working condition or active use should be accounted as deletions in the books. Assets which are not in use or which are not active usage or obsolete, out or damaged assets, it should be deleted from the fixed assets. It should be shown under scrap. And see the movement in PPE. Whether additions to PPE has been recorded in the financials. They will ask you how to do audit of additions to property, plant and equipment. They'll ask you exclusively this question. Now, first thing you need to check is movement. Additions during the year, deletions during the year, and see the closing balances matching with the books. Check the arithmetical accuracy of movement. Tally opening balance to previous year. Whatever opening balance is there in the current year, last year it is closing balance year. Obtain the list of all additions from management. For all important additions, whether expenditure meet with PPE recognition criteria, check it out. The cost include cost incurred initially for constructing the PPE and cost incurred subsequently to bring it to the present working and condition. Verify it is valued as per AS10. And verify and ensure that items such as spare parts, standby mission, servicing equipment is also recognized as PPE only when they are held for more than one period. Means nothing but one accounting period. In relation to deletions, whenever some asset has been sold, ask the reason, what is the logic or rationale behind deletion and manner of the sale, and see whether it is properly authorization is there or not. Verify process followed for sale. Check it out. Is the sale accurately recorded? When any asset is sold, only WDV value of that asset shall be reduced from the books. Whereas in income tax block, you will reduce sale value. Remember in block 32 format. And now it is regarding valuation. What audit procedure you will take in order to check whether PPE has been properly valued. Verify that entity charged depreciation on all PPE unless it is non-depreciable. Assets that the depreciable, check the depreciation method used reflects the pattern in which the asset is used. Suppose if it is furniture or building, SLM is suggestible. Plant and machinery, always WDV is suggestible. Suppose if the mission is based on number of hours working, number of units, then number of hours method or number of units method we have to follow. So it could be straight line, value method, unit method, whatever. So the auditor should verify whether management has done impairment loss assessment. And next, how do you check whether company is having ownership, rights and obligations? Now look at the title deeds. Yes or no? Legal valid owner or not? Verify the title deeds, conveyance deed, sales deed. Insist original title deeds for all the immovable property. In case entity has immovable property as security for any borrowings, original title deeds are not available. The auditor requests the management for getting confirmation from the lender that the lender is having the top property, title deeds, equitable mortgage or registered mortgage. Verify charges register filed under ROC. You can go to MC and find what are all charges against the company. Charges list you can find. And disclosures of PPE shall be given as below. Land, buildings, plant and machinery. This is class of PPE. This is each class of PPE. So land, buildings, plant and equipment, furniture, vehicles, office equipment, others. Assets under lease shall be shown separately. Which assets? Finance leased assets only will come. Operating leased assets will not come in balance sheet. And not only that, gross carrying value, net carrying value, breakup, entire thing must be shown separately. And whenever there is any revaluation, if the change is 10% or more in the aggregate net carrying value of each PPE, that details also shall be shown. So rest all are disclosure. Suppose company has to give additional disclosures. If title deeds of immovable property were not held in the name of the company, the company shall provide details of all the property whose title deeds are not held in the name of the company in the format given below. What? Relevant line item in the balance sheet. Example, investment property. What is the property? Land and building. Gross carrying value, how much? Title deeds were held in the name of whom? Whether title holder is a promoter, director or relative of a director, promoter or employee. Who is he? Check it out. Property held from which date? Reason why it is not in the why it is not held in the name of the company. Tata Motors gave disclosure on this. Relative here means company act relative. Promoter here means promoter of the company. Where the company has revalued its PPE, whether it has been done by a registered value or not, you have to disclose in the notes. Auditor also has to check this, but company should disclose. Same way, capital work in progress, aging schedule shall be given like this. Amount which is involved in work in progress for less than 1 year. The project is in progress between 1 to 2 years, 2 to 3 years, more than 3 years. L&T Metro, CMRL company. They will show so-and-so project, L&T, some project more than 3 years work in progress. They will show like this. Total shall tally with the closing work in progress amount in the balance sheet. Suppose if the work in progress completion is overdue or has exceeded its cost compared to original plan, or the company shall disclose the following. When it has to be completed in 1 to 2 years, to be completed in 2 to 3 years, to be completed in more than 3 years, project 1, project 2, likewise you need to disclose. Intangibles, what auditor has to verify? How do you verify existence of intangibles? Patents, you will have patent certification. Copyrights, you will have copyright certification. And trademarks, you will have trademark certification. Getting it? Additions to intangible assets, see whether it is valued as per AS 26 intangibles or not. So similar, if it is more or less similar to fixed assets. If you look at PPE, it is more or less same. What should be the disclosure requirement for trademark? It should be disclosed goodwill, trademarks, software, publishing titles, mining rights, and copyrights and patents, recipes, formulas, methods. These are all applicable for different industries. Licenses, franchises, and others. Send gross gross carrying value, net carrying value, breakup, revaluation, all that shall be given. Here also aging. Capital work in progress, aging we are giving no. Here also intangibles under development, aging should also be given. Same here also, if any intangibles are not in the name of the company, that detail shall also be given. But anyhow, for intangibles, it will not come like that, not in the name of the company. It will not come like that generally. Then trade payables, I told you this is exactly similar to trade receivable. All the points of trade receivable will once again appear here. But here it will be reversed it will be recorded as a reverse direction. Trade payable is lengthy. Now, how do you verify loans and advances? How do you verify loans and advances? This is also very less the possibility. In this entire chapter, please read from ICI study material only what? You have to read the following items. You have to read the following items. Everyone please make a list. Borrowings, which is liabilities. Okay. Borrowings. What are all the things that you need to compulsorily read in this chapter in full without ignoring anything? You see, in borrowings they will ask about valuation a question. In borrowings they may ask you regarding existence. In borrowings they may ask you regarding question regarding completeness. If you write some other answer, you will not get marks. So anyway they can ask. You need to observe and then read. Then only you can write correct answer. Now, what are the things that we have? Liabilities, assets, incomes, expenses. These are the things which we are having in the items of financials. Liabilities. You just have to read. Borrowings mainly. Then you need to read share capital provisions. In company law. This is important. You need to read share capital provisions in company law. Assets. You need to compulsorily read trade receivables. Then you need to read inventory for sure, completely. You must read inventory and trade receivables completely. Then if possible, PPE alone you read. PPE. Intangibles not required. PPE related again. Existence you have to read. Completeness you have to read. Valuation you have to read. Rights and obligation. Understood? Incomes. Incomes, I think not much important thing is there, but interest income, dividend income. This question is something which is asked very frequently. Investment income. This is something which is frequently asked. Then expenditure, operating expenses, and purchases. That's it. In purchases, more importantly, analytical procedures. But anyhow, entire purchases, please read. These are the important things. At the first of this chapter, when we are starting this chapter, we discuss some 6 note points in the end. CSR, amount to be rounded off, Binami transactions, all that you have to read. That is compulsory. Understood or not? Mostly the questions were tested only from this in past, but generally also these questions only will be tempted to be tested. Remaining are not that heavily important. Okay? But remember, if you want to become perfect in this chapter, you need to properly read it, analyze it, differentiate between what is the first set and second set points. What points you should check regarding existence of PPE, what points you should check regarding existence of inventory, they both are similar. What points you should check regarding valuation of inventory, what points you should check regarding valuation of PPE, again, answer will be different. What points you should check regarding completeness of inventory, what points you should check regarding rights and obligations related to inventory, again the points are different. In order to have clarity on this, it will take 12 to 15 hours for you to understand, have a good command of this. Getting the point? If at all you are giving lesser time than that, it means you are risking. 12 to 15 hours dedicate for this chapter. You will get equal number of marks. 12 hours, 12 to 15 hours means you will get 12 out of 12 easily for this. 12 marks is minimum. So read thoroughly and compare. What is the difference between what points I verified in existence, what points I verified here? Again, no, here one mistake everyone do. Making simple notes, no. Not required. Okay. Directly read from that, summarize it many times. Many will write notes, write short notes. They spend lot of time on writing the notes. Instead of that, you can spend 3-4 times reading. That will give you much more clarity. Understood? Even for me today, whenever I read items of financials, I will get more clarity every time. Suddenly I remember, I will connect with another point. Every time when you read once, you get more connection. That too when you read only from the original material, not from the cut short notes or your running notes and all. Understood? So these are the important things that you need to compulsorily see in the items of financial statements. Next. Loans is more or less trade receivables. Loans, trade receivables mostly same. Borrowings, trade receivables, loans. They three go on similar lines. Borrowings means we need to pay. Loans means we need to receive. They both are same. Now they will ask you, what are the disclosures that shall be made in Schedule 3 if any loans which are granted to promoters, director, KMP, related parties? How much of the loan is given for repayable on demand or without specifying term? How much is given to promoter, director, KMP and related party? Amount given, percentage to the total loans. Auditor should also check these points in CARO. Correct? Now after reading these items, once again read CARO points. You see how many points you will connect with. In CARO it is talking about auditor has to report this information in the audit report. Here company has to disclose this information in the financial statements. Then provisions and contingencies. What is a contingent liability? Definition is given. First, what are obtain list of all the items where provision is made. Inspect the underlying agreement like warranty, terms, all that in respect of which provision is made. And get the workings for each provision. Obtain expert report. And underlying working for provision amount like warranty involving complex calculation. So auditor may request management to share actuarial valuation report. If at all any legal disputes were there, what is the take of the management? Is it shown as contingent or is it shown as provision? Audit evidence, especially whenever management expert is used, evaluate the competence, capability, objectivity of expert, whether expert is employed by the entity or outside party, whether expert is independent party, what is auditor's previous experience of the work of the expert. Obtain the understanding of the work of the expert, whether he has sufficient expertise to evaluate the work, what assumptions he is using, okay, what data he is using. So here they are completely focusing on expert related. If you are deciding to use management expert workings, what points you should check? That is what here. Disclosures. Long-term provision, short-term provision should be shown separately. And contingencies. Contingent liabilities and commitments to the extent not provided for means what? Where there is no provision is created. So where you are showing at contingent liability but not provision, you should show separately again here below. AS 29 you need to satisfy. Then how to do audit of sale of goods and services. First, the auditor has to obtain, before you do audit of sales, first obtain a clear understanding about the organization and from where the organization will get revenue, like type of service, products, demand for the service, major selling product, new product, a service line, are they continuing or discontinuing any product, or are they launching a new product, major customers, what are the sales terms and conditions, who are the people dealing with the sales, understand that. First understand management control in respect of sales, like whether segregation of duties are there regarding stock and sales team, who authorizes sales order, who raises the bill, when and how goods are delivered, who collects and records the amount received from customers, who ensure risk and rewards are transferred to customer, how the sales were recognized in the system. They may ask you only this question. An auditor need to obtain an understanding of internal control in respect of sales process. Give few examples. They'll ask you, give few examples. You need to write these points. Getting it? 3 to 4 marks question they may ask. Now, an auditor shall test the controls which entity has set up for sales cycle to determine how strong and reliable they are. If they are strong and operating effectively, the auditor can reduce the substantive testing. What are the examples of controls? Pre-numbered sales invoices, authority for approval of orders, execution of sales order, customer purchase order authorization over certain limit, authorization over receivables write off. These are all controls, additional controls. Then auditor, once you understand the controls, then you need to apply test of details, no? So select a random sample of transaction, examine the related purchase order, invoice, customer statement to ensure that control being tested is a serially numbered invoice or not. So you will see whether serial number is there, amount is there, all that. The auditor shall ensure that all serial numbers in a section are accounted for and none are missing. How we will see, no? We will take sales register. There are totally 1500 items were there, invoices. We will see physical invoice number. What is the year first invoice number? What is the last invoice number? If the number is 1500, there 1500, everything is fine. Suppose the numbers are 1550. Whereas in the books sales register only 1500 items were there in the register. 50 invoices, what happened? Cancelled invoices. Again, cancelled sale is different from sales written. Sale written is different. Cancelled sale is different. Cancelled sale means what? Before risk and reward is transferred, before goods are delivered, customer cancelled the order. That is cancelled sale. Written means what? We deliver the goods and customer return. Now, substantive analytical procedure will consist of sales trend analysis, comparison with previous year, category wise sales analysis, all that. They will ask you once again here. Write about analytical procedure in respect of sales. You need to write this answer. Now, the below table summarizes what audit procedures we generally apply. Whether recorded sales represent goods shipped or not means we are testing occurrence assertion. Now, company showing revenue from operations some amount. Is that amount really sold or not? Is it occurred or not? What points will check? Our objective is what? Ensure that sales is not overstated. What points will check? Sales is not overstated means what? If something is 10 crore, really 10 crore sale is there. Actual sale is 8 crore, company showing 10 crore. That should not be there. How to check that the sales are not overstated? Whether a single invoice is recorded twice or cancelled sale invoice could also be recorded. How do we check this? We compare register with a number. Because sales number cannot be manipulated because it is pre-printed invoice number. It is computer generated number. Year beginning, the number started at 1100. Right now the number is at 2650. Means 1550 numbers were received. So how many we have totally? 1550. Now I will see in the ledger how many were accounted sales. Total credits in the sales account. The total number of credits on various dates is 1600 or 1500 were there. What happened to 50? I will have to question. Test check few invoices with entries in the sales journal. Obtain confirmation from customer regarding genuineness of the transaction. Any fictitious customer, whether sale have been recorded or not, check it out. How do we identify fictitious customer? We can't identify basically. We will take who are all our customers. See again, for manufacturer, customers are wholesalers. For a retailer, customers are consumers. Correct? A retailer, it is very difficult to identify consumers. But for a manufacturer, who are all customers, we can identify. External confirmation will be enough. Depending upon whom. Are you auditing a manufacturer or are you auditing a retailer? Depends upon that, you need to apply that procedure. For a manufacturer, I will apply external confirmation to know about existence of a customer. But for a retailer, external confirmation is not possible. Understood? Only thing we can check is whether it is received or not. Whether any shipment was done without consent or agreement from the customer, without purchase order, you can't ship the goods. If you ship the goods without purchase order, it's a loss for the organization. Next. Look at the invoice sequence. Review journal entries, especially unusual items. Calculate ratios. Check sales written with sales invoice, stock register, credit note, everything. And how do you verify? All the sales made during the year were completely accounted. This is to identify understatement. This is to identify understatement. Whether all sales, whatever sales accounted, are they really occurred? This is to identify overstatement. Whether all sales occurred during the year, are they recorded? This is to identify understatement. Understand? Completeness assertion is focusing mainly on understatement of sales. Occurrence assertion is mainly focusing on overstatement of sales. Suppose 10,000 crore turnover is there. Is it really occurred? What does it mean? Is it really occurred? That may not be there. In reality, less than that might be there. This might be overstated. I want to check whether it is really occurred. All the transactions accounted. Here, what does it mean? There might be some unrecorded. Unrecorded means what? What you shown is less than what it is. Means understatement. Understood. They may ask you like this. Is it understatement objective or overstatement objective? My auditor is following this procedure. This procedure will detect what? Overstatement or understatement. MCQs they will ask you, case-based MCQs. Now we will see at what value the sale is booked. Generally sale will be booked at gross invoice value minus GST. And any freight collected may be booked separately. Getting it? So gross invoice value minus GST minus freight outward, which is collected from customer. So we will exclude it and then record only revenue from operation. See whether AS9 recognition criteria is satisfied or not. We will check AS9. And especially if it is export sales, AS11 also we will see. Now we need to check the rate at which sale is effected. Is the rate authorized or not? Discounts also we should check. Now what should be the disclosure? Revenue from operations, you should disclose sale of products how much, services how much, other operating revenue how much. Trade discounts and all has to be disclosed. Whether transactions with related parties are disclosed in the notes to accounts or not, you need to see. Now other income, this is important point. How do you audit interest income? It is recognized on time proportion basis. Auditor has to see whether based on the fixed deposit receipt, interest is accounted correctly or not. Dividends, you will receive only when the other company declared, only then it should be recognized. See, entity right to receive is established. See, economic benefits, for sure dividend will be received or not. See, dividend can be measured reliably. Obviously, what they will put some rate of dividend, no? We can measure it. Same way, how do you verify gain or loss or, profit or loss on sale of investment? So it is recorded as other income. So what other income consists of? Interest income, dividend income, sale or profit on sale of investments. Now, how to do audit of other incomes? For interest income, first get list of fixed deposits. In that you will find rate of interest. You apply arithmetical. You calculate once the interest calculation. How do you calculate? Multiplying deposit amount with the rate of interest into number of days. Simple, no? For deposits outstanding as at balance sheet date, get direct confirmation. Obtain interest certificate from banker also. Interest confirmation banker will give. Not only balance confirmation, interest confirmation they will give. Also see form TDS. 26A there is a form. Nothing but form 16A will be there. Getting it? Whenever I was given interest, bank deducted TDS, no? They will give me acknowledgement that they paid this much interest and this much TDS is deducted. See, it is matching with the amount recognized in the books. Dividends also. You see whether the same are recognized, especially whenever there is a sale of investment, X dividend, cum dividend like that. See who is receiving the dividend, check it out. And disclosures. Interest income, dividend income, gain or profit on sale of investments, other non-operating income. Non-operating income means what? Other than business related income. Next, undisclosed income. This point in CARO newly added. Company shall also disclose. If suppose any income tax raid conducted in the company and some amount was discovered during the raid, that is an income but not accounted in the books of accounts of the company. If this income belongs to past period, company shall account it in the current period as a prior period item. Auditor has to check whether this has been done or not and report it in CARO. Management should disclose in financial statements. Schedule 3 was amended like anything in 2020-21 time. Correspondingly, CARO amendments were also given. Are you clear? These were all amendments were made in Schedule 3, 2020. Then how to do audit of purchases? This is again similar to sales. Able to understand, like all of you? How to verify purchases are occurred? How to verify purchases are occurred? Whatever purchases, recorded purchases, are they actually received? Ensure that purchases are not understated or overstated by performing following. Is there any fictitious vendor? Is there any fictitious invoice? Whether goods were received at the factory gate, whether there exists an entry at the security gate. Inward register, we call it as what? Goods inward register. Security keeper, gatekeeper will maintain, storekeeper will maintain stock record. Whether quality inspection is done, GRN is prepared, purchase invoice and purchase invoice, GRN, purchase order, three-way matching we call it as. What we call it as? Three-way matching. Purchase invoice, GRN, only these two if you are doing two-way matching. Whether stock record has been updated by store personnel. Purchase invoice should be original copy, only that you should check. Purchase invoice should have been booked, only risk reward is transferred to me. Purchase invoice should be in the name of our organization. However, in case of different branches, maybe branch address might be given. Input tax component should be booked in input tax, GST input. In case of purchases made from related party, see whether board of directors approval, audit committee approval is there or not. Auditor should review whether purchases should be capitalized. Is there any capital purchases? It should be capitalized, not recorded in purchases account. How do you verify whether all purchases were accounted during the year? Do cut off. Take purchases that are recorded in the last 1 week of the March. See whether goods risk and reward is received in this year or not. Also take purchases that were made in the April first week when the goods were actually received. If the goods were received on or before 31st March but recorded as a purchase of April month, you should question the management. You should modify. See, it's not invoice date. It's not when the amount paid. In our accounting, when the risk is received, when the risk is given. That is the deciding criteria for recording sale or purchase. In GST, time of supply may be based on date of invoice, date of payment, date of delivery, whatever. Getting it? But under accounting, it is ultimately substance over form. Getting it? This question was asked earlier. What analytical procedures regarding purchases auditor will do regarding purchase quantity and price? We do stock consumption analysis, composition analysis. Composition means what? What the stock will compose of: material A, material B, material C, raw material, work in progress, finished good. Composition analysis. Ratios we will apply. This question is important, many times asked. Next, how to do audit of employee benefit expenses. Now there is a question on this. This itself has been asked as a question. Like November 2019 or November 2020 or January 2021. Somewhere it was asked. May 2020 exam was not conducted. Auditor need to obtain a clear understanding about organization and its hiring process. Appraisal means promotion, increment and retirement process. What you will check? Only this question was asked. So here entire these 3 points you have to write. So employee recorded employee benefit were actually incurred. Like we are showing employee benefit expenses 100 crore, salary is paid. First understand how entities process for capturing employee attendance, biometric, facial recognition, what? Manual attendance. There is always a risk that an entity could record expense for fictitious employee. We also call them as ghost employees, dummy employees. To address this risk, auditor will choose to meet employees in person, take a sample of employees as per the register, go and meet them, check Aadhaar card, check their employment contract, are they physically existing, check it out. First get a list of employees as at 31st March along with monthly movement for new hires, leavers and continuing employees. Take sample of new hires, look at appointment letter. First month salary credited only from the date of joining till that month end. Same way, take who have resigned from employees. For them, we will do final settlement, full and final settlement, gratuity settlement, PF settlement and all will happen for them. Check it out. Obtain monthly salary register for all 12 months. This is also called as payroll register. Check whether provident fund, ESI, bonus, everything has been collected and accounted properly. Verify provision is made for gratuity and all. In case of PF, compile what is the rate of PF to the basic wage. Basic, yes or no, basic salary only, PF we will charge 12%. Like that. So all that. And perform analytical procedures. How company shall disclose how much is the employee benefit in the form of salary and wages, how much is contribution to welfare fund, how much is contribution for welfare expenses, means tea, coffee, all this, hospitalization expenses, employee, all that. Then how to do audit of depreciation and amortization. Fixed assets, if you understand, this is easy to understand. PPE, if you understand thoroughly, this is easy to understand. You didn't imagine, this much is there in items of financials. Huh? Which books you are following? Them, super. Okay. Then you are following ICA book. How come you can't imagine this much? Auditing in law, no. Each and every word you study, right? Same way auditing should be studied. Now you understood, no? It is not something different. It is same like law. Every word, every sentence has a meaning, has an impact. Correct? Huh? See, that's what, no. If you read this and then give you translate the meaning, you don't understand anything. If that is not happened, what is the consequence you should understand? That's understanding. Now tell me, how do you verify depreciation? First of all, take list of fixed assets. Sir, no? Look at when the asset was installed if it is a new asset. Look at the opening balance. And look at the rate of depreciation. Is it matching with Companies Act depreciation schedule 2 or some rate? Matching or not, you should check. Income tax depreciation is not there in this books. It is separate again. That is separate. It is not relevant for books of accounts. See, depreciation, arithmetical accuracy, calculation correctly made or not. See, while calculating depreciation, salvage value has been reduced for calculating depreciation. Yes or no? If it is WDV method, only on the closing WDV of the last year, depreciation shall be calculated. See, if any asset is revalued, only after revaluation, depreciation has been calculated. Correct or not? All of you. And if there is any change in accounting estimate, useful life, see that has been taken into consideration or not. If any method of depreciation has been changed, whether it has been disclosed properly or not. Correct? All that points came almost. Look at fixed asset register and see the fixed asset register is recording all the depreciation aspects or not. All that is there. You will see all these points in real life audit for sure. Only when you go there and you see all this. See, tomorrow when you go for audit, how you should audit, no? Don't ask, Anna, eppadi pannanum, avanukku theriyadu. Because I am experienced, no? Yes or no? He also doesn't know. I think he knows very well, but now I know that he doesn't know. Okay. So first you have seen this audit, no? What is audit? Stat audit means what's your objective? You have to give opinion. You have to give opinion on the financials, whether they are right or wrong. Take balance sheet. Right side, the top, assets were there. Below, liabilities were there. Or liabilities first and assets next. Whatever the approach they can follow. Assets, fixed assets were there. What points you will check? Logically you do audit. So what are the fixed assets? Plant and machinery. You want. When and all these plant and machineries were purchased. Invoices you want. What is the amount? How much is capitalized here? And how much is the depreciation? What method they used? Why they used that method? Is the plant and machinery, suppose they followed SLM. Is it really SLM? Is SLM suitable? Check it out. And in this way you should do audit. Then you should take the actual bills and vouch whether the amounts are correctly made or not. Yes or no? Then remember, in CARO, what you should report about fixed assets. Check it out, your reporting requirements. Always, whenever you are verifying some item, always cross-check with your reporting requirement. The way you do audit should change. Getting it? Going there, waiting for lunch time, getting it? And verifying bills, ticking something. Enna pannite, audit pannite. Adula enna pannite? Audit da pannite. This is what they do, yes or no? Actually, that culture should evolve. In the offices, the culture should evolve. Like principal should make you sit and explain what exactly happens. Why we are doing this, what exactly the scope of work, all that you should. How audit meetings will happen, once you get an audit. In some audit firms, in big, especially big firms and above medium firms, it happens formally, to some extent good. In small and medium firms, you will be called. In the point audit பண்ணிட்டு வாப்பான்னு சொல்றேன். This is what they do. என்ன பண்ணணும்? போப்பா நீவே கத்திக்கிறே அப்படி சொல்றேன். What? I don't understand anything. Correct? We don't understand anything. This is what happened to me. போப்பா ஆடிட் பண்ணுப்பா. அப்போ எனக்கு ஆடிட்னா என்ன தெரியும்? ஸ்பெல்லிங் தவிர என்ன தெரியும் எங்களுக்கு? For you at least, we are there to give you what exactly happens in audit. But for us, the person who came to teach us audit doesn't know audit first of all. What he knows is only reading everything and explaining. And giving, dictating notes and take notes. அவ்வளவுதான். இது மட்டும் தான் தெரியும் எங்களுக்கு. வேற எதுவுமே புரியாது, எதுவுமே தெரியாது. சொன்னலே, that time the papers were easy, so we qualified easily. Okay, though it took little effort. Now papers are tough. And you're getting better resources also. Same way. Both are offset, both are compensated. Then how to do audit of other expenses like power, fuel, repairs, all that. Now they asked this sentence exactly as a question. While the auditor may choose to analyze monthly trends for expenses like rent, power, fuel, the auditor generally prefer to vouch other expenses. What points he will consider? Whether expenditure belongs to current period, whether it is revenue and not capital, supporting documents we will check, whether expenditure is classified under correct expend head, whether expenditure was authorized, whether it is related to business but not personal. What is this question? Generally, this is again linked with the substantive procedure, analytical procedure. Generally, when controls are strong, you can just perform analytical procedure and then leave. But these expenses, generally you can apply analytical procedure. Okay, if it is in line with the trend, you will leave it. What else you can do for these expenses? They are asking. What I will do? I will take supporting documents, bills I will see. I will vouch them. Yes or no? I will see is it revenue expenditure or capital expenditure. I will see it is business expenditure or other expenditure. They debited it under repairs. Is it really repair expenditure or some other expenditure? Correct head classification on it. These are all the points I will check apart from analytical points. Understood? So how to do audit of rent expenditure? Verify whether all the 12 months rent is recorded. Only rent amount should be debited to P&L. Deposit given, advance given shall not be debited to P&L. See the rental agreement is in the name of the company. Power and fuel expenses. Take month-wise schedule. If any unusual consumption is there in 1 month, why? What happened? Check it out. Whether corresponding increase in production happened or not. Suppose in 1 month power and fuel is so much. Management told, no sir, that time production was very high. You see production record, really production was high. Why production was high? We received a big order. Which means next month sale should be there, no. You see how the chain will go. So, verify expenses recorded for all the 12 months. Only units consumed. Analyze monthly power units consumed by linking to finished goods and investigate. You take bills, power bills and see how many units consumed, what is the rate, apply. Nowadays you need not because it's automatic, no. Power bills and all automated, no. They automatically come. You cannot manipulate the rates and all. And how to verify legal and professional expenses? Only this they can ask for 3 marks. How to verify traveling, repair, maintenance, printing expenditure? That alone can be asked for 3 marks. That's it. I gave you a glimpse idea. Getting it? Now what is your duty? You have to go through each and every line thoroughly. Understand exactly why you have to do it. It's not what, it's why. That is the question you should make yourself. Getting it? That's it.